taken to local hospitals. Meantime, Southwest Airlines plan to cut 15% of its corporate workforce, or about 1,700 jobs. It's the first mass layoff in the airline's 53-year history. Southwest has been facing a lot of pressure to rein in expenses, including from activist investor Elliott Management. And the Wall Street Journal reporting that Elon Musk's Doge team is now seeking access to data systems within the IRS that house personal taxpayer information. The report saying that access hasn't been granted as of yesterday morning, but is considered an urgent goal by the Doge team. Meantime, take a look at the futures right now. Some green on the screen, 46 points higher on the Dow. NASDAQ looking to power higher, about 87 points higher. The S&P 500 up about 18 points. I want to get straight over to Frank Holland. Let's go look at this morning's pre-market numbers. Good morning to you, Frank.
Good morning to you, Andrew. We're going to start off with Chinese tech stocks. Taking a look, getting a boost from a rare meeting between the Chinese president and some of the biggest tech companies in China. The CEOs of China media giant Tencent, tech competitor BYD, and perhaps most notably Alibaba CEO Jack Ma. All part of the meeting designed to give a boost to the Chinese tech sector. You can see shares of Alibaba, they are up just over 3% right now. Also notably, the CEOs of JD.com and Baidu were not present at that meeting. You can see those shares under some pressure this morning. Both JD.com and Baidu both lower in the pre-market, at least the U.S. listed shares. Investors, they seem to be responding to this economic shift overall, what it could mean for the Chinese tech sector. Take a look here. You see the KWEB ETF and also the CQQQ ETF, both moving higher in the pre-market, both up just over 1%. All right, moving on to another mover this morning. We're talking about Constellation Brands. You see those shares are up just about 9%. Now, this move to the upside is for the maker of Modelo and Corona beer, is after Warren Buffett's Berkshire Hathaway. It revealed a stake in the beer maker. It bought more than 5.5 million shares in Constellation in Q4, opening up a new position, creating a position of about $1.25 billion. Also, you have to look here. You can see over here, big move to the downside after earnings on January 2nd. Shares are falling double digits since then, since Constellation Brands actually lowered its guidance for beer sales. The stake by Warren Buffett and Berkshire Hathaway seen as a sign of confidence in the beer maker, despite a lot of perceived tariff risk. And last but certainly not least, taking a look at Meta shares on a 20-day win streak, gaining more than 20% over that time. This morning, however, we see Meta shares pulling back about 0.25%, still gaining more than 20%, more than 25% over that win streak. The company also announcing a major investment in robotics, and according to the company, those robotics will be focused on AI-powered humanoid robots that can help with physical work. It's also forming a new unit in its Reality Labs division. According to other reports, Meta's also exploring watches and earbuds with cameras. Back over to you.
Frank, thank you. Watches and earbuds. Which one are you going to buy?
I'll have both. I'm going to get that Tom Brady watch, which I thought was plastic. I thought it was a Casio. It was something that was
so crazy looking.
It was yellow.
Yeah. Sapphires or something.
Coming up, a health check on the bull market. Strategist Ed Yardeni sees the S&P 500 at 7,000 by year end. We'll get his latest thoughts next. Squawk Box coming right back.
I don't like old sneaky snake.
There's the futures this morning. Upward pressure to start the session. Nothing great, but not bad on the NASDAQ, which closed at a new high on Friday. For more on the markets, let's bring in Ed Yardeni, president of Yardeni Research. Ed, good to see you this morning, and you've been steadfast. I haven't seen you really waffle at all. You've acknowledged we may see some choppiness. And I've seen some funny things. You know, some of the strategists that come on the show. I think we had one on recently that was just talking about the chaos, and that there was tariffs, and Trump inherited this great economy, and now there's chaos, and we're less than a point off an all-time high and most of the averages, and at all. So it's almost as if now it could happen any day. Valuations are stretched. Inflation is not put to bed. But why are you so sanguine about reaching new heights this year to even 7,000, which would be a pretty good move? What is that about? What's that, between 15 and 20%?
Sure. Well, look, it's really all about the resilience of the economy. It just demonstrated over the past 3 years that it could withstand a dramatic tightening of monetary policy. The federal funds rate went from 0 to 5.25%, 5.5%, and just about everybody thought that would cause a recession. I didn't.
You're an idiot. I'll tell you that right now, sir.
The past 3 years, that this economy really is resilient, and I think it can take some chaos.
If you did not know, it's always been resilient. As long as we keep printing that money. And you know it.
And then we'll sit down with them after postponing it for 30 days.
Who is this idiot anyway?
It's important. I think deregulation is an ongoing phenomenon. Look, at the end of the day, it's really all about the resilience of the economy, the strength of the economy, which means that earnings are going to continue to be strong, and that's what I think is driving the market. I think that's what's holding.
Because of high inflation, you dicklick.
That's what we need, because we know that stretched multiples in the past, in and of themselves, don't cause the market to come down. So
Correct.
I don't know whether we get any expansion. We'd like some rate cuts to get multiple expansion. But even if we're stuck here, and if the Fed does nothing this year, there's no reason to think necessarily that something pops in terms of valuation. So if you're right about economic conditions and earnings, you could get your 15% on the S&P purely from business doing well.
Absolutely, and I think productivity has been making a comeback. I think it continues to do so. And I think the technology revolution, the digital revolution, which really started with IBM mainframes in the 1950s and now has evolved to AI technologies. Look, some of them are silly and some of them are not going to suffer from hallucinations. But I think what we're starting to see is a lot of anecdotal evidence that AI technologies, digital technologies have advanced to the point where they make humanoid robotics and self-driving cars a reality here, not years from now, but this year, next year. So I think all that put that all together, and you get the market looking solidly forward.
we were talking about this journal piece about signs of froth, and maybe some of it is in the retail investors.
Yeah.
I don't know who is the consensus or the people I want to bet against. Sometimes I think it's the pros. The pros have no idea. Sometimes I think it's good to bet against them.
Yes.
Sometimes I think
Joe's right.
poor retail investors are, out at the bottom, totally in it at the top. So
No.
I don't know whether to use this as a contrarian sign or not. Do you see froth or just the market being at a level that isn't justified by the underlying fundamentals?
Well, I think it goes back to what you said about valuation multiples. There is this reversion to the mean factor where a lot of people believe that once you get well above the mean, and everybody seems to take the average of history, and the average of history says the mean forward PE should be around 15. And now for the Magnificent Seven, it's more like 30. I think it's actually down a couple of points from there, from maybe 28. And then for the rest of the market, the S&P 493, it's more like 19. Yeah, sure, those are stretched relative to 15. But the key point on valuation is, as you said, is how long is this expansion going to last? And the past 3 years demonstrate the resilience of the economy, suggesting that there may not be a recession between now and the end of the decade. It may turn out to be the roaring 20.
Sir, did you not forget about the government shutdown for almost 2 years? The government shut the economy down. Did you forget about that? There's no resilience about it.
Earnings that are delivered are great.
Have we ever had a 6, 7, 8 year period without a recession? That would be unprecedented. When was the last recession?
The 1990s immediately come to mind. I mean, we had a long period. We had a very long expansion there, and there are a lot of similarities. I've been making the similarities between now and the 1920s. I've been calling it the roaring 2020s, but there are similarities to the 1990s, the technology revolution, and I think we may actually get some fiscal discipline, believe it or not, out of all this chaos. Very reminiscent of what happened with Clinton. Clinton realized that the bond vigilantes limited what he could do. And I think Scott Bessent has been telling Trump that forget about the Fed, look at the bond market. We need to convince the bond market that our policies are going to work.
That's an interesting point. You can't just jawbone.
Right, and I'm going to use. Did you hear? I'm going to use the S&P 493, not the S&P 500, because that's at 19 times earnings. That makes me feel a lot better. And then the S&P 7, the MAGA 7 at 30. So the 30 skews the whole S&P up to what? Ed, 22? Is that the?
Yeah, it's 22, and that is stretched.
But only 19.
Yeah,
on 493.
Yeah, I mean, it is reminiscent of the tech bubble when we got up to 25 on the S&P 500. And by the way, technology back then had a 50 multiple.
And it's transformative. I mean, if you, I had no idea. I mean, I wasn't crewman. I didn't think the internet would be like a fax machine. But I had no idea what the internet. I mean, it is. Just what we take for granted.
I'm using it all the time. I use Copilot as a research assistant, and we're looking at other applications.
Yeah, your old research assistant is like sleeping in a box somewhere. I mean, that's bad. That's what's going on, though. So you've got a virtual assistant now, Ed?
Well, I'm just using Copilot. Microsoft and its technology has something called Copilot, and Copilot, you just ask it a question. It gives you the answer, and it gives you references, by the way, so you can double check that it's not hallucinating.
You're a one-man shop now. You don't need anybody or anyone anymore, do you?
I need my team. I need my team.
Oh, you do have a team.
And by the way, the team uses AI
too.
So they're way smarter too.
Okay. All right, Ed Giardini.
Thank you.
Thank you. 7,000 on the S&P 500.
Coming up, China's President Xi in a rare meeting with some business leaders, including several Chinese tech giants, what it means for AI and tech competition with the U.S. We're going to discuss it. And later, Palantir co-founder and CEO Alex Karp is going to join us with a warning for Silicon Valley He's going to be with us.
All right,
for
Alex.
Over an hour. Do not go anywhere.
Whoa.
He's never one to hold his tongue.
No, he doesn't. He's very good now. He used to be a shitty CEO. We made it to the 120 mark too last week. We can go higher. We can go higher. Amazing grace. Made it to the 120 mark. Whoa. Do I hear an echo? Hallelujah. Earnings on the 10th. What the heck? I need earnings on the 17th. Time to delete. Oops. Delete earnings on the 10th. Delete earnings on the 25th. Delete earnings. Delete earnings on the 27th. Delete delete earnings on the 13th. La 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 la. The 17th. Okay. Hike. Walmart. And we'll get riveted.
Restrictions apply.
No restrictions apply. Becky, what do you look like today? Show me.
Welcome back to Squawk Box. China's President Xi
Oh,
meeting with some of
God.
the biggest names in the country's tech sector, including Alibaba's co-founder Jack Ma and the CEO of
No, Jack Ma not dead yet?
BYD, I should mention, DeepSeek, and others. From
Where's
the
he at?
tech race and AI between the U.S. and China, want to bring in Michelle Gaida, CEO of Purdue University's Pratchett Institute for Tech Diplomacy. She served as Assistant
China's
Secretary
back
of
in
State
business.
for Global Public Affairs in the first Trump administration. I want to thank you for joining us this morning. First of all, before we get into any of it, were you surprised that Jack Ma was involved in all this?
Yeah.
Not surprised. I think
Oh.
we were all really shocked when he disappeared for, let's say, the better part of 4 years, almost 5 years. But to see him reemerge now, not as surprising, because we know that General Secretary Xi
alive.
Jinping has big ambitions when it comes to high tech, that he wants to do something to help bolster his economy, and then also signal geopolitically that they are here to compete and they're here to win and lead in emerging technology. So not a surprise, but an important reminder that the CCP, the Chinese Communist Party, is supreme and exists to serve itself. So this is not pro-private sector. This is not how can Xi Jinping help unleash what they're doing. This is, if you're Jack Ma, if you're the DeepSeek CEO, it's ask not what Xi
Jack Ma.
Jinping can do for you, but what you can do for Xi Jinping.
Where do you think the U.S. OpenAI and our efforts are as it relates to China? Meaning, who do you think really is leading in all of this, given some of the big questions about the success of DeepSeek? Obviously, there are also questions about how much of what they've done was stolen from the United States.
Well, the U.S. private sector is
No,
leading.
you're
has
really a
been
tough
leading, I
guy,
think, under the current administration, we've
Soderson. You're a
seen
punk.
a renewed focus on making sure
For
that the
that, I don't
private
have to go
sector
do
is
workout.
unleashed, that we are pro-innovation, innovation first, regulation second. And so I think the United States has made enormous strides with what OpenAI is doing in ChatGPT and AI, and what we're doing in a number of other technologies. But let's be clear that China is here to surpass us and to use their high tech and their emerging technologies, whether or not they engineered it themselves or in most cases stole some of our own intellectual property in order to set global standards and really set the values, the authoritarian values that they
Michelle,
hold dear to define
Do you
technology.
believe, when you look at a DeepSeek or even some of the other models that have come out even the last week, do you think they have access to NVIDIA chips that they are not supposed to have access to? Or
Don't you shut
do you
up.
believe that they actually are innovating in a way to make their AI more efficient, meaning that they don't actually need as fast a chip?
It's
Just
probably
shut
a
your
combination of
mouth.
both. We know that they get their hands on some advanced chips from NVIDIA, even though their export controls are ways for them to get it by bypassing through some other countries. So likely they have some advanced chips. But look, Chinese are really good at engineering efficiently. We saw this way back in the day with Bell Labs when they invented the first digital switch. It was a big revelation. Only months later did China come out with their own digital switch that was much more efficient and cost a lot less. So we've seen this before. And so the imperative for the United States is to keep innovating, to keep advancing our own enterprise so that we are leading and setting the global standards for these technologies before
but
China.
Is it engineering or reverse engineering, Michelle? It's new engineering or is it stealing or some of both?
I think it's a little bit of both. We know, and any business leader will tell you, that China has made a practice out of stealing intellectual property. They, in fact, will tell it to your face. It's just how they do business. And so they take intellectual property from our most advanced tech companies, and then they engineer it
That's
to
Bill
become more
Clinton.
efficient. It's what they've been doing for decades. And so we have to be really smart about our own export controls, whether it's NVIDIA chips or more advanced technologies.
Bill
as we
Clinton, he'll
develop
tell
them.
you.
And we also have to make sure that we are leading with our own innovation so that we are getting there faster, smarter, and better, and working with our allies, by the way, in order to lead in these technologies.
And so, do you believe that we should be preventing these chips from getting to China? I mean, there's an argument to be made by some,
God.
I'm not advancing it myself, that, you know what, give them the chips. That if you don't give them the chips, that they're actually going to get even smarter about getting more efficient.
We should absolutely be sure that we're not giving them our most advanced chips and our most advanced technology. They have a program called Military Civil Fusion, and that simply means there is no separation between consumer technologies and what they use for
This
their
is the arrogance of
technology. Any
CNBC.
chip that we give them is going to give them a faster, more competitive advantage to fuel their military and other critical technologies that threaten the security of the United States. So the more that we can be sure to slow that down, at least not give our technology to those who are dedicated to our demise, the more secure we will be.
Let's just real quick talk about the balance between innovation on one end, and you were talking about regulation on the other, and I think you were suggesting we need to be put on the pedal on the innovation side, and at least for now, I don't want to put words in your mouth, disregard the regulation side. I'm curious how you think about that balance, only because there are folks like the CEOs, by the way, of OpenAI, also of Anthropic and some of the other big AI companies in the United States that say, you know what? Especially for some of the open source stuff, it gets scary really quickly if you don't have some guardrails on things.
Yeah, it's innovation first, regulation second, not no regulation. And I think that's where the United States is headed right now. We see what happens when you take a regulation first approach. You just have to look no farther than Europe and their own self-assessment with the Draghi report that came out a few months ago, that they are devastatingly behind in terms of their tech competitiveness. It's going to take $800 billion a year to try to make up for it. That's twice the percentage of GDP they spent to recover from World War II and the Marshall Plan. So leading with regulation is a guarantee for failure. Leading with innovation, with light touch regulation, is a smart approach, and that's where the United States is headed.
Michelle, I want to thank you for joining us this morning.
Thank you.
And coming up, Elon Musk releasing the latest version of Grok. And you're going to test this out for me, right?
Yep.
When will you have
I'll have results by tomorrow morning.
by tomorrow morning?
There's a tease.
Okay, more on that next. And as we head to break, check out the shares of Tesla gaining some ground this morning. Still, though, down about 11% year to date, but up more than 60% in the last 6 months. Squawk Box coming right back.
Yes. Start bashing Tesla. The worst channel out there. So I'm going to go work out. We're expecting 14 inches of snow. We haven't got any yet. I mean, I went to Walmart last night. The place was packed. I went to go get me some melatonin. People are stupid. I'm watching people, man. All these little open little aisles to go into. It's all mostly self-checkout. You have people in there just buying tons of whatever. And then you have people just going in and getting knickknacks and a few things that they need in case we do get snowed in. Always right before a storm, that place is packed. I think I had to wait 35 people, I counted in line, before you get to the register. 35. I mean, the guy in front of us, and he had this other guy that looked like he was a homeless dude pointing people out. Hey, go there, you know. Because we were all in kind of like a hurry. I just had one item. The guy in front of me had, you know, a little bit, and the one in front of him had just a couple of items, and then you got people in there with 2 shopping carts full of shit. And they'd stand in line for at least half hour at the register, and we'd get in there and we'd be in and out within a minute and a half. It was kind of funny. I mean, I just went along with it and cracking melatonin jokes. Because I've never tried the stuff. I wanted to try it out. So I picked the wrong day to go buy one item.
Elon Musk's XAI released its latest artificial intelligence model, Grok 3.
Whoa, Becky.
At a demonstration
Yummy.
streamed on X, Musk said that they believe Grok 3 is an order of magnitude more capable than Grok 2 in a very short period of time. The XAI team claimed that the early iteration of Grok had been given better ratings than competitors on Chatbot Arena. That's a crowdsourced website that pits different AI models against each other in blind tests. Grok 3 will be rolled out to Premium X subscribers today and will be accessible through a separate subscription for the web and app versions. When we come back, corporate America dealing with President Trump's policies, tariffs, executives, orders, and big changes in the government. Up next, we'll talk about how CEOs are navigating the current environment. And we'll talk to Tennessee Republican Senator Bill Hagerty about getting a budget deal done on Capitol Hill. Squawk Box will be right back.
So I'm going to go work out, and I'll be right back. It won't take long. I'm going to start a new regimen starting today. I got to get my body in shape for the beach. I'll be planning on a vacation soon. Kind of got what I want to do, but I'm not for sure yet. I think the best vacation I ever had was Jamaica. Stormy Daniels messaged me finally. Took her a month.
And restrictions apply.
All right, welcome back, everybody. Let's dig into the ways CEOs are navigating the Trump administration. Everything from analyzing a flood of executive orders to preparing their supply chains for the impact of potential tariffs and counter tariffs. Joining us right now is Mark Weinberger. He's former CEO and chairman of EY. And Mark, you've been doing this for a long time, working with lots of CEOs around the globe, also working with at least 4 different administrations, including the first Trump administration, where you did serve on one of the task force. Why don't you just talk about what you're hearing from CEOs you talk to right now?
Sure, Becky. Great to see you. Thanks. Listen, generally the business community is very happy around the way the business environment's going and the economy. Reduced regulations, more efficient government, more transactions opening up because of regulatory blockage not being there, energy prices going down and permitting going up. So lots of real positives, I think, behind companies and the direction of travel. But when you get off the trend lines and focus on the headlines, if you do, there's a significant uncertainty tax. And that uncertainty tax does affect the way that businesses make longer-term decisions. And with any major restructuring like we're seeing now in the economy or in a company, that creates some friction. And so I think a CEO is looking at what they can control, they're looking what they have to influence, and they're looking what they can't control and having a plan for each one of them.
And how do those buckets break down? What would you put in the things you can control, things you can't, and things to be aware of?
Well, the things you can control are your business operations, your employees, making sure you're communicating to them, telling them about the uncertainty, doing vast scenario planning based on how your supply chains may or may not change. If various executive orders do come to fruition, if tariffs do come into place, AI transformation, all that's what you control. What you influence is working with the government, those that are coming into office and those who are already there. If you're running a pharma company, you still have to get FDA approval for all of your drugs and your testing. You want to make sure that process is still moving. So you're trying to influence the government where you can. And then what you don't know, you have to be involved in your business groups, the business roundtable and others, to really understand what may be coming down the road, the externalities that can change your business model.
I hear you on that front, the idea of an uncertainty tax, but I also wonder what it would be like, what you would be hearing from CEOs if this was a Kamala Harris presidency. I mean, we now look at the idea of the tax cuts being extended.
I know what I'd be saying. Let's rip off the government.
If you were dealing with a different presidency.
Absolutely, which is why, Becky, my first point was I think the general business view is that the economy would be strong and that we're going into an environment where less regulations that are shackling what you can do, a government that's going to be more efficient, hopefully getting costs under control, opening up opportunities to do transactions.
I like this guy.
Taxes that will not be proposed to be increased dramatically, but may be reduced or stay the same. All extremely positive, and those are the trend lines. Companies are generally investing, but there is that.
Congratulations.
Not surprising, right? If a company reorganizes itself and has to go ahead and change its operations, it's going to help some people. It's going to change its business focus. That uncertainty makes you slow down decision making just a little bit. but I don't think it's going to change the direction of travel here.
What do you do with the tariffs? Again,
That's what you were trying to get at, Becky. Ha ha.
What's going to come in, and then clearly guesswork on what the retaliatory situation would be from other companies.
Oh, fuck you.
Great question, and you can't respond to every single press release or order until it's.
I love this guy.
Whatever you threat.
Thank you, sir. You are very intelligent. Don't let CNBC back you in a corner with these frickin' tariffs. I'm impressed. She did not get the answer she wanted to hear. So she had to ask and try to make it into a negative thing. She was wanting to get something about the tariffs, but she did not. I mean, she got everything positive, and it kind of pissed her off.
That's the most likely place tariffs will be. So how do you build supply chains to account for that and alter them where you can? But frankly, a lot of this decision making, Becky, is long term, as you know, and so you're not going to overreact to every little press release.
Sure. Mark, earlier this morning, we heard from a CNBC survey that was done in combination with SurveyMonkey for small business owners, and they were concerned, 2/3 of them almost, concerned about inflation.
I'm not concerned at all, honey. I'm actually relieved. Didn't we not have high inflation under the Biden regime? I mean, I was paying for 40% above my expectations. 40. I went and bought paper towels this weekend. They were up 35% from when I used to get them in 4 years.
And that means that you have to have more cash on hand. And when you do a transaction, the cost of doing that transaction may stay higher.
I just get so upset with these
people. I think there's a
people.
general view that inflation maybe is going to be at least where it's at, if not potentially higher.
Mark, what?
I went from buying all my supplies at a warehouse, and now I buy them at a grocery store because I can save money. Actually, not save it, but I mean, I've definitely cut back on a lot of shit that I used to, unnecessary stuff that I needed. I'm not going in there spending $200 or $300 every month now. I think $28 is all I spend in that place in the last 3 months, just to go get paper towels. That's it. Oh, I go in there and get my cleaning, my mop soap and my disinfectant, but that, even my mop soap I still buy at the brick and mortar. I just don't I use it liberally. I don't use it like I used to. It still gets the job done. Trash bags, I don't buy there no more. They went up from $32 all the way up to $50. I'd rather just, and I've cut back on my business because I can't afford to go out and buy all them supplies anymore. 4 years of having to cut corners. I don't feel like I have to cut corners no more. Not counting my accounting fees, my insurance, my bonding insurance, all up about 30, 40, 50%. Talk about inflation. Let's talk about the past, not the future, honey. I can just go down the list. This would cost me $1,100 more a month to run my business now. In 4 years, where I went almost 15. After Obama, I had to do some sacrificing too, because I actually lost accounts. People went out of business during Obamacare. I don't know, I just get affected badly when a Democrat's in office. But, you know, I can't complain about the market, but I had to come up with a new strategy. I've always done well, but not very well, like I've been doing.
Insurance.
Welcome back to Squawk Box. Two new court orders impacting the financial, or I should say the Consumer Financial Protection Bureau's data and operations continue to put the federal watchdog agency's future in
Small
doubt.
business,
Sharon
I think they're full of crap.
Joins us more on what the effect could be for consumers. So, what does it mean?
Well, you know, it means that the Trump administration has effectively closed the Consumer Financial Protection Bureau by firing workers and halting the agency's work. Now, Republicans have long opposed the agency. It was created in 2011 in the aftermath of the financial crisis, and the CFPB was designed to be an independent agency, receiving its funding from the Federal Reserve.
I think
Trump.
We need to keep an eye on China. Randy, are you listening? Are you around? 10-4. I'm thinking that we need to come back and retest support. And that could be right around 610. And if we can hold that, we'll stay bullish. And that's on the SPY. Right above 610. 610.86, somewhere in there. If we can hold that, and then I have a strong buy at 610. That'll be the pivot point of this channel. So if we can hold this area today, I think we'll go ahead and break new highs. But if we don't, we could pull back to around 605. You know, I'm digging all the good stuff that I've always been against big government and the way they spend my money. I mean, it's just out of control. And I don't know about these guys on CNBC are definitely negative about everything, and they've been wrong. Like, who pointed that out? This Magnificent pointed it out this weekend. Some guy that called a big pullback, and we've done nothing but gone up. We did have a nice pullback, but that was on, I think, tariff news. But if we can make peace, the market took advantage of the war. And I think if we make peace, there'll also be another good thing. So I'm real excited about China. China's had one heck of a run already. I got some BABA a while back, but look at all these my China stocks. The only one that ain't doing well is JD. The K-Web is up. BABA's up. BABA's my main one. Then you got PDD is up real big. This could go back to 140, 150. And look at the 5-year. We went 4 years, this thing didn't do crap. I think we're on our way to 150 on BABA for a swing. And then PDD. What are they doing out there? I guess that could be a car, but don't sound like one. I think we could top here on another $20 on PDD at 148.80 here in the long run. And K-Web, this is a real nice one here. K-Web can go up another $6, maybe even up back to 50. And we just broke the 63. Now we're about ready to break the 63. Right around $36. Yeah, we're right on the 63 right now on the monthly. And then JD, right around 48. But my biggest prospects are these two right here, PDD and K-Web. If we break 63 on K-Web, we'll definitely go higher. And we broke the Fibonacci at 128 today on BABA, above 130. So I'm pretty sure we're going to hit 150. 145. I just look at everything different than these people here on CNBC. They're in bed with, I mean, everything's about the government to them. Because they've been dishing out that free money. $14 trillion in 4 years. And it's getting cut off, and they don't know what to do about it. But I think it unleashes the market myself and let the private sector make the decisions.
And restrictions apply.
Take a look at the energy complex this morning. You can see $71. Perfect for people in the oil patch. Not too hot, not too cold. Just enough to keep production going, but not too expensive for consumers either. Joining us now, Don Stuyven, Goldman Sachs co-head of Global Commodities Research. We're going to talk energy, but also we were just off camera talking about gold, and I think it might be your favorite. Why? I can't help myself with Brian Gumbel once in a while. I have to do it, but it's your favorite commodity. Why?
Yeah, two reasons. The most important reason is that we think that central bank demand for gold will structurally remain higher.
I ask again, why?
Why? Because I think that EM central bank reserve managers in mid-22 got a wake-up call when they saw that Russian central bank's reserves got frozen and are wondering, are treasuries necessarily always risk-free, and is there not a strong case to diversify and increase the gold holdings, which cannot be taken away? And we think that this trend is here to stay. The second reason is gold is a great
I don't want to chase
tariff escalation concerns.
I don't want to chase either. That's why I called Baba out, what, a month ago or so? Let me see when I called Baba. Ain't been that long, has it? Two months ago? I know I did a video on them. I can't find it. Something awful fishy here. I don't know what to do. I'm dumbfounded. I can't find it. La 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 la. Oh well. Get one more shot. China. Nah, not a year ago. Ain't been that long. Huh. No. I've done one since then. Oh well.
Bird flu? We're not gonna have another pandemic, are we? Can you believe oil went negative at one point?
Pretty unbelievable. You always wanna think about the tail risk to your forecast. So for sure, something to think about.
I guess if
We could see
oil
607,
price-
608.
Like, not my first worry. Oil prices. I might
Maybe you'll continue with
Health first.
putting that on the back burner.
like comorbidities. I might be more concerned with. Don, thanks. Don Astro. Go ahead. Co-head. Does that work? You know, co-consuls, that never work. Co-CEOs never work.
I feel blessed with the partnership.
You do? All right. That's nice.
All right, it is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. And among today's top stories, Russian media reports say that the U.S.-Russia meeting in Saudi Arabia has concluded about 4.5 hours after they began. They characterize those meetings as positive and say conditions for a meeting between Presidents Trump and Putin were discussed, although no date was set. The Doge team has published a website detailing the savings it says it has made
I think you
so
have to
far, totaling $55 billion. It ranks the biggest cuts as coming from USAID, the Department of Education, the Office of Personnel Management as well, and it posted a wall of receipts detailing those cuts that it has made. And Broadcom and Taiwan Semi are reportedly considering deals that would split Intel in two. The Wall Street Journal says that Broadcom has looked at Intel's design and marketing business, while Taiwan Semi is exploring control of some or all of Intel's chip factories. Intel shares up by about 5% on those reports right now.
Meantime, take a look at the futures. We do have some green on the screen, about 58 points higher on the Dow right about now. The S&P 500 up about 20 points. You're looking at the NASDAQ up about 93 points. We're going to get down to the New York Stock Exchange, where our good friend Mike Santoli joins us. What you looking at this morning?
Well, Andrew, that little 1/3 of a 1% upside indicated in the S&P 500 is going to be enough to get us to a new record high. We closed just on the doorstep of a closing high on Friday. It's been a sort of
I'll be back.
quiet churn, mostly sideways with a slight upside bias for a few months here. We basically touched 6,100 on the S&P on an intraday basis on December 6th. And you can kind of see this was, maybe the ceiling for a little while. We've revisited it a few times. Low momentum. It's not like a broadly inclusive, high energy move higher. But no news has been good news when it's come to things like tariff news. And it seems like we're in for, at this point anyway, a little bit of a quiet session and maybe even weak. Not that much macro data. So we'll see if the market can make any hay with that. Take a look, though, at maybe a little bit of a surprising kind of turnabout, which is non-U.S. stocks on a year-to-date basis really flying relative to the S&P 500. A few things going on here. One, massive deficit in terms of overseas markets relative to the U.S. markets over years. I mean, even on a one-year basis, the S&P 500 is leading. This is all countries besides the U.S. by like 12 percentage points. So partly it's a mean reversion catch-up move. Partly it's a matter of where might the economies kind of have low expectations and the potential to surprise to the upside and accelerate. That seems like it's more outside the country. China and Europe both been very strong performers in this context. We'll see if there's more to it than just kind of a reflex move. Now take a look here, you guys, just talking about the commodities. They've actually kind of built this little bit of a base. This is the Goldman Sachs commodity index there, and against the US dollar index. Obviously you see more or less an inverse kind of movement here between the two. And we got some relatively reassuring inflation news, and when you're not going maximum immediate tariffs, it means the dollar can cool off. So that's been pretty decent for commodities. And of course, if the rest of the world's going to start to grow again in terms of demand, it can lead to kind of a firm setup for the commodity complex, guys.
Okay, Mr. Santoli, thank you for that analysis, and we'll be seeing you a lot more throughout the day.
And coming up, they're back to you. They had me for a second. No, I don't know. Coming up, we're going to talk about President Trump's legislative agenda and getting a budget deal over the finish line. Tennessee Republican Senator Bill Hagerty is going to join us next. And then in the next half hour, Palantir co-founder and CEO Alex Karp joins us with his warning for Silicon Valley and the West about threats both here and abroad. Squawk Box returns in just a moment. The House and Senate have submitted dueling budget proposals. Join us now to talk about the plans and President Trump's legislative agenda. Tennessee Republican Senator Bill Hagerty, and once again, our hearts go out to a lot of the people in your home state, Senator, with the flooding that we've seen, and hopefully hopefully the help is either there or forthcoming.
Yes, certainly. I appreciate that very much, as do the people of Tennessee. The rains were significant. The flooding, as you've seen on much of the coverage, has been devastating. We're working very hard to make certain people are getting the aid they need.
Okay, so we're here to talk about actual legislation. It's so out of vogue now. Do we really need it? And can't we do everything through executive order now, Senator? No, we need to. Where are we on that?
This is actually one of those areas, Joe, where legislation is going to be required. As you say, there's been a lot that's been done by executive order, but in this case, we're working very closely, again, with the House and the Senate together, and we'll work closely with the White House as well. We're coming up into a point where the American public really expects us to deliver. It's about energy independence, it's about our national defense, it's about bringing inflation down. All of this has to be addressed also in the context of broader tax cuts that President Trump wants to see in place, because that will have long-term positive implications for the economy. So it's a complex process. The House is working at pace on its product. We're moving forward in the Senate, and I'm certain the White House is going to step in. We're going to have to bring all of this together pretty soon.
I wonder how that works. So that there will be a third, so that the White House will be involved. Does the Senate talk? The people running things in the Senate, are they trying to coordinate with the Speaker and vice versa? Doesn't look like
certainly, I think the conversations are on a regular basis between Leader Thune and also Budget Chair Graham, as well as with our majority leader in the House, Mike Johnson. I think they're working very closely. Mike Johnson obviously has a higher hurdle. He's got a very narrow margin to navigate with. They put a product together right now, a larger product. Senator Graham, the Budget Committee, to put something together that would be a little bit slimmer, if that makes sense, really focused just on energy independence, national defense, and the Coast Guard. But what we're trying to do is keep things moving forward and make certain that we've got options as we come into the spring here. But what I want to do, and I'm setting process aside, I'm not too hung up on whether it's one bill, two bills, or three bills. I think President Trump feels the same way. We just need to deliver on what the American public has asked us to do, and that is to step up, bring inflation under control, get energy independence back on the forefront, and get our southern border corrected and fixed once and for all.
When it's all said and done, Senator, the extension of the tax cuts, will it be permanent? And can you do that and all the other, no tax on tips, no tax on Social Security? We're talking trillions of dollars. But there are some senators out, if it's not permanent, we had one on last week, if it's not permanent, I don't want a 10-year extension. I want it permanent.
Joe, that's a great question, and I think we would all like to see it permanent. And here's the reason. We need to see consistency, certainty. As you know, the business community certainly appreciates that much more than the volatility that's associated with these short-term extensions. It really gets down to the math and how we go about the process of paying for all the various features that are going to go into this. So it's a product of negotiation. I would certainly like to see it permanent, but again, we've got to get down to the hard part of putting the math together.
And as far as deficit busting implications of what we're doing, in your mind, do you think that DOGE can somehow play a very significant role in cutting enough to allow for some of these things to happen? Because I mean, it's just hard to see it adding up. On the big frame of things, $3 billion sounds great when DOGE finds $3 billion. That's like it's like a drop in the ocean for what we're dealing with here at this point.
Joe, I think the critical aspect of it here is that DOGE has been underway for 3 weeks? We've got to start moving in the right direction. We're looking at a situation now where we've got a $37 trillion budget deficit. That is so significant.
It is.
We've got to begin moving again in the right direction to become more fiscally responsible. I think what DOGE is uncovering is the fact that there's a considerable amount of waste, fraud, and abuse that's in the system. If we go about the process of systematically uncovering that, two things will happen. One is that there'll be immediate opportunities that DOGE will uncover that they can address. the other more significant component is that they're going to be signaling back to the legislative branch that we've got major areas that we can come in, reform, modify, and cut. But the whole streamlining process ought to have, in the long run, not only the impact of reducing the deficit spending, but also increasing our efficiency as a nation. Both of those things combined, I think, will have very positive implications for our deficit, for our fiscal situation in the long run. And I think it's something that we've absolutely got to get started on. I think the American public are ready for it.
Who do you credit with getting these nominations through? Even some of the ones that didn't look like it was going to be easy, or looked like it was going to be more difficult. Is that the leader? Is that Senator Thune? Is it, what I'm getting at is, or does President Trump really hold sway over both the Senate and the House? And will that mean that we don't have problems in the House for Mike Johnson this time around, and the Senate?
I think, Joe, the answer is yes to both in terms of President Trump's influence. Look, the American public spoke loud and clear. We're cognizant of that here in the Senate. The point is, President Trump is entitled to his team. He's put together an incredible team. They're very disruptive. I think what we want to see, what the American public wants to see, is real change, and you've got people coming into office to do that. But I don't want to underemphasize the fact that Leader Thune has done a tremendous job. He's kept us on track. He's pushed back against maximum resistance that we're experiencing from the Democrat Party. And he's kept us moving, I think, at a pace that everybody has been extremely pleased with. And so President Trump is achieving what he promised, what he hopes to accomplish in terms of getting leadership positions filled. And you've got Leader Thune that is doing a terrific job of making certain that we're here, whether it's through the weekends, through the evenings, late at night. He's kept us here, but he's keeping us apace. So I think both deserve a great deal of credit for making certain that we're moving in the right direction here on these nominees.
Senator, we have seen a lot of consternation from Democrats about some of the things that President Trump has done. With the Department of Justice, maybe the Mayor Adams case, and if you listen to Democrats in certain areas, it's a constitutional crisis. I've heard that over and over and over again. Even some conservatives, even some conservatives, though, have pointed to certain things where they perhaps think that President Trump is pushing it a little bit too far. Has there been anything that you've seen where you were hoping you don't get any questions from on TV or from constituents about anything where you're like, wow, that's even something I wouldn't have tried to do?
Nope.
Well, I think what we're seeing and hearing, Joe, is just the fact that the Democrat Party is coming unraveled. And I think, frankly, a lot of their allies in the media are as well, because I've heard the term constitutional crisis over and over and over again. And now that we're presiding in the United States Senate, because the Republicans have taken the majority, I've had the benefit of sitting there on the Senate floor listening to time and again my Democrat colleagues coming in saying that if, for example, Russ Vought, who is now our OMB director, were he to be confirmed as OMB director, millions of people would die, that we're in a constitutional crisis. This isn't happening. There are not people piling up dead on the streets. And this crying wolf constantly, I think, just discredits the Democrat Party. They need to figure out where their core is. They need to get back to the basics and join us in governing rather than just these shrill cries. Again, because I think people are just becoming numb to it.
Do you think, is it the perception that maybe the president wants to deal with Ukraine so bad and Russia so badly that Ukraine will not get a total fair shake, that Putin's going to have the last laugh? Do you see that? You hear that coming from, obviously, from certain circles as well.
You've heard a lot of speculation about what's taking place. One thing I want to be careful to do, Joe, is not get ahead of the negotiating team. Last night in Riyadh, they agreed to put a high-level team together to focus on bringing this to resolution. I think what we all want to see is an end to the death, to the carnage. What's happened in Ukraine has been absolutely awful. I think we'd all like to see that come to an end.
Oh, hell, I was pretty close on that support level.
I'll let that team get to the point of negotiating the details, and the last thing I'm going to do is try to get ahead of them and start speculating right now. But I think one thing is clear. The American public wants to see this come to an end. I think the world needs to see this come to an end as well, and I'm hopeful that that's going to happen post-haste.
All right, Senator, so it's a pretty red state. You haven't been hearing a lot of complaints yet? You're all right? You're good? You look like you're not worried but Andrew, you want to weigh in on anything? Nothing?
you've asked questions.
Well, I tried to, and we need to pace ourselves. I think everybody needs. It's going to be another 1,400 days. That's my only concern, Senator. It's another. I want everyone to take a breath occasionally, or do we need to just? I've seen certain people say we need to rally the troops right now and start screaming because, or else we're going to lose our democracy forever. So
bullshit.
I can't figure out how to respond.
It is.
Yeah. Well, I hope we can stay in touch because there's so much more to come. President Trump is going to tackle tariffs, the lack of reciprocity that we've had with our trading partners around the world. As you know, I was U.S. ambassador to Japan when we put two trade deals together with Japan.
Right.
I think I've drawn him in.
Joe drew me in the following way, and I'm going to try to ask it this way.
Okay. All right, good.
Obviously, the administration is moving super fast, and by the way, it may need to move super fast to get stuff done. Just not only in terms of its promise to its voters, or to the voters, I should say, but more importantly, because if you don't do it quickly, you may not have the chance to do it later. But my question is, how important is it to bring the entire country along? How important is it to do it with sort of a level of transparency where people don't not question the merits of certain decisions themselves, but whether what's being done is being done transparently and honestly, right? I mean, I think that is...
The crossing of the border, you idiot, was not democracy. That was an invasion. It should have never happened. And it happened, so we got to fix it. That's the problem. And the government spending, what I'm hearing, I'm really shocked.
But what we've seen is transparency at a level that we have
right,
not.
But Senator, no, the
many
point
years.
I'm
Exactly.
making, what we're seeing, as you know, is we're seeing resignations, and maybe that's the goal, but we're seeing resignations from people in senior posts, some, by the way, who are conservatives. I'm thinking now of the Justice Department, who are saying, this is just inappropriate.
It is not inappropriate. They don't want to get busted. Oh, God, I can't handle these people. How can these senators and congresspeople become multimillionaires in a short period of time on a small salary? How can it happen? I mean, I would run for Congress almost if I knew I could become a multimillionaire in a matter of years. I mean, worth 50, 60 million.
Reasons, but I think it really was having to do with their own career and where they hope to land next. So I think we should just let this move forward. Again, it's early in the process. There's going to be disruption, there's going to be change, but I think overall we're moving the direction that the American public wants to see us move.
Okay, Senator, it was, I think we all got something out of having you on today. We'll hopefully have you on again soon. I appreciate your
Great,
time.
I look
Thanks.
forward to it. Thank you all.
You're welcome.
All the best.
Coming up, we will talk about the economy and the Fed with Lael Brainerd. She served as economic advisor to President Biden, and she is a former Fed vice chair. Then Palantir CEO Alex Karp joins us on set with a warning about emerging global threats. Squawk Box will be right back.
You go short, bro? Oh my gosh, you're cooking. Bro, and you pinged the disc? That's crazy. Yo, you go short, bro? Oh my gosh, you're cooking. Bro, and you pinged the disc? That's crazy. Yo, you go short, bro?
Yay. That guy looks like Brad Pitt for a second. Man, I can't handle CNBC anymore. I really can't. It used to not be this bad. Well, in my opinion. Maybe someone else likes to listen to them. And I got another little bit more to listen to this crap. So let's talk about something else. Sorgensen, you ever think they're resigning because they might find something on them? Tesla flagging out. We could have a nice little drop to right around $4 and bounce off that 200 EMA. We did hit after hours the 200, so we could double dot them on that one too, and that'd be a strong buy. Then we got Apple, which has been on a tear. It's up $20 in 4 days. So we can put a Fibonacci on this one. Right around the 200 for sure. I'm going to set an alert right off that support line I have. Then we got Baidu. Mara's up. Just popped up a little bit. So right now it's off the 200 on the, this is a 30-minute. Let's change the time frame. That 30-minute looks pretty nice.
Restrictions apply.
At least 11 people are dead after a powerful storm in Kentucky flooded communities, washed out roads, and left thousands of people without power. Swollen rivers and high floodwaters forced hundreds of evacuations. The rain is over, but Governor Andy Beshear said yesterday that there are still people in harm's way and that the forecast for today calls for a snowstorm and freezing temperatures. So our hearts go
that's
out,
not
and
good.
hopefully help is on the way for them.
Coming up, we are going to talk to former Fed Vice Chair Lael Brainard's going to be here to talk about her thoughts on the economy, inflation, tariffs, and so much more.
Former Fed Vice Chair. Former. We don't want to hear about her. Okay. I got to work out with a bunch of chicks today. AVGO, we got Baidu on here. I think I need to look at this 30-minute more often. Walmart's been on a tear also. I think we got earnings on Walmart this week. I had a breakout on Thursday morning on FFIE. QSI, I'm about ready to take off my watch list. That quantum computer. Someone mentioned AVGO. Coins popping a little bit this morning. Walmart's been on a tear also. I think we got earnings on Walmart this week. I had a breakout on Thursday morning on FFIE. QSI, I'm about ready to take off my watch list. That quantum computer. Someone mentioned AVGO. Looks like it had a pretty bad pullback. Friday. This could be on watch. Coin. Ooh, MU's breaking out. That's what I missed. I had charted.
Insurance.
All right, welcome back to Squawk Box, everybody. Let's get to the economy this morning. Higher inflation readings and tariff uncertainty have the markets on high alert. Over the weekend, two Fed officials said that they would like to see inflation move closer to the target before cutting rates again. Joining us right now is former Fed Vice Chair Lael Brainerd. She served most recently as National Economic Council Director under President Biden. Lael, thank you very much for being here this morning. Let's talk about that inflation front and center. How concerned are you about these higher readings that we've gotten?
Well, look, I think the producer price data gave us a little bit of reassurance after the hotter than expected consumer price data. And so the gauge that the Federal Reserve looks at, the PCE gauge, which will come in later this month, will probably come in a little closer to 2.5, core PCE 2.5, 2.6, which will be a little bit closer to where the Federal Reserve wants to get. Nonetheless, I see the Federal Reserve on hold. I think they are in wait and see mood, given that there's so much policy uncertainty, particularly about tariffs and about immigration.
I mean, I think the Fed's on hold, whether you think about any potential
I've had enough already.
Inflation is hotter than they thought. We've now gotten 3 months of...
I must be completely an idiot about immigration. I really must be. It just seems so illegal. We've had 4 years of uncertainty about it. I don't understand. It's not a norm. And mine might be the one that's out of touch, that open borders should be the thing we should have. We should have millions and millions and millions of people coming over without permission or being vetted. Maybe I'm the one that's wrong. Maybe we're not the same country I was raised up in. I mean, I can't go nowhere without using this. I can't go nowhere in the world without having a passport. Or permission to go into another country. Maybe I was wrong.
So yes, there are prices that are certainly affecting those pocketbooks again. And I do think policy uncertainty does also bring some doubt to Federal Reserve policymakers. If you do see the kind of tariffs that we are hearing about from the White House and the kind of mass deportations that we're hearing about, those would lead to higher prices in areas that matter a lot to consumers.
We went years without having higher prices without this invasion. Why would it now? Because Americans won't work?
Come in. So the reading I see from, for instance, the chair's comments and other members' comments is that they don't want to get out ahead of policy. There's a lot of news every day about potential changes to policy. And so, yeah, I think it adds to that wait and see
I think you're an idiot.
Because you shouldn't go and make changes to interest rates based on policies that haven't yet been enacted.
We were having a conversation earlier this morning, and while the markets may worry about what the Fed's going to do, in some cases, the markets themselves that have to be the ones that you worry about and that you have contentions with. When you look at treasuries right now, it's not what the Fed is doing that's driven along into the market. It's bond vigilantes. It's worries about what kind of spending we're going to continue to see and what kind of deficits we'll see too.
Well, that's absolutely right. The kinds of tax cut plans that the White House is going forward with, just extending the existing tax cuts, including for the richest 1% of Americans, that's $4.4 trillion of tax cuts. So that's a lot more bond issuance. Now, they've got on the reconciliation legislation on the House side, they've got some spending cuts, but how realistic are those spending cuts? You know, you've got about $1.1 trillion in cuts just in order to pay for tax cuts for the top 1% of Americans, offset by spending cuts that come entirely, potentially, on Medicaid, food aid. That's really going to hurt working families, not good for the economy. And of course, those tax cuts are simply an extension of existing, so they don't add additional impetus to growth.
Those were across the board tax cuts that did help the middle class. And do you, when you say 1%, are you talking about corporations too? Do you think it was? I mean, do you think that's a tax cut for the wealthy when you bring the corporate tax rate?
No.
A lot of what you were saying just sounded to me like it just sounded like Democrat talking points.
Exactly. Exactly.
There's no doubt that it was. I mean, when you talk to a Republican about it, it's the greatest thing that's ever happened. Do you say at this point it was a tax cut just for the wealthy 1% that no one else benefited from the tax cuts from 2017? That wasn't a net positive for growth and for the U.S. economy? Is that what you're saying?
No, absolutely not. These are simply the fiscal estimates of how much additional revenue losses going forward will be necessary in order to finance tax cuts. So it's really, if you look...
The way I understood, the tax cuts brought more money into the federal government because we were able to spend that money instead of the government spending it and wasting it. So this woman, I mean, this is what we've been running for the last 4 years on, this philosophy, and I disagree with it. I have more money going out to people, to charities, to my family. And then the last 4 years, I had to, pay my own, I had to pay higher bills. I wasn't able to give that money to them to help them when they needed it. And I still gave it to them, but that's only because I did so well in the stock market. I spent like what? I think 30 grand in the 4 years on my family. Because they couldn't get it. And they didn't work anyway, so it didn't matter.
Maynard, thank you for joining us this morning.
Thank you.
Coming up, Palantir CEO Alex Karp is going to join us at the table to talk about his book, All Things AI, and so much more. We're going to do that next, and as we head to a break, take a quick look at futures this morning. Some green on the screen on this Tuesday on a shortened holiday week here. 63 points higher on the Dow NASDAQ, looking to power higher, about 107 points higher. We're back after this.
How do I become a member of this band? I'd love to be a whaler.
Well, usually you just got to walk around and kind of say chief every once in a while, but you can do whatever you want to.
Hi, Chief.
You got it.
Woo! Can we do one more? There's one more you know I love.
Starts like this.
Oh, you're good looking.
You are too, honey. Cowboys ain't easy.
Harder to hold.
they just ride away. Say what?
Mamas, don't let your babies grow up to be cowboys. Don't let them pick guitars and drive them old trucks. Let them be doctors and lawyers and such. Mamas, don't let your babies grow up to be cowboys. They never stay home, they're always alone, even with someone they love. Yeah.
Cowboys like smoky old pool roads and clear mountain mornings.
Little warm puppies and children and girls of the night. Them that don't know him won't like him. Them that do sometimes won't know how to take it. He ain't wrong, he's just different. His pride won't let him. He thinks to make you think he's right. Yeah. Mamas, don't let your babies grow up to be cowboys. Don't let them pick guitars and drive them old trucks. Let them be doctors and lawyers and such. Mamas, don't let your babies grow up to be cowboys. They never stay home, they're always alone, even with someone they love.
Yeah. I'm going to go in the kitchen and make a cup of
The
coffee.
Silicon Valley and the
Add me a little bliss creamer, that is. I'm gonna put it inside of my whipping machine and drink it. That's gonna be my mocha. Just wait and see.
Wow, he goes there early.
It's hard to know. It's hard to know.
How about combing your hair, you
I have a million
dumbass?
questions about the book, but before we get there, I just want to ask you a couple things about the news, because interestingly, I would say the book, which you wrote a year ago, in a way, you were predicting where we would be today in terms of some of the big issues.
The interesting thing, basically, what people should, it's not actually a.
Does this guy sleep?
Comes in two forms: either promote yourself, it should be Carp AI, or it's somebody running for president. I'm doing neither. And so the book really is an attempt to say, look, everything you learned at your school and college about how the world works is intellectually incorrect. And here is a way of seeing the world that may not be right, but it's not wrong. And so trying to be right is very hard, but you can definitely know what's wrong. And what you've been taught in college, that you basically should have no beliefs, that the West is inferior, that the intellectual tradition of the West, it leads to self-flagellation and losing on the battlefield, losing intellectually, losing your party, losing your country, losing your border, that your institutions can't work because we're so good. It's actually wrong. And the West was actually never about that. And you can be good, decent, and win, and be intellectually correct. And what was absolutely spot on about what's in the book is we have this technological revolution. It's no longer fake. 3, 4 years ago, institutions basically thought I'd rather have a good steak dinner and a bad product, and at least I get the steak dinner because the software product doesn't work. Now we are in a software-defined world, and the nation that leads software is the USA. And what does that mean for all institutions? What it means is those institutions have to actually live up to their core mandate. So a country has to have a border, the educational institutions have to work, the military actually has
This guy's so cool.
You actually can have things function in a way where the outputs are much greater than the inputs. And people who ignore this are going to be washed away.
Why did you write this? Were you mad at the educational system? Did you think that they were teaching the wrong things? What sparked it?
Look, I think the West, as a notion and as a principle upon which it is executed again, is obviously superior. And not acknowledging that, because
by not acknowledging it or denying it, you could pretend you were smarter or better than you were, has led to enormous problems in our society. And also, for the sake of humanity, we have been blessed with a resource called talent management and software production that no other country has. So what does that mean for us? What does it mean for the world? How do you manage that ethically? How do you, and how do you prevent what we had essentially? We had a pagan religion that has infiltrated our universities, and that pagan religion basically says everything that's good about America, everything that actually works, is ipso facto bad. And by the way, you can't talk about it not working because it's a religion. So it's not even, and it's a new religion. It's not an old great religion, Judaism, Christianity, Islam. It's a new religion, and the tenets are West is bad, nothing can work. If it works, it's bad, and the West is, and that way of thinking has corroded every aspect of our society.
Exactly.
Last not least, it leads to a situation where you get a complete corrosion of all institutions and to a legitimacy crisis. So no one actually believes anyone's an expert. I'll just use this last point. In the 50s, if there was this famous professor, Ken Arrow, and if Ken Arrow said you were smart, you got tenure. And why did that happen? It was because people knew Ken Arrow is smart, the institution he represents is the best in the world. There is no one like, honestly, the only thing like that currently in tech is a Palantir degree. If you work for Palantir, everyone knows you're good. And that's basically, none of these, like when we went to school, the schools actually had credibility. The science was actually science.
Okay, so let me just ask, and then I want to actually get into some of the news, but what would you do to bring it back, and do you think we're on that path now?
Well, I think actually, so one of the things that's not in the book, I think if you read the book, it reads like it was written today. But, so one of the things that I would, if I were writing the book today, there's a sense that people have that there's a pendulum swing. So if you if you look at institutions that are failing and you talk to the smart people there, universities, UN, Democratic Party, they'll tell you there's going to be a pendulum swing back. But AI is actually breaking the pendulum swung. So what Europe thinks, if you're like, I spent half my life in Germany, you talk to smart Germans, they're like, okay, we're having a bad time. We're going to have a good time. We did this under Schroeder. It'll come back. We don't actually agree with all the stuff that people say. We can't say it publicly. That's what they say. Okay, but what they're not understanding is the technical revolution now is so great, you got to get on the train because that train is leaving and there is not going to be a swing back. So what I'm trying to say to people who are on the pendulum, people who are builders, is like, we have a responsibility. We have to be dedicated to our nation. What I'm saying to people who may think they can get off the train, university intellectuals, United Nations dedicated to undermining America and anyone who's Jewish or something, you're being left behind. And by the way, I'm happy you're being left behind. But just know, if you get left behind, do not cry that you're not part of the dialogue.
Right.
And that's actually what's happening. They're like crying, like all these people are becoming protest parties. It's like, I grew up protesting in DC with my parents and no one listened. If you want to go back to that, just do not read the book. Pretend this isn't happening.
Alex, how did so many, whoever's hiring at colleges, it was just sort of a mass hysteria to all be on the same page for who gets tenure and what dogma and orthodoxy makes you attractive to college? Because it's everywhere. I don't understand how it happened, and I don't think we ever get it back.
Well, I understand how it happens. It's like this country is fundamentally Calvinist. So that's one of the great strengths of this country. And what Calvinism basically says, as opposed to like Lutheranism and other, is if you've done something big and important, you're probably a good person. And what you had at universities was an inversion and rejection of that. And so all the intellectual movements are downstream from that. And so and that inversion is very...
I think the only time I ever really protested was when I'd quit a job and look for another one because I didn't like it. But I never went, and I used to march in the Martin Luther King every year. I did it for like 10 years. And then I got sick of it. I thought I was doing good, but I'd march. And then when Obama got elected, it kind of just said, man, I ain't doing this crap anymore. Because I got sick of the race baiting. It wasn't about race baiting back then, but
That's okay.
Something
But it's our
changed.
responsibility to hold them to account. You rejected the frame of something that could work. I'm not saying that everything I'm saying is right. I don't know that. But I am certain that what you're saying does not work, and you will be left behind in history.
Alex, let me ask you a couple of things that are in the news, and I just want to actually relate one of them to something you just said. You lived in Germany for half your life.
Yeah.
And there is a big debate going on about the politics in Germany right now. You're also Jewish. And there is support, and you've even seen it over the weekend. Marco Rubio and Elon Musk and others have been very supportive of the alt-right movement in Germany, while there have been questions about their association with some supporting Nazis and other things. I'm curious where you land on that.
I don't want to go into the technical weeds here, but the problem in Germany is that somehow the small portion of Germans that believe you cannot talk about migration without being a bigot, which is about probably 15%, 90% of them vote for the Green parties, have somehow tricked the larger parties into saying they will only vote for things if the far right doesn't vote with them, which basically, as a matter of pragmatic power, shifts all immigration policy to a small group of people that literally will not let you discuss the fact that Afghani immigrants to Germany have a 70x propensity compared to German population to commit certain kind of crimes. And that in the last couple of weeks, every single terror attack has been the result.
Did you go to jail for pointing that out?
You'll get into trouble, but this is the weird thing. Again, there's a lesson in this book, which is do not allow yourself to become a product of people you may tacitly agree with. So, like, I'm sympathetic with non-discrimination. I don't believe in discrimination across any variable. But you are being turned into a product by a certain small sector of the left because you're not allowed to talk about facts. Like, in the last couple of weeks, every week there's what happens in Germany is there's a terror attack in the morning and the Greens and the left protest the far right in the afternoon. This is literally what's happening. And the average German, I know so many Germans who would never even use the term Alternative für Deutschland 4 weeks ago that are telling me like, yeah, screw it, I'm going to vote for them. And the reason why is it's our responsibility, and you see this, by the way, why is the Democratic Party committing suicide? It's because...
In the U.S. you're talking about.
In the U.S. It's the same thing. It's like we're not allowed to do true false. Like, okay, I agree with this person, I don't agree with this person. We literally have to say anything that's ever been uttered from this person in the total timeline has to be wrong, including border, defense, and this is happening in every Western country. And again, it's very similar to the question you asked. Okay, we know why they do it. The Greens and others are really smart to do this because then, in the end, they define how the society's run. But none of us want that society, and it's not bigoted to say, wait a minute, this is not working. And then you have follow-on issues. It's like, then, by the way, then on the outside, what I tell my German friends in private is, okay, you don't like what people are saying, but if you're not taking your immigration policy seriously, you have no tech scene. Germany had the most important tech scene in the world pre-war, bar none, like in America. It has de facto almost no tech scene. It's nascent. No one believes in it. No one's investing in it. The energy policies make no sense. And then you wonder why people don't take you seriously. You got to, in this book, it's basically like, fix your thing at home, or no one's taking you seriously. And then when people don't take you seriously, you get mad. Honestly, though, I'll tell you what I shouldn't even say this, but what I tell Europeans in private is, you know how when you go to the inner city in America and the mayor's talking about safety and you're like, get me out of this country? I tell them this in German. That's what we're thinking about your tech scene. No one's, anyone seriously is telling you this is a joke.
Let me ask you one question.
And by the way, like, yeah.
I want to ask you about Ukraine, but I'm going to ask you one German question, which is, but how do you feel about some of the folks that are part of that far-right party? And how do you capture, how do you deal with that?
But again, let me just tell you, let me take a trick from the old thing. if you focus on some of those people I obviously don't like and probably don't like me, and is there anti-Semitism on the right? Yes, but the structural issue in Germany is actually anti-Semitism in the immigrant population. That is that is the biggest issue in Europe. But by the way, the point I'm trying to teach people is focus on what you believe. I don't really want to talk yes, there are people who will vote for me I don't like, and they don't like me. It's and on every issue, there are people who agree with me on Israel and I don't agree with on First and Second Amendment. It's you have to focus on what do I believe, and you know what? There are going to be some people who come with me I don't like and don't like me. That's okay.
Speak to this.
I love you.
Talking about Ukraine.
I love this guy.
You've been very involved in that battle. I want to show you this real quick.
I used to not like this guy. Man, my heart changed. I mean, he's up there with Elon.
With Moscow, and I would get to your thoughts on it if we could.
The goal of today's meeting was to follow up on the phone call the president had a week ago and begin to establish those lines of communication. The work remains. Today is the first step of a long and difficult journey, but an important one, and President Trump is committed to bringing an end to this conflict.
We are trying to bring an end to the conflict. Apparently, we're also asking for something on the order of $500 billion in terms of access to minerals and other things for Ukraine. Is that a fair deal?
Okay, look, I don't know anything about the deal and the intricacies of it. What I would say is, first of all, you put up people on the screen who are very talented. So if I look at this from an entrepreneurial perspective, the first thing I'm looking at is, okay, those three people are very talented. The second thing, I'll tell you something I think Trump does very, very well. He says, I'm not going to accept a paradigm that essentially leads to a stupid conclusion. And he's like, okay, great. I'm going to give you a new paradigm. You don't like that, my paradigm? Give me another one. And I think he's quite brilliant at this. So what I see is, he's like, I'm not accepting a paradigm where America just keeps financing things. There's no real discussion. I'm sending three of the most talented people there. Let's figure it out. And again, what I would say to people who are trying to figure out how to be builders is, do not accept a paradigm that is stupid, no matter who tells you that you should have it.
Okay, let me ask you a different question about paradigm shifting. So one of the things that's going on right now, Elon Musk working with the Doge team in Washington to try to get at some of the misspending that's been going on over the years.
Fraud, waste, and abuse.
And I think there's a lot of people who are super supportive of that. At the same time, you're hearing about resignations and all sorts of other things of folks who are questioning the access that they're getting to data. You are somebody who lives within data. You care about safety and security of data. Do you think we should have those concerns? And is there a way to do whatever's being done right now so that you can take the country and those who are questioning all of this with you,
well,
if you will?
What I don't like about what's going on is I just view this as, well, let's watch the Democratic Party commit suicide. And I've been a Democrat most of my life. I kind of view myself as outside it, but I don't like watching the Democrats just commit suicide. And what I see is most of the country doesn't really, at this point, given the fraud, waste, and abuse we know is there, 90% of the country is like, get rid of that fraud, waste, and abuse. And I just view this as yet another example of the progressive left boxing themselves into a suicide dance. Now,
You gotta love this guy.
What the progressive left should be doing is saying, okay, Elon, you're clearly the most qualified person in the world to do something like this. We want to dialogue with you about how you're doing and what are you doing. I don't believe that's actually what happened. And again,
So I sat here this morning and talked about how I doubted myself, and he's reassuring me, don't doubt yourself. I mean, believe what you believe. Because I kept listening to this station, and I just go, man, am I doing this? Am I thinking right about this? I mean, is illegal immigration a good thing? Allowing rapists and murderers and drugs across the border, is that a positive thing? Am I wrong?
.9% of your taxpayer dollars are being spent. But last and not least, and probably arguably most importantly, there's two revolutions happening. One is transparency and one is AI. Okay, so why is it that we do not know where every penny of our money goes? How do you explain that to people? And by the way, slightly more technically, what large language models do is they mean you can go into the contracts and see exactly what happened. So in the past, we couldn't do this. Now we can. The right response is, we want this to happen, we want to happen, we want to be involved in the dialogue. The real response is, it feels like the people criticizing Elon don't want it to happen. And this is going to destroy those people.
Alex Carr, the book is called The Technological Republic. I want to thank you for being
You
here.
come
We
back
could do this.
tomorrow?
You can come back tomorrow.
Can you come back
the next
tomorrow?
day. We can do this.
I like, you know, I'm not used to, I thought that this was a joke because I'm not used to being reinvited.
No, we're starting at 6.
I think I do need to go up and get some creamer
Because you're just getting started. We're not
before the
off
snow
yet.
starts to get
We
bad.
got about 15 seconds before we
Don't
end
tell
it.
it. I just told everybody I want you back.
Okay, well, I'm not used to, like, you know, the Groucho Marx thing. I wouldn't go to a club that would have me as a member. I'm not used to being reinvited.
See you tomorrow morning.
Take care.
Make sure you
Bye.
join us. Squawk on the
Bye.
Street is next.
Good Tuesday morning. Welcome to Squawk on the Street. I'm David Faber with Jim Cramer. We are live from Post 9 at the New York Stock Exchange. Carl has the morning off. Let's give you a look at futures. It's a shortened week. Remember, it is Tuesday. Doesn't feel like it, but look at that. We may have a higher open.
First time in 3, what? We had 3 down, well, I can't call Mondays. This is actually synthetic Wednesday. But you know what I mean.
Yeah, I know exactly what you mean.
Path of least resistance should generally. There are surprises here. We're so close to records that usually when you get here, you get through them. But there's still some things on the chart.
I think I'm going to run up to the store and get me some.
So the market's definitely still alive here for a two-way trade, but certainly leaning bullish with the bid this morning happening. We're going to talk some more chips. We're going to talk
Where I
some
get snowed in and not be able to
lot
have it.
to discuss on the macro front, on the international side. Michelle Gibley going to join us at the top of the show as we think about the rest of the world's issues and how they compare to our own. Dollar catching a little bit of a bid this morning after getting beat up a bit in the last couple weeks. Bonds kind of quiet. A little sell-off in treasuries. Not too much to talk about there just yet, as we seem to have some agreement between the market and the Fed members on when their next move is. We might not have agreement with the White House on that subject, but seems to be a general peace in the bond market for the moment. We're going to talk some earnings, looking at Oxy and oil too, as energy has been a big policy trade as well. So some fun stories to get into. But generally, the big kind of takeaway is that we've had a lot of range-bound stuff. The risk radar has been all yellow across the board until we break through some of the ranges we've been in. We haven't quite been able to do it yet. But I think it's a pretty clear reflection of how we've had a good bit of churn across a lot of the major asset classes. Stocks number 1. Look at the futures chart from the last 3 months. I'm going to look at 3-month charts this morning to give some perspective on where we're at and how we got here. It's still technically the futures high is from December at the end of last year, but I mean, test here pretty close, test here pretty close. I mean, we're pretty much there. This was a little bit worrisome, this chop with some lower lows that happened and some lower highs through here. We had that kind of descending triangle in the stock market, but we broke to the upside. That's a very good thing. We had a good bit of negative headline and the stories there along the way, the DeepSeek stuff that kind of first freaked out markets, and then we had some policy, maybe disappointment, if you will, a lot of euphoria running high that had to take a few weeks to process a post-inauguration to kind of figure out what's going to take the priority. And of course, a lot of economic data that's been mixed enough to kind of keep both sides interested, with the doves and the hawks, where the economic data has been strong enough to prevent us from cutting, but still not a point where we have to hike. So the central bank situation seems to be kind of set to the side as a threat to the market. Earnings have been very solid. So we got through the big tech stuff. We still have NVIDIA in front of us, but for the most part, the earnings that we're talking about this week are more kind of secondary items. So this is a very good chart. And the only potential negative interpretation would be like a triple top. I don't know. Don't think that's likely. This basically was churn, was indecision, had a few threatening moments, and we broke to the upside out of that range. So it looks like we're building momentum for kind of a slingshot out of that range to the upside. So when that happens, green light back on stocks, higher highs. That's the simple equation for technical analysis. Looking at Bitcoin Gold, there's a little bit of a different message there. Bitcoin in the crypto market has having a little bit more trouble. BTC has been stuck while gold has been breaking out. The chart for gold looks really, really good. Over the last several weeks, we've got a pretty direct linear runaway in gold, which is sometimes kind of a tricky thing. It can mean a lot of different things. Gold sometimes gets part of the risk on bid when stocks and crypto are up, and sometimes gold does well if stocks and crypto are down. So you can kind of make what you want of it, but it certainly is interesting to see gold very strong here. I think on the margin, it's a slight negative in terms of its message on risk appetite when gold's doing very well and Bitcoin's not. But you have to be careful projecting too much with the crypto stuff, considering how central it has been to the policy discussion, the presidential policy discussion, that is, to be very clear, and the potential outcomes of this new administration. So it's possible that Bitcoin's sluggishness is signaling a little bit of risk off, a slowdown in some of that sentiment. While stocks have churned, Bitcoin's been a little weak, and compared to the run-up in gold, which might take more of kind of a safety bid type of narrative, but considering that there were such high policy expectations for Bitcoin, this could just be a simple function of policy disappointment there as well. But it is something I want to watch, the ratio between these two. If Bitcoin starts to pull off further, it might be a little bit of a sign of risk off for some stocks, but it also might just be crypto world doing its own thing. Bonds to the dollar, last chart, looking pretty innocuous right now. Dollars come off, yields have come off. They're generally moving in the same direction off of the highs from earlier this year. We had a pretty big push in yields and the dollar throughout the fourth quarter last year. That was starting to look somewhat threatening, but not so much, as generally the economic data have not suggested the Fed has to hike or anything like that. But dollar still, I would think, should be quite bid, and the yields shouldn't be going down too far, considering that we still are not going to be able to cut at the pace that Minty wants us to. But overall, it's looking like a pretty good situation for U.S. equities. Kevin Hanks joining us from the SIBO. Kev, a long holiday weekend, so everyone's rested. Looks like bulls got what they needed, so a little bit into the market here this morning. Kind of looks like we want to break out. What do you think?
Good morning, Oliver. Yeah, it's Tuesday, but it feels like a Monday here at the SIBO. So I think this is a classic definition in these markets right now of climbing the wall of worry. And by the way, a little color on the gold move. Goldman Sachs just put a $3,100 target on gold. That's coming out this morning. So that may be why a little bit of the strength in gold futures. But when we look to the week ahead, it's light on economic data. It's light on high-profile earnings. We've got Walmart before the open on Thursday. Besides that, we'll get Toll Brothers after the bell today. And we do get a fair amount of housing data this week is what we'll get, but no really top 6 economic data points, Oliver. But there is some good news internationally. But, I think stocks have benefited from the lower U.S. dollar and lower yields over the last week. Not so much today. Yields and dollar both higher to start the day. Now, the dollar might be... The Reserve Bank of Australia lowered their rates. That may be pushing the dollar higher. But we seem to be, Oliver, climbing the wall of worry here as we digest just buckets and buckets of not only economic data and earnings, but geopolitics as well, Oliver. But stocks don't seem to matter too much. There's been a little bit of a resurgence in the semiconductor trade and chip stocks. Going into, like you mentioned, NVIDIA's earnings now a week from tomorrow. So, yeah, things are starting to get a little interesting here, Oliver. Here's one little stat. On January 14th, Meta Platforms was trading right around between $590 and $605. Now it's $740, Oliver.
Yeah, well, with NVIDIA a week away, Kev, and data pretty light this week. To your point about the market kind of being in a happy place with the Fed and yields and the dollar, the Mag 7 trade warming up, it's looking, I gotta say, it's looking pretty good for a short week. I don't know, minutes? Could there be any real surprise hawkish language there? It seems like that would be the only thing that might derail us, but that seems like kind of low probability. I mean, we've pretty much heard them quite clearly now.
I agree with that, Oliver. I don't think there's anything in the minutes that's going to scare the market. Remember, the reactions last week to the CPI data, and because of the expectations that put in the PCE data coming out next week, has got this market feeling better about inflation, and corporate earnings, let's face it, have been pretty spectacular. With some of the guidance, there's the look forward that we're seeing, and the market doesn't seem scared. of some of the guidance. Now, you've had, NVIDIA had a pretty solid, correction there that it's coming back out of, and now we're in that zone, as you know, Oliver, near NVIDIA's earnings, where the attention and the trading is starting to pick up here in NVIDIA. Supermicro came out a week or during last week and didn't scare anybody. That stock is rallying since then. So, yeah, the market is consuming, digesting a lot of geopolitics and economic data, and it doesn't seem to be knocked off its path, Oliver.
Geopolitics interesting and particularly fun at the moment for sure, but it's something that is like the most tried and true buy the dip catalyst in the history of like time for the stock market. So it's hard for me to get super worked up about that stuff until it really starts to get to like black swan type things. And right now the main conversation for that subject seems to be tariffs, and I know that there's a fine argument that some of that might have blowback effect on the economy in ways that might be negative, but if we haven't priced that in and if the market hasn't prepared itself for tariffs and Trump 2.0, then I don't know what to tell people. So that doesn't threaten me that too much either, I don't think.
Talk and worry about tariffs that seem to not be showing up, Oliver. Let's face it, that all the tariffs on Colombia, Mexico, Canada, they all seem to be slowly but surely being negotiated away, so not showing up. And then the end result, better trade, better situations for the U.S. So at the end of the day, what do we look back on that happened? The U.S. policy on the border and fentanyl and migrants all seem to be getting a little better, Oliver, out of all this. So, yes, there's still things to go with China. There's still things to go with reciprocal tariffs in Europe. There's still some things to be negotiated away, but they just don't seem to be showing up. Now, we do have to watch things like jobless claims, right? If layoffs, if these start to hit the job market, jobless claims might be something that takes a new level of attention to the markets. But remember, that might be confined to the Washington, D.C. area. It's hard to figure that out, but that'll maybe something to show up on the future. But you're right, Oliver. Fed minutes, that's what we're going to get tomorrow about 1 o'clock Chicago time. That might be the only thing that can scare this market, and I don't see it happening.
I think it's the highlight of the week because there's still a robust debate to be had, I think, on the subject of rates, whereas the other items we're discussing seem to have a little bit less surprise potential, but still the negative surprise potential for the Fed speaker seems pretty low. We do have a couple Fed speakers later today. Empire data, by the way, this morning, Empire State Manufacturing was pretty solid, so not a bad start for the economy.
Yeah, they were looking for that to be down 0.5. It comes in plus 5.7. So, manufacturing in the New York area, solid number there.
All right. Appreciate it, Kim Hanks. Thank you very much. A good start here in the morning and the week, prepping us for what should be a pretty light news calendar, one that should be favorable to bulls. Let's talk a fun story here about a little deal potential. The last couple of weeks have been really good for Intel, Jenny, kind of stealing a little bit of the semiconductor story, ironically, throughout all this geopolitical discussion. So what's the latest?
So the latest is that, this has definitely been a hot topic, but the latest is right now we could see some more possible deal activity. This was first reported by the Wall Street Journal, which did claim that Broadcom as well as Taiwan Semiconductor are looking separately at deals for various parts of Intel's business. I think this is interesting, though, the way that an entity of Intel is, this is, again, fairly early talks, so this hasn't been confirmed by other companies, but the way they're selling it for parts at this point shows the demise of Intel to me.
Is GE Part 2, basically.
Exactly, yeah, which has actually been the best thing that company has done in years.
Look at all the way the GE, both stocks did great after they broke it up.
Right, so not necessarily a bad thing by any means. Shares of Intel were initially up about 5% this morning. Now we're up about $1. So, sure, for a $23 stock, that's something. But there had been speculation that Taiwan Semiconductor would make a move to get more involved in Intel's fabrication business, which is first reported several weeks ago. But Broadcom, I was reading a really interesting note out of Bernstein that said they want Broadcom to stay away from that fabrication business because right now they want it to focus more on its various products. And historically, when Broadcom gets involved with deals, we can see some reduced costs, some boosting prices, and they do not want that. So they said for Broadcom would not be a good thing. This is obviously just one line of thinking. But the Trump administration is also expected to potentially challenge this deal given the fact the U.S. government, not under his administration, but they've poured billions into Intel, and it's a very expensive foundry arm. So
Right, yeah.
that I think is interesting, and of course the matter of national security, we'll have to see where this all plays out. This is still so informal, so preliminary, but Intel did close last week as the second best performer in the S&P 500, just behind actually Supermicro.
Yeah, exactly. That's where it gets interesting because you kind of see a very different tone in this story, obviously, the kind of what we had been used to with semiconductors, but maybe it's enough to keep us busy and the group interested in bid before NVIDIA earnings. Taiwan Semi also has been trying to sow more roots in the U.S., so that seems like it makes sense, along with the foundry business. Broadcom's got a history of deals. It's how they built this company, basically hot can through a bunch of deals. They already do a lot of impressive stuff with devices. So, I mean, there's some fits both ways, possibly.
There is, especially because I do think that Intel has been trying to mimic so much of Taiwan Semiconductor's success. It's just been expensive to get there. And last week, we initially saw some enthusiasm tied to comments from J.D. Vance, but then there was also the thinking that Taiwan Semiconductor could come in and sort of help or aid their, which I never believe in companies helping each other. I'm sure it would be some degree of a partnership, but now actually just outright buying its business, I mean, that would be, I think, the most beneficial to Taiwan Semi. What does that mean for Intel, the remainder of its parts? I think is still definitely up for question. But this is interesting because it's the most, I feel like, interest we've seen from companies that are far beyond Intel's valuation right now, and definitely reputable in the AI space. It's the most interest we've seen for like the upside in Intel in a long time.
It seems like, yeah, exactly. That's what I was about to say. The price, too, seems like it's starting to find some momentum.
Price raises today from analysts? I mean,
haven't seen that in a minute.
Exactly.
Yeah, all right. Good. Nice story for us for semiconductors. Something to keep us busy, thinking about possibilities for the group until we get NVIDIA in a week. Thanks, Jenny. Appreciate that. And a big winner from last week, too, with Intel. Looks like I might try and continue it this morning. Thanks, Jenny. Thanks, Kev. Coming back, we're going to talk some international policy and how it is affected by tariffs and more. And a pretty good start to international stocks on the year versus U.S. We'll be right back as futures are looking pretty good this morning. Up about 0.5%, and the NASDAQ Big Tech looks ready to roll.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
One of the big subjects in 2025, of course, has been the tariffs, but U.S. stocks seem to be doing all right with it. This morning, we got futures bid. S&P's looking to make a high. Throughout, international stocks have done even better. Michelle Gibley joins us, Director of Research, International Research at Charles Schwab. Great to see you this morning, Michelle.
Good morning.
So obviously this year we came into this with a lot of things centered around Trump policy. U.S. stocks are trying to break out. International stocks, though, have been faring quite well. So let's start there. Is this just kind of risk on across the board, or is this the market telling us that maybe some of these tariff subjects have been cooler than expected?
You know, we had a similar experience in the first Trump administration as well. And, you know, these policies of America first, you know, maybe it's buy the rumor, sell the news. So far, yeah, we're seeing international stocks outperforming. That might be a surprise. They actually could be a haven from the trade war. And the reason I say that is the three biggest sectors in IFA are financials, industrials, and healthcare, and that's half of the index. And those sectors are outperforming, and that's also maybe a little bit of the rotation we're seeing in the market. Financials in particular may be a haven because they're not directly exposed to tariffs. And we're also seeing, you know, economic data in Europe surprising to the upside. And, you know, for stocks, remember that better or worse matters more than good or bad. And this, you know, just pervasive negative pessimism toward European stocks is, you know, already maybe priced in. The MSCI EMU index, that's the European Monetary Union, the Eurozone, trading just 14 times next 12 months earnings. That's a 35% discount to the S&P 500, trading at 22 times. And yeah, the MSCI EMU index, that's the Eurozone, up tripled out of the S&P 500. Broader developed market index of IFA is up more than double that of the S&P 500 so far this year.
Credit to you and Jeff for also telling us a few times around the election that, hey, we kind of did this before, and there was also a good bit of positive surprise just in terms of kind of economic outcomes and versus
exactly
the real kind of dramatic language and tenor going into it. The other point, though, those valuations on international stocks, that's kind of been the argument from anyone who likes this group for some time, basically. Like any of my guests who like international stocks.
It's 16 degrees outside, and it's windy, very windy. And the snow is starting to come down. You can see it kind of glaze, the wind blow it across the parking lot and streets. So you can see, you know, like waves of snow. But man, it feels like it's just almost too cold to snow right now. There's no saying in Missouri. Wind chill's probably 20 below, 10 below. It has to be. I mean, wind's blowing pretty big. I was talking to the lady up there at the store, and she said you had to call the police out there at Walmart last night because people were starting to fight. I mean, they were acting stupid. It's like they needed directions on where to go. And you had like these open bins where people could go and check out, but they just stood there and look at them. And we're going, come on, can you, there's three of them open. Go, go, go. and the lines were just enormous. So there had to have been some kind of fight or something go on. It was getting pretty bad.
Is it very different than here in the U.S.? And they're starting to, examine that. Like, maybe that's not a great idea. Maybe we could spend a little and improve our economic growth.
And so it begins. Once you turn that corner, there's no looking back. That's a pretty interesting one. So I guess the stakes are fairly high in terms of what they decide there. That's almost like a binary thing, running a deficit or not. That can open up a whole world of possibilities.
I mean, they realize that they have been underinvesting for a very long time. And so, a little bit of a deficit is maybe not a bad thing.
Okay. All right, so that's fun in Europe. What else do we need to be alert to, Michelle? What are the other hot spots in your mind that potentially, for those kind of thinking short to intermediate term, what's up on the calendar for the international side?
Yeah, the other, and this is a little bit further out, but in March 5th, we have the Chinese National People's Congress. That's the big government meeting. We're expecting to hear whether or not they'll provide more fiscal stimulus. Back in September, there's hopes, a lot of promises of a turn, a pivot toward more fiscal stimulus. And so March.
Mike and I walked over snow this weekend.
Some idea if that really comes true.
Okay.
Literally.
For China stocks, so they've had a pretty good bounce. What needs to happen between now and then for that to continue? What have you seen as the main catalyst for the rally in the Chinese equities?
Wolf Research upgraded the stock to 235.
One is the DeepSeek news. I think, for a lot of people, Chinese innovation is really often dismissed and underestimated. And DeepSeek was really a wake-up call that China can be and has been the source of innovation. And they're investing R&D into advanced technologies. And also, if they have more adoption of AI into business operations, that could provide upside to earnings. So that's a positive sentiment there.
Yes.
China looks like it's trying to get back to that recent high, maybe a little breakout potential there as well. So Eurozone, economic data firming up, Chinese stocks firming up. I guess then that's a pretty good combo for international.
Especially for a trade war.
Michelle, what is your main message when you...
Really? Why is China finally breaking out? Supposedly trade war going on. It hadn't broke out like this in years.
Well as
is she right?
Goals. For international, I think most people are underweight. U.S. has outperformed for a long time, and people know U.S. They're comfortable with that as a home bias. But it might be time to take a look at international. In terms of emerging markets and Chinese stocks, they're really volatile. They tend to have a bear market almost every year. So it's, you need to have a high risk tolerance and a very small part of your portfolio there. If we get some changes in sentiment for both business and consumers there, that could boost economic growth. And we had a meeting in the last couple of days between President Xi and the tech leaders there that indicate maybe a friendlier stance toward business. So that's a positive.
All right. International stocks beating the U.S. so far on the year. Great context, good explanation for why. Thanks, Michelle. Very helpful.
Yeah, you are.
Director of International Research.
Google's
at Charles Schwab.
has a knife.
Till the opening bell. We're bringing it back home to the U.S. here. Lost the Dow in futures, but we're still up.
Watch Google here.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize.
So this is what I got support at too.
All at your fingertips.
Right here.
Schwab investing themes. 40 customizable themes, up to 25 stocks.
61086. And here we go.
Morning Movers brings traders the biggest headlines to start the day. From
Sorry, baby, but I got a trade spy here. Randy, what do you think right out of the gate? It run right into my support level. 819, the 613 strike. Or the 612. At 127 right now. Get ready. We're about to trigger my next support level. All this wonderful negativity we're hearing on CNBC. $6.12 at 129. We're about to hit it. We'll see if this holds. February the 19th on my birthday. Birthday play. $123. Whoops, strikes $6.12. $1.25 is what I got. I wanted 123. Snow is coming down to Missouri. Good morning, Mannequin. Good morning, Tony, for one. And YouTubers. Okay, I'm up $100 almost. We got to break my resistance of 610.86. Google
$6,000 kind of aligns once again that channel line to the downside, that purple line that we've been kind of following. But it would not be outside of the norm here if we actually do see a little bit of a pullback, come back, retest the 20-period moving average, which is sitting at around 60-60 right now, and then trying to bounce a little bit higher. You know,
daily.
It's very interesting. Jeffrey Hirsch, who's the CEO of the Stock Traders Almanac, actually makes a note that after President's Day, the Tuesday. 6 out of the 7 Tuesdays after President's Day of the past, 7 have been down days on the S&P 500. So seasonally, we actually do see vol kind of kick up, especially on this day, and history kind of shows that. Now, obviously, history does not have to repeat itself for today's session, but it is something to just be mindful of here as we kind of get into this market. Another thing to just kind of note, too, I'm going to kind of skip ahead here. Another thing to kind of note, earlier this morning, VIX up, stocks up. When you're
got a
looking at
flag
that type of scenario,
on the
right,
SPY.
it was a
We're getting
very
ready to
small
squeeze.
skew, but something to just be mindful of. Do we actually see a little bit of a re-rating in the VIX, which we are kind of seeing that right now, and are we seeing a pullback when it comes to the S&P 500? 80% of the time, we usually do not see that type of correlation where VIX goes up, stocks go up. And if it does happen, sometimes it is call side skew, really bullish, right? Or it could be individuals and institutions kind of picking up hedges right now. So we did have that correlation kind of happening early on. Now we're seeing kind of the break of that taking place in real time.
Okay, nice. Yeah, VIX sitting 15.8. Seems like that floor of 15. I'm reminded of our conversation last week I had with Noel Smith. I know you follow him as well, and his commentary about selling downside out of money puts and VIX and thinking that there should be some kind of a floor. That seems to be holding up pretty decent right now, because even though we're pushing to highs, it's been quite a churn, and to your point, first and goal, stranger things have happened, people have fumbled.
Yeah, that is true. And then also, if you kind of look at the VIX to 3-month VIX price ratio, what's actually very interesting, we're kind of getting to that price ratio low there around that 0.8 level, and that's something to also be mindful of. Look, going into today, let's look at the morning levels on an intraday basis. I think this is going to be key. 61.20. Obviously, we're kind of testing that right now. A little bit of a battle that's taking place to start off the session, but we're not seeing a massive flush yet. If we do see a little bit of a move to the downside, 60.90 is going to be your negative area for today that you really want to hold, and then to the upside, once again, 61.50. I think what we do need to put on the radar, and I do recommend that people put this on their charts, put this on the line on your chart, if you will, or a key level, is actually going to be 61.75. And so this is actually the JP Morgan Hedged Equity Fund level that we actually have here. The short call position that they have is a collared position overall, but the short call is sitting at 61.75. They have around 35,956 contracts at that level right now, Oliver.
Chaos
around
triggered.
$22.1 billion worth of notational value. That could be and probably will be a wall on an intraday basis. Everybody's going to have this on the radar. I would suggest our viewers to kind of have this on the radar.
My alert was triggered.
Now, these contracts do not expire until the end of March. So it's not like they're expiring this week. We do have a monthly options expiration this week. This is going to be for the end of March. So when you're kind of looking at the dealer or the gamma exposure, it's not going to be as aggressive. But if you kind of get a break above that, that's where you can kind of get a melt up scenario here. That's also another line that you want to keep on the radar for this week. We're fairly close to it. So overall, I mean, once again, we're sitting pretty decent if you're a bull right now. Seasonality-wise, it says vol should actually creep to the upside here. It has been fairly cheap. And if we do see kind of a little bit of a re-rating of volatility and equity markets do kind of pull back, 20-period moving average is going to be your area to see some buyers step in.
All right. Like that perspective. Love that there are things to think about in the minutia and the detail this close to records. Good stuff, good eyes. And liquidity, everything seems right now pretty smooth functioning. KG.
Yeah, we are seeing spreads between the bid-ask spread for the E-mini S&P futures is kind of blowing out a little bit. And obviously, we had a little bit of a holiday yesterday, but we have to just kind of keep in mind, usually holidays we do see spreads widening out, but not as aggressively as we actually saw yesterday. So that's something to keep your eye out on. And then if you're looking at the book depth, we actually have seen over the last 3 sessions that liquidity has actually gone down. So liquidity going a little bit lower, or depth getting a little bit shallower, spreads getting out a little bit more. That just means, once again, where volatility can kind of creep back into the market.
I really would have liked to seen that thing break out right there past the VWAP.
Relatively cheap for this time of the year. So overall, once again, we're looking good. But under the surface, there might be some areas to just have a little
Meta's
bit of
pulling back.
We're going to have a fundamental breakdown and a complete correction in the S&P 500. But it does mean that we don't get some conviction.
Google broke out to the upside.
We don't have that news to really try to break us higher. Maybe we stall out, maybe we consolidate, maybe we have a little bit of a pullback before pushing higher.
All right, so a little bit of thinning on that liquidity, but to your point also, according to Hirsch at the Almanac, that usually today's not a great day, right? But so far it's okay, so I guess it could be worse. Nice. All right, love the specific stats of the Trader Almanac. You man KG, thank you, sir. Good look at the technicals and levels to watch. If Mr. Green says put a line on your chart, probably put a line on the chart. Let's go to Diane King Hall in New York. Let's talk some earnings. Let's talk some stories here. Baidu with numbers out. Diane, that's our kind of first report of the week, down 7%.
Spy says bearish
Frustrating
trend.
for those who have been bidding up the China trade to good success in these last several weeks.
It's true. You have seen the China trade, kind of expand, especially like we saw one of the catalysts was DeepSeek. With regard to Baidu, you did see revenue decline at 2%. It was better than expected, though. If you convert that to dollars, that was 4.68 billion. But again, one of the concerns about Baidu is the decline in ad revenue. So ad revenue fell 7%.
Better get out of this trade.
With the struggles of China's economy, it hasn't come back to the degree that many had expected. So that's one of the concerns. And then just, yes, you are seeing some AI growth and cloud growth. You saw cloud grow more than 20%, but it's really not enough to kind of soften the concerns about declining ads. It's AI division, we know that includes the Ernie chatbot, grew. And its cloud expansion is projected to grow, double digits expected to grow 13%, but the idea is, when you hear from analysts, is that it needs to scale faster, especially.
It's been a little bit too long now, and we broke out of a support, but we still have the double bottom.
And the other issue is its positioning
We got a hammer,
within the competitive landscape,
a doji,
right?
a hammer.
For instance, against Alibaba, now we've seen reports that Alibaba is going to be a part of this Apple story with regard to its AI growth in China. And so with Baidu losing out on that, that's another headwind for the company, Ali.
Wow. Kind of a frustration for sure, as there's a lot of competition. So I guess you can't be totally surprised. The world of advertising, internet, and e-commerce is just very, very competitive right now because everybody's launching all their own AI tools to try and get ahead.
Yeah, it matters. And then the other competitive pieces in terms of all the leaders who were meeting with China President Xi Jinping, Robin Li was notably not at the table, the head of Baidu. So then that asks the question is, where is, especially when you have these conversations about proximity to power, whether we're talking about China and the U.S., so if the proximity to power is not there, is Baidu the place that investors want to be?
Okay. I mean, it looks like on the international stage, too, I mean, you're going to have to compete with U.S. companies as well. So obviously there's enough competition within China, and then you stretch across the borders and you run into companies like Meta that seem to have built a fresh new mousetrap for advertising and eyeball attention that's just really incredible. So, all right, let's talk some planes, Diane. Kind of disturbing the amount of airline incidents so far this year, but
I believe the fourth one. So we're watching, obviously, shares of airlines, Delta mainly in focus, off the back of the news of that plane crashing in Toronto. It was a Delta regional jet or turnover, right? The plane landed belly up.
How did it do that?
In this case,
it's like literally the Denzel Washington movie Flight.
Yeah, exactly.
Well, it's not hurting.
In this case, fortunately, all of the passengers survived. All 80 passengers survived. Now, there were 18 injuries, but again, no fatalities. So this is fortunate in the context of, this is now the fourth incident this year. You had the American Airlines and Army helicopter in D.C., the medical jet in Philly, that regional plane crash in Alaska. So this is now the fourth one in the North American region. You are seeing shares of Delta under a little bit of pressure, but this may be a short-term market reaction, and it seems to be, how investors are viewing this. In other words,
they don't care. It won't look like.
Issue. Obviously, there will be scrutiny about safety and regulatory scrutiny around this. It remains to be seen if these crashes that we're seeing now, several now this year, will have any impact to consumer demand, because one of the things that has been beneficial to the airlines is consumer demand has held up even in the face of rising inflation.
Yeah, I do wonder. I was thinking about that last night. Is at a certain point, do people stop flying? I mean, I don't know. I guess you can't really, and obviously, they stand out. It's kind of a statistical, classical kind of behavioral thing that is, 5 is a lot, but relative to everything else, it's not. So it's kind of bizarre. I mean, the market's not also seeming to take much notice either. So
no, doesn't.
It doesn't
it's
right now.
not. I
make a
mean,
difference.
I think right now the market is more looking at the financials, and if this doesn't seem to be like an actual safety, and if these are kind of one-off incidents, that looks like how the market is reading this. If it becomes it's a larger issue, then obviously the market will have a different take, because right now, again, it looks like that. Want to quickly get to some action happening around Southwest Airlines.
Sure.
That's obviously a separate issue. They are doing some job cuts. They're slashing 1,750 jobs. These are from the corporate office. This is the first move of its kind, major move in terms of cost-cutting measures in its entire history. Its 53-year history. They're projecting cost savings of $210 million this year and $300 million
LUV.
in 2026. We knew this focus on efficiency was coming, especially with regard to the shareholder activist activity around it with Elliott. So you could see that Southwest is kind of shifting how it operates in the context of how it operated historically. The shares had been higher in the pre-market. Obviously, this will be one to watch throughout the session. Again, definitely different, kind of setup than what we're talking about with regard to Delta Airlines.
For sure. Southwest needs to try and find something to turn the stock around, as it has been very much underperforming the peers. Doesn't seem like maybe this is the immediate answer according to the market, but a lot of times these types of moves can be positive for the stock when it's kind of in the middle of a weak moment. So, but not right now. It was up earlier and faded, coming back down. One other thing to hit here, Diane. Let's talk some booze, some bud. Yeah, let's talk consolation. Mr. Warren Buffett and team, huh? They want a little piece of the good stuff. I thought he was more a sweets and a candy guy.
I know. I will say I was a little bit surprised by this move, but look, this is the Oracle of Omaha. He knows better than I do. So we got through a regulatory filing revelation that Berkshire has taken a stake in Constellation Brands. You are seeing shares move about 5% higher on the back of this news in terms of what the stake was worth. Essentially, it's worth about $1.2 billion. The stake occurred actually at the end of last year. We know these are closely watched moves when Berkshire Hathaway, Warren Buffett makes these kind of investments. Now, keep in mind, Constellation has obviously been under some pressure this year. They missed on earnings recently. They cut its outlook for the year. And obviously, they also have the headwind facing it because of how they bottle some of their beverages of tariffs.
Okay. All right. Well, they've got other consumer goods, so I suppose that Constellation and Domino's kind of go together from various perspectives. All right. Thanks, Diane. Appreciate it very much.
All right. You got it.
STZ up and needed a bidder for the stock after crashing on earnings. When we come back, we'll talk energy and we will talk Occidental with earnings after the bell. An interesting spot with dialogue from the White House about drill, baby, drill. Probably sounds good for drillers, but if it sinks the price of crude oil, then what's the trade-off? WTI sitting just above 71 this morning. Equities losing their bid. NASDAQ now red.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Carvana's up. They said on average that the day after President's Day is not a good day. So I got more at a buck here. Should go ahead and get out of them right now. Don't think it's going to go my way too well. Unless I get a big spike right here to the VWAP. $116. I got out. Get out. Not yet. I'm taking in some vitamin C right now. I got snow at 189.42, Mike. Yesterday's kind of, you can see Friday at 189.42. It's like a pivot point. Gotta be careful, we're still under the VWAP. I'm offline? How'd that happen? Am I there? Huh. Weather, probably. Break the VWAP. Have a tight stop on this just in case. I know if I sell it, it will pop. It always does it. Shake Shack's doing good. This channel is so much different than CNBC.
For the last couple of months here, support area for the shares at that 105. So I looked at something a little bit more aggressive. Earnings are passed in Exxon. If you take a look at it, it's up only 4% over the last year, off 14% from those all-time highs that we saw last October of about 126. I believe CFRA's price target is about 129. They got a buy rating. So we looked at that same March monthly series, so 31 days to expiration, where I'm going to sell that 105 strike put that's been an area of support over the last couple months to offset the cost on purchasing the 110 strike call in March. So creating a bullish risk reversal or combo trade here where I'm buying the call and selling the put, paying roughly about a 90-cent debit on this, so that takes your break even to 110.90 over the next 31 days. That's only about 2% above the current share price. So you don't need a monster move to the upside, but you're comfortable owning the shares if the stock does fall back below 105, which has been that area of support. You're just looking for this stock over the next month to grind up above that break even.
Okay. All right, so looking for maybe a little more upside here for Exxon, not too far away, $1.11 basically, 110.90. Thanks for the trades. Tom, thanks to Stuart Glickman for the analysis on the energy companies. When we come back, let's talk some housing data. We got housing market index coming. We also have earnings after the bell for Arista, taking a look at the networking business and data center connections.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
I gave up. I got stopped out. It's now noticed.
Schwab Bank
At 110.
Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security.
I said
features
stop.
to
I didn't
keep your
trust it
money
much.
safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for
SPX.
investors.
Spotlight the biggest market trends on Trading 360, 11 a.m. Eastern, only on Schwab Network.
Welcome back to Morning Trade Live. We're in hour 2. 30 minutes into session, stocks have lost some elevation. In fact, we are selling off somewhat notably now, with S&P's down instead of up. So we flipped green to red, not ideal. Still very close to all-time highs. If we were first in goal at the top of the show, well, we might still be within 10 yards, but it's getting a little bit tougher. 61.10 for the S&P, and the Bitcoin trade has softened as well, down below 95 now. So, yeah, we're backing up some of the risk appetite from this morning, but we're talking basis points here, so don't get too wild with it. But, yeah, it has taken a turn for the worse. But you still have a couple key tech names higher, like NVIDIA. Semiconductors still bid, but not much love for them as we faded early strength from some of the other Mag 7 names. The whole group now is more down than up, with the Mag 7 ETF lower by 40 basis points. Okay, so not much else to say there. We've moved about 40 basis points. But if you take it back to the overnight bid, then yeah, it's a decent fade. Energy stocks are up the most right now. We did just talk about Occidental going into its earnings. WTI is firm, holding above 71 bucks this morning. And you've got more sectors up than down. As you can see here, we've got a decent amount of green in the more pro-cyclical categories like industrials, energy, materials, banks, tech still up. Comm services are down though, and consumer discretionary stocks are down. Meta, at long last, finally taking a real hit today, down about 2%. After a just mind-numbing, straight-up move for the social media business under the helm of Mark Zuckerberg. So a little bit of chop and a few of those big winners is keeping the market in flux this morning.
Meta looks nice.
The networking business of Aristonet, with shares up 2% going into earnings. It could be a very interesting one given the volatility in the stock and the big move that it had late last month, when Arista stock dropped big on the
It's
deep
still
sea
up
stuff.
tremendously, but
You had now a little bit of chill enter the space, obviously, and some of those companies that got hit real bad haven't quite recovered all the way, and Aristonet is one of them. So even though Nvidia is back above 140 bucks, there are still some parts of debris in the data center and AI trade, and Arista is kind of one of them. So we'll take a look at that into the report. We're going to look at Meta's chart in some more detail. We're going to look at Kathy Wood's ARK fund, which has been on a really good run since the summer last year. ARK-K, we'll take a look at the technicals. They're trading at the highest since early 2022. And then Chartmaster, by the way, that's with Frank Capillari. I'm looking forward to catching up with him. Chartmaster is going to take a look at earnings for Toll Brothers. and Etsy and Analog as well. So we got some good stuff coming up. Jeff Pierce is joining me now for a look at housing ahead of some of those earnings, as the housing stocks have been under quite a bit of pressure, Jeff. Toll Brothers coming out after the bell might give us some relief to that trade, but it's not happening yet. They're all down this morning about 1%. And we got housing market data that's out. Tell me about it.
Yeah, and to your point, I think this Toll Brothers report will be interesting because they're one of the few that over the last 12 months has been up. They're
I called a pullback on it.
coming into today. But to your point, we've got new numbers coming out from the Home Builder Confidence Index for February. It was down 5 points from January, coming in at 42. If we look at those three focus segments, which include current sales conditions, those were down 4 points, coming in at 46. Sales expectations over the next 6 months fell dramatically, 13 points down to 46. And traffic for prospective
SPY stopped at my support there.
A 3 point decline, to 29. It's worth pointing out we've been focusing on the prices, of course. The
Has a chance of getting back to the V-block.
Builders cut home prices in February. That's down from 30% in January, and the lowest share since May of 2024. Meanwhile, the average price reduction was about 5% in February, the same rate as what we saw last month. And then the use of sales incentives, because we know that that's been an important part of the story as these home builders deal with the elevated prices, whether you look at materials or cost of labor, but they're also trying to incentivize more new buyers. Sales incentives were at 59% in February, down from 61% in January.
Okay, so the numbers obviously are pretty negative, but there's this kind of notion that if the prices change enough, there will be buyers and movers ready to go. Buyers if the price of the home slips enough, and movers if interest rates slip enough.
Yeah, certainly. I mean, look, we're these mortgage rates, up at the levels that they are. If you combine that with the fact that land is expensive, financing for private builders remains pretty expensive as well. It has been a tough go for some of these builders, but they are positioned very well. To your point, we have a lot of sellers out there, potential sellers, I should say, that have this locked-in low interest rate. They're not ready to move. As we see interest rates start to come down, that'll certainly benefit the existing home sale market, but these new home builders as well, because there's still quite a bit of pent-up demand out there. There's not a lot of ways to fill it with the existing home sales, and so these new home builders certainly have the ability to kind of strike while the iron is hot there. And the big question is whether or not they can do that without incentivizing and eating into profits.
Okay. All right. So it's a tricky spot that they're in right now, and I think that the prices of the stocks have kind of fit with the prices of the houses to some extent. With the index coming in below, you can understand why sentiment is pretty dour right now. But it also, I think, is going to encourage a lot of folks.
Definitely
to try
from
and
yesterday's support.
at basically 52-week lows. The home builder index. I like ITB. Some like XHB to get some of the home furnishings and stuff as well. But ITB, the pure look, and he's down near 52-week lows. I feel like a chartist might kind of like the odds of stabbing long down here near $100.
Yeah, I think you're certainly right. There's an opportunity potentially sitting there. I mean, if you look out longer, we still have quite a few gains here. I mean, you look at D.R. Horton over the last 3 years, up 52%. Toll Brothers, that kind of high-end market, up 131% over that same span of time. Again, if we look, we just had DHI's earnings in January. Net income was down from a year ago. Revenue edged down as well, although it beat expectations. We saw total homes closed were down about 1.5% compared to what we saw last year. And their outlook, they really maintain their outlook kind of on the expectation that it's going to have to deal with whether or not we see interest rates adjustments happen. And so I think that's what investors are waiting for, to see what the interest rate landscape is going to be going forward. And then whether or not we start to see people really start to move out of those current homes and see that demand spike and pick up again for new home purchases.
Okay. Good context and analysis. Thanks, Jeff. Like the macro discussion there as well, fitting in with what we've seen in housing stocks and housing prices, with the sentiment in the home builder index coming in light. Let's talk some tech. a little bit stronger, but also some lingering concerns after the DeepSeek sell-off. Arista Networks dropped big alongside NVIDIA and others last month, and it hasn't recovered a ton. Caroline Woods joins us from the New York Stock Exchange. Good morning, Caroline.
Hey there, good morning, Oliver. Yes, about 18% away from those all-time highs for Arista Networks that it had hit just ahead of the DeepSeek announcement a couple weeks ago. But as you said, hasn't really been able to regain a lot of those losses. And there is some optimism, though, heading into this report tonight. Shares are up about 2.5% right now ahead of earnings. So we'll see if that can be the catalyst to regain the rest of those losses. In terms of what analysts are expecting from Arista Networks, adjusted EPS of 57 cents on revenue of
Looks like the SPY is still not,
that would
is
represent
the resistance to break on the,
year-over-year growth. Breaking it down,
I mean
by
the
segment,
VWAP.
the product segment expected to post revenue growth of 22%
On
to
the SPY.
$1.59 billion, and then the services segment up 30% is expected to $298.8 million. Arista had said it expects faster growth in AI and campus markets, but then slower growth in the traditional data center and cloud markets. We'll also pay close attention to margins. Back in November, Arista said that they expect non-GAAP gross margins of approximately 63 to 64%. So it was at 64.6% in the previous quarter, and then adjusted operating margins of approximately 44%. Now, for 2025, Arista has already said that it expects a decrease in gross margins to 60 to 62% due to a customer mix change or changes in the customer mix. So we'll see if they give any updates there. And then in terms of overall for 2025, they had said that they expect revenue growth to decelerate to 15 to 17% growth in 2025 compared to previous years. So that would translate to about $8 billion in 2025 revenue. So just to put that into perspective, in terms of the 15 to 17% growth, it was at 33.8% in 2023. It's expected to be at about 18%. We'll see what they have to say in terms of the revenue number for Q4. But we are expecting a revenue growth deceleration if they provide any updated outlook. So shares up about 2.4% right now, still negative year to date following that DeepSeek plunge. It's still down about 1% over the past or year to date, but then up about 64% over the past 1 year.
Okay. The 1 year chart, your point looks great. Short term, not so much. But also, since it really did align with the DeepSeek stuff, just maybe folks haven't, maybe it wasn't top of the list for people, the shopping list. As soon as NVIDIA dipped, we came back pretty fast the last couple weeks. So NVIDIA back above 140, not quite where it was, but a lot closer than ANET is. Maybe it'll take ANET earnings to, highlight it to people. I don't know. It doesn't, there hasn't really been anything new since that I guess would really change the 1 year trajectory, which seems quite good.
Yeah, we'll have to see if, this is the catalyst that does that. I will say Morgan Stanley did come out recently and maintained its buy rating ahead of earnings, but basically said they don't think that these Q4 results are going to be the key catalyst, just saying that further multiple expansion is on hold until the company shows a meaningful amount of new customers. But they did talk about the underappreciated opportunity in the data center space. So sticking with the buy rating, and I will say the majority of analysts very much view this as a buy. If you take a look, 80% right now heading into earnings have a buy rating on shares. Median price target, though, is only $115, so only about $5 and change, $5.50 higher than where it's currently trading right now.
Okay. All right, ANET, okay, looking all right. And also, we saw Cisco rally through earnings, make highs, companies that have a good bit of overlap here. So I can kind of see why maybe, there might be a little bit of anticipation in a positive way for this today, because 2.5% is a lot better than what we see in the rest of the market.
Yeah, I mean, we're seeing Cisco and Juniper both higher today as well.
Good point.
But Arista Networks is definitely the clear winner with that 2.5% gain. Cisco's only up about 0.4%. Juniper's up about 0.3%. So yeah, we'll see. I'm sure we'll be talking about it tonight.
True. All right, we definitely will. Thanks, Caroline, very much. Appreciate that. Good look at Arista Net. ANET going into the report with a nice rally. Tim Bigham joins us, option strategist at Buy Alerts. Tim, good morning, sir. You fishing for a dip here or what?
I've kind of got certainly my line in the water. in a smaller way. So taking advantage more of what I think is a little bit overstated IV in this name, given that, severe sell-off post DeepSeek, where the stock really just bottomed out around 100 level. Did have a nice bounce off of there, so certainly some buyers stepping in around that area as well. But the upside, as you and Caroline alluded to, may be a little muted as well. The analysts agree with that too. So multiple expansion sounds like it might be difficult from here. So I'm just going out and really being a buyer on further weakness. Options implying about a 10 to 11% move on earnings here. So I'm hanging my hat down around that 97.5 level, which would equate to that lower boundary, and right below that kind of $100 support where it bounced after the DeepSeek sell-off, selling the 97.5, 95 put spread, bringing in around 50 cents or so net credit. So like that return on risk of around 25%, giving myself a nice 10% downside cushion. And the fact that I think that this stock probably will bleed out sideways. The market, as we're seeing today, having trouble making new highs. So upsides may be limited from here, but I think downsides on stocks like Arista and some of the more beaten down names, certainly in this space, probably limited as well, at least for the time being.
Nice. I like that logic, given that the stock had a
UAL, that's something else.
We saw from Cisco looked pretty good too. Even Juniper bounced on the earnings. Rather betting against downside than betting on upside.
Yeah, exactly right. More than happy to maybe be a willing buyer on, further weakness and weakness of over 10%, given the trade structure here, but really not chasing almost anything in stocks here. I think stocks generally getting a little bit, tired and fatigued, and the multiple expansion that we saw that lifted stocks is starting to slow down, especially with the 10-year yield at 4.5%. So I think stocks generally might have trouble moving appreciably higher here. So I favor just kind of using weakness to sell out of the money, put spread strength to sell out of the money, call spreads, play for kind of a range-bound market. That's kind of what I'm doing here on Arista, and given the fact I'm able to sell almost 140 IV this week on earnings, next week trading just under 100, have a very nice term structure vol edge this week for this trade as well.
All right. Looking for, or I should say perhaps angling for a stable stock and maybe a rally.
Yeah, we'll see if they will lure some buyers in at lower levels here to support the name.
Nice. Thanks, Tim. Appreciate the trade, sir.
You bet. Take care.
Selling downside and AristaNet into the report. Tim Bigham, option strategist, buy alerts. Coming up, catching up with Frank Capillari, one of my favorite technicians, to take a look at some of the most important charts in the market. The stock's hanging in there. S&P's a little changed right now after a flip to red. We are now moved by a basis point.
Okay, we're at a double bottom on the SPY now. Give it another shot.
knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Let's get technical. Joining me, Frank Capillari is the founder and president at Cap Thesis, with a thesis on some of the most important charts, of course. Frank, great to see you, sir.
Snow just hit my support.
Great to have you on the show, and especially with the market so close to highs. We were talking this morning, do you get this close and then not break through? What would be the technical, bear case on the third attempt at basically 6,100?
Well, the bear case, of course, would be failing there once more and then rolling over. But, I'm not sure that's going to happen right now. And one of the things I get encouraged by is, you keep on knocking at the door of 6,100, and I think that eventually gives way. And it looks very similar to what we've seen now over the last year. And if you go back to the biggest breakouts, from a technical perspective, we saw it in June, we saw it in September. And both of those times, the same thing happened now where you had a pullback of, say, between 5 and 10%, which we really need to get these sizable bullish patterns to take shape. And it's the only way we can get upside targets we're talking about as well. And so if we eventually do push through that 6,100 level, it would give us a target of about 64.25.
Okay. So that would be pretty nice. I don't think anybody would be complaining about that if we get through there. How do you do your projections, Frank?
It's very simple. We use a measure move strategy, and you can see that those patterns represent what we call a cup and handle patterns. So we just take the height of what got us there, add it to the breakout zone, and that's what we get. And one of the biggest targets that we had in place last year using the same strategy was 6,100, which we got through a breakout of 4,800 last January and finally hit the target in December. So
give it another shot here just to see.
As well, and this is the third one of sizable magnitude that we're looking at over the last, say, 9-10 months.
Okay. If there is rejection, how do we figure out what might then be kind of the corollary to the downside? Or do you just look at all that range and say we're full support below here? We've been testing it for months.
Well, I think we are in a range for that sense, and it's been frustrating for both sides. I would argue there has been shown that people want to buy dips and sell strength. So I think when one of those gives way, eventually we'll see a stronger move to the upside. And so one of the things to consider as well, and once that breakout comes, if it does happen, we don't really need to see explosive moves at that point. Instead, the opposite is true. We track this in terms of two-way volatility, 1% moves for the S&P 500 both up and down on a rolling 12-month basis. And so what we've seen with those previous breakouts, that volatility actually goes down, and it gets pretty boring, but that has resulted in some substantial upside follow-through in the following weeks to months. So that will be the next stage of this. And the other side of it, if we start seeing a lot more big moves, again, both up and down, that would tell us the two-way volatility is still with us, and we probably shouldn't trust the breakout.
Okay. So I think that's pretty about as much as we can do for the index level, right? This close to the highs. Let's talk some stocks.
We got a real tight stop at 85.
Frank, one that you're watching is Kathy Wood's ARK Fund, which has been on a really good run, kind of representing some of that high beta tech trade coming back here. Highest since early 22.
Right. It's been a long time coming, as you know, Oliver, and I think it's an interesting one to look at for a few ways. Number one, it looks very good technically, finally getting through an area of which we struggled with over the last few years. So our initial upside target there is about 75. But I think what's important to realize is that, from the beginning of 2023, it's up more than double what the S&P 500 is. Now, yeah, a lot of that has happened over the last few months, but at the same time, if we're always searching for stocks making new all-time highs and 52-week highs, probably would have missed some of the stocks that are really moving
the ARC fund, right? And so looking at ARC and looking at some of the underlying components, we know that a good amount of them are still way below their early 2021 highs, and we're not looking at that to be acquired anytime soon. But along the way, what can we look for? Bullish patterns forming, breaking out, and having their upside targets hit. And that's really what's been happening over the last few months. So we'll obviously want to see the continuation of that for this advance to persist.
Okay. So this breakout kind of already taking shape, we should assume then kind of continues until otherwise noted. It seems like it bodes well also for the market generally. Because the ARC fund, if we look at that chart again, and it does kind of have this periodic reset with the market, but does in this upward path lead the way to some extent, maybe.
Yeah, I would agree with that. And whether you want to make the case that you see speculation coming at the end of a bull run or the beginning stages of it, you want to see as many areas participate as possible. And of course, that means strong breadth from S&P 500 perspective, but really across the other indices and stocks as well. And again, this could fail.
That triggers I'm out of the trade.
But as long as it continues to take those pauses and use them constructively, as opposed to seeing some strong sell-offs and rejections like we had in the beginning stages of this rally from 2023, I think, obviously we're on the right track.
Okay. Nice, like that. Kind of a forgotten story there that's come back. Good job bringing it to the forefront. Let's talk some Meta. Right, nothing's been as good as Mark Zuckerberg's last month. I mean, we went on an insane, unprecedented string of up days. How does that factor into the technical situation? What are you looking at for this stock?
Well, clearly that's been in the news, and for rightly so. I mean, 20 straight up days, I would say. I don't know how many stocks have done that ever. But I think we got to look at this in a different way as well, because while it hasn't been up this many days straight, it has had 20-day runs where it's been up 20% or more. And we see that on the chart there. And I think that's an important thing, because at some point that's going to stop. But what this shows is, of all the times that it occurred in its history, only one time, that red line, did it occur in a bear market, right, 2022. The rest of the times, it happened during strong bull run. So I think once this streak ends, obviously we have to see how it's dealt with, but from what I'm looking for, some sort of higher low, which sets the stage for the next bullish pattern. So if this is going to continue, that's when we'll look to get involved once more.
Okay. So once you basically run free like Meta has, it kind of, if you are in the camp of mean reversion, then I feel like there's going to be people that want to try and short this thing. Oh, it went up for so many days in a row. But the idea is that it's usually something that's just indicating a very good momentum, good direction.
Yes, so I think there's two ways of looking at it. That's obviously the one way. If you're very short term, obviously it's stretched, right? I said that at day 10 and 11 and 12 as well, right? And so you know it's going to pull back, and I think at that point it's going to be some sort of support discovery. There's no support, right? There's nothing there, but I don't think that means it has to retrace all the way to where it started from. I think at some point there's going to be buyers stepping in once more, and again, what that takes shape as from a bullish pattern perspective, that's going to be important to see.
Okay, so it is it's kind of one that where statistically you have pretty decent odds of stabbing, short for kind of but it's more like a short in the momentum, the rate of change, to some extent, that's going to be very, very hard to keep up just statistically. Hey, Frank, before I let you go, give me a macro thought. Let's talk bonds real quick. I love me some bonds. Give me the 10-year look.
10-year, I think big picture still in a big trading range, and I think the S&P 500 has shown that it can rally in two scenarios. With a 10-year yield in a range like this, or the moving lower, and as we can tell, when it has moved lower from peaking, it's happened at key spots, right? October 2023 most recently, and then again when the market just turned in April.
We're squeezing, so we're going to find out.
We could be at that spot once more, and I would say the dollar looks very similar to this. So if we do get some more weakness in the yield, I don't think it surprised anyone. That could potentially help the S&P 500 now. Have gotten some pushback on that, because saying that the S&P is already at new highs, how can it go much higher? We're just looking at the potential breakout. And don't forget that the S&P did pull back 5%, and many other areas.
That got stopped out right there within a penny.
Much harder. The RSP equal weight ETF For instance, for the S&P 500 was down almost 9%. And so as we saw, when the yield has started softening, that's when those areas started to rally once more. I would think if this is the
Oh,
case,
shit.
we expect some more of lightning with the yield, and I think that will help stocks.
All right, nice. It seems like we're having a little trouble getting through 475. Kind of a little lower
That was close.
highs, but like a margin. It's basically at the last high, but we did put in the lower low. So I guess the idea is it's kind of a negative drift for yields since that record.
Yes, and just again, looking at this the same way as stocks, is this going to be a higher low? And if it is, that could change the whole story once more. You know, if we don't see that, you know, we've been used to seeing come back in to say 4.5 or even, you know, or much lower than that at that point. You know, if that again changes, then S&P may eventually fall 6,100. So all these things are moving and working together. And again, I would look at this as a gauge. Number one, looking at S&P 500, how it can contend with the potential breakout.
Great stuff. Thank you very much, Frank. Appreciate the thoughts. Helping us.
Thanks, Oliver. Always a pleasure.
Yeah,
Well, it's had a pretty good run.
Connections there between ARK and the S&P and bonds, and of course, Meta's statistical anomaly of a rally. Let's look at some technicals for earnings next. We do have some reports tomorrow morning, this afternoon. We can talk Toll Brothers a little bit. Let's get some more details on those next.
Oh, come on, baby. I was within a penny of that thing stopping out.
No politics, no noise. From bell to bell.
No politics.
Available
Yay.
anytime, anywhere, on any device for free.
I love you, Nicole. I think you're a 10.
Plus, get 24/7 live help and access support by
Back to
phone,
even now.
email, and in-platform chat.
We're out of the
Trade brilliantly with Schwab.
descending triangle.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market. Weekdays at noon.
Kevin
on Schwab
Hickey.
Network.
Believe me, when
Horrible
it comes to
name.
investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
That's what I wouldn't like about New York.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Well, I think we at least get back to the VWAP, Randy. Right now it's holding support off that triangle. What's Jenny got to say?
Now for this quarter, though, if you're looking for growth, this is not it because earnings per share expected to contract about 11.5% year over year.
That's
on
what I
revenue of
said.
1.91
Pull back
billion.
on toll.
Expected to be down about 2.5%. Now we are expecting first quarter home sales to have decreased from a year ago, given the
That's
lower
what I
average
said.
selling prices. The affordability issue is a concern owing to right now a higher mortgage rate scenario, with certain markets like Austin, San Antonio, Phoenix, and parts of Florida experiencing softness pretty consistently now due to affordability concerns. So to address this, they've then strategically targeted this more, I mean, this has always been their strategy, but they still strategically target this more affluent segment of the market. I thought this was interesting. Back in fourth quarter, 28% of their buyers paid in full with cash, minimizing their exposure to rising interest
And this
rates.
is the most expensive builder.
Yeah, and these are
So
homes
people are
that,
just dropping mills and bills.
their average selling price for this quarter is expected to fall between $925,000 to $945,000. So yeah,
God.
called $1 million. So yeah, paying in cash in full for that is astounding. This though would mark a decline. Last year, same period, we saw their average selling price was just over $1 million. So incentives have been a double-edged sword because while they play a key role in obviously driving order growth and maintaining sales momentum, right now in this challenged environment with, of course, mortgage rates, economic uncertainty, it's also posed a drag on then their profits and gross margins. So as we go into this year, I think that stability is what's being hopefully expected, but we haven't really seen that from the rest of the home builders who've reported thus far. Although this is to me a totally different
61022.
Is it much smaller as far as its market cap, it also targets a completely different kind of consumer.
Yeah, very well said. I was just looking at the home builder index data from this morning. They're also worried about tariffs that are going to potentially exacerbate things, but it's mostly problems and forces that are already working within housing.
Right.
To your point, which has already brought prices down. Rick, fun chart. Love when these triangles show up. I love a good triangle.
Yeah, and we can see that it's pretty pronounced here, depending on how you look at it. Maybe in certain ways you can see that there is a consistent low point right here at our green line near about 120.77. And probably most people would draw the trend line here, starting with these highs and connecting these subsequent high points to give you this more,
Okay,
as you
we're
said,
coming up to a
triangular shape here.
resistance.
But really, in another way too, it's a range, because you could also argue that
There it
we had
is.
a gap down and a high point there near about 150.54, and then our consistent low point
96.
that we established so far. And these are the boundaries that probably a lot of people would have their eye on for the short term at least. Prices below our moving averages, though, that we follow: yellow 21-day, orange 63-day, purple 252-day exponential moving averages. We are near that lower edge of our range here as RSI continues to worsen slightly, but also perhaps invalidating that shorter-term red downward sloping trend line. So now if we were to look at standard deviation channels and volume profile, we can see that we have fallen below our volume profile point of control, our area of heaviest trading. So that region near 126 could be a resistance area to watch as well, with our confluence of our two moving averages just above. To the downside, -2 standard deviation channel coincides with another
95
volume node.
cents.
So around 118 or so could be a key area to watch as we approach that gap level there as well, near 116.50.
Okay, so that's kind of what I was noting on the chart, similar to IATB, which is down near one-year lows. Toll Brothers still has that kind of upward mobility on the longer-term chart that the broader housing market does not, because I think some of that higher price point just is a bit more insulated to some of these forces we're talking about. And it's already found some support here with a big volume node right under it. I mean, there's worse places to imagine a bounce if the numbers aren't bad.
For sure, yeah. And, this would be a key area, though. If we were to perhaps fall below that point, there's not a whole lot to break our fall until we start to get down here near this much smaller volume node around 111 or so.
Okay, nice. Like that chart. Interesting one. Okay. Let's maybe talk Etsy next. Tomorrow morning. And always a weird one, Jenny. Hard to know what to expect for Etsy.
Jenny.
That was a weird one. I think that not exactly seeing trends favorable to Etsy here, as we did see for the prior quarter, gross merchandise sales were down about 4% year over year.
She don't look too bad today either.
About 4% though. While take rates expanded, growth has been driven by their services revenues with about 6% 6% growth, and marketplace revenues rising about 3%. Gross margins have also begun stabilizing, which is encouraging, but as a result, you look at they're really like the COVID peak we saw in this name and the overall earnings, they've fallen about 40% over the last 3 years. That's not a trend you want to see continue.
Well, we're squeezing now.
Right now, going forward, we expect this
If we can hold this support off the 9,
sales, as well as a reduced active
63.
seller count and perhaps the degree
I'll jump
of
back in
macro
it.
pressures weighing on
We
consumer
break it.
spending. So I was curious because I always think the dynamics of Etsy are so unique to me because I do frequent Etsy and I think I'm like the only person maybe on earth. That's not necessarily true. 86% of Etsy users are female. They have 2.1 roughly million
Etsy.
sellers and about 40 million buyers. And the closest name I could compare it to, even though I
What'd
wouldn't
she
necessarily
say?
make the parallel, but just for example purposes, eBay has 18 million sellers and 133 million buyers. So it's
pretty good ratio.
massively larger than Etsy, which
Pretty
is
good ratio to be a seller.
yeah, it is. It is definitely a good ratio to be a seller, but considering they're just so much smaller than eBay even.
Well, but when Etsy hits with somebody, the sale is probably a higher price point, I think, and I don't know, maybe. I might have just made that up.
No, the 60% of their users are return customers, so at least they're seeing that continued loyalty maybe, but yeah, I think that right now it's difficult to compete in this marketplace where you have Etsy has continued to raise their fees for sellers, whereas like in Amazon, you can be a third-party seller for a relatively lower fee. So that's also, I'm trying to look up Amazon stats, but they're incomparable because their marketplace is so massive. But will be interesting to see how the hopefully improving margins and the story with active sellers continues as right now, gross margin projected at around 26.25%, which would be...
I thought about selling my artwork on Etsy.
Declined from a year ago, right?
When I first started trading, my plan was to trade stocks, sell artwork on the beach, and also trade stocks on the beach. That was my goal. So I started painting. Okay, we broke the 63.
Term, you can see that we've had once again a pretty consistent ceiling around 57, 56.
I mean, I gave a guy what, $5 and $10 for a seashell magnet to put on my refrigerator when I lived in Hawaii. And you'd have beach bums out there selling jewelry and things like that, or playing music. I would have done that too. I had started working on a one-piece band where I had the drum and the snare and my guitar and a horn. And I started practicing doing that about 15 years ago. I was just going to run around and be a one-piece band.
$54 could be a key support area. If we do manage to
my
break
back
above
couldn't
this
take it.
resistance ceiling, there's another small volume node near 59 that lines up roughly with that trend line there. And then here, a gap area did not quite make it to that same area for the high during that rally, but look for perhaps around 63 or so. That would be the general area to consider.
Look at the price
Yeah,
of them
nice.
now.
So Etsy's got a
Well, they're not
downturn it's got to contend with for sure, but the more recent sideways activity here, pretty encouraging. A lot of volume trading around that $54, $55. Seems pretty well supported if they don't, bomb earnings. Then another one that looks decent maybe for finding some support in an otherwise not great chart, like medium to longer term. All right, last one here. Coming back into tech, we got analog devices tomorrow, Jenny.
I think this is the most interesting because of their automotive exposure. And you look at the companies with substantial automotive exposure in the semiconductor world. I mean, like, not great. On Semiconductor, NXPI. I mean, all of these names, Texas Instruments, have not exactly crushed their earnings thus far. So that doesn't exactly paint a super optimistic tone. But hey, maybe the pessimism is priced in at this point because this name, well, it's up about 2% on the year, hasn't really been able to continually break out. And I know we've been stuck in this range, but that's not exactly what you want when you are in an area of the market that's seen as a growth engine. So we've seen now 2 straight quarters of sequential revenue growth, which is encouraging. Automotive bookings have turned in the right direction even after stumbling in third quarter before regaining their footing and hopefully now continuing to level out. But inventory levels are also back to a more manageable state, which is encouraging. But they've also seen a significant rise in the content per vehicle during recent years. I think this is fascinating. 2019, they charged customers between $20 and $30 a unit, and now charging at around $100 to speak to like the inflated cost that they're able, I guess, to get away with. And a big reason for that growth is their leadership in the battery management systems, which are right now pretty vital for maintaining the efficiency and the scalability of various EVs. So there's definitely things to like about this company and the way in which it has somewhat of a niche. But again, I feel like from covering these semiconductor stocks and the chip stocks is all we know is
couldn't break that 610.22.
automotive, and I guess we'll have to see how that shapes out for this company because frankly, based on post-earnings moves from all of its closely related peers, they haven't been good.
Maybe to your point, the market's been having some time to process that, and it hasn't been a great couple weeks going into this. Well, last week was good for ADI, I guess, right?
Yeah, this is another chart where we could perhaps make the case that we have a triangular shape, this longer term symmetrical triangle, very kind of narrow, starting with these respective highs and lows here. By that measure, we did break out to the downside, although we have quickly recovered and retaken the confluence of all 3 of our moving averages. Clustered moving averages suggest that there's not really a clear trend direction one way or the other, but the push above and the subsequent close above all 3 of these levels would be a more bullish sign here. So we could also say that we could consider a potential range here. This high point right here is what initially caught my eye near about 233, but really you could probably draw just a general resistance level going across this area near 233, 234 or so. And to the downside, we never really took out this low point that we hit after our descent from that 52-week high area. So around 199, 198 would be the low point to watch here based on our price activity extremes there, for the near term at least. So now we can see that we are within a volume node here near about 217, so an area of heavy trading. So even though we pushed above our moving averages, now we perhaps could be stalling out in this area here. So the next point of interest is around here, these highs and our volume profile point of control. So perhaps around 229 to 234 would be an upside area to really keep an eye on.
Nice. All right. I think the theme of these charts is downward trending charts with hope for a bounce. It's kind of, I'm thinking. But this one, compared to the other 2, looks like it might potentially also be running into some heavy volume / resistance as opposed to using it as support. So TBD, good stuff, nice perspective. Thanks, Rick, on the charts. Thanks, Jenny, for the numbers. Coming up, a little market meetup discussion. Dan Grant, Caroline Woods join me to talk some bonds and talk some stocks. And we have lost our bid, but not for the small caps, and little change still for the S&P 500.
Well, Amazon took a knife. Cost is down 14 bucks. Cost has had a huge run. Adobe's at 456. It's also had a huge run. These runs, they just freak me out. I don't know if I'd have jumped in on that. CrowdStrike, another one. 20 days from 349 to 460.
Stocks are having a little bit of trouble after an early bid. Equities have faded down.
Lulu.
The way of Caroline Woods. Joining us from the New York Stock Exchange, and Dan Grant, Senior Specialist of Retail Trading.
Down 60
here
bucks.
seated with me in Chicago. Caroline, we still got a few things holding up.
To my support.
Kind of by a thread right now. A good bit of sectors are higher, but it seems like we lost our tech bid from this morning.
Yeah, the overall tech sector pretty flat, and it's just Nvidia and Microsoft of the Mag 7 that are in positive territory today.
I don't know how I got that.
Amazon, Netflix, not necessarily Mag 7, but added to my watch list because it's magnificently performing. They're all the worst performers of that group today. It's a good day for chip stocks, though.
That previous high.
Broadcom, ARM, and TSM. We're seeing strength in
Here's how I got it on the daily.
I know you hit that one this morning, but
That looks kind of
Research,
got me, but I don't know.
like Supermicro,
Oh, what's that other one?
Dell. The overall
Humana.
healthcare sector is lower, but I am seeing some pretty big movers there as well. Walgreens Boots Alliance is a big winner. Moderna, also another big winner. That's actually despite a downgrade over at Barclays to equal weight from overweight.
I don't know about a winner,
In terms
baby.
of some of the losers, the worst performer on the S&P today is Conagra Brands after it slashed its guidance for 2025 earnings.
I got that one wrong.
And Medtronic is not too far behind it after reporting mixed results. Earnings beat, but revenue missed. The outlook was maintained, but this was a name that was
This
trading
one I
at
liked.
2-week highs heading into that report, so just not enough to impress investors.
So I got that one wrong this
You know,
weekend.
speaking of sectors, though, overall consumer discretionary and staples.
CAG. My sister worked there. I wish she would have kept that job, but she didn't. She gets a small pension though. About $300 a month she'll be getting. My nephew worked there and he screwed that up. My crackhead nephew.
About Etsy, Walmart also reporting, so we'll be hearing from a lot of retailers over the next few weeks, and it seems like there's some strength around the consumer today, despite the fact that we're seeing the overall discretionary and staple sectors lower.
Yeah, indeed. I think that's some of those Mag 7 trades are weighing on it, but the food, even the travel, despite planes having so many incidents, the airlines are up today. The Russell's also doing pretty well. I think the message about the economy is pretty consistent here, Dan, across these stocks and the macro, which is that, you know, things are still pretty solid here.
Yeah, and
Damn, there she broke out.
Really don't see any surprise coming here.
Shit, I
The
wasn't
yield
watching.
curve's stuck in about a 50 basis point range right now, and really we're not really finding anything new. Could be some focus on Wednesday's FOMC, tomorrow's FOMC minutes. See exactly what the Fed
Are you
is
looking a little bit
at
better,
for,
Randy?
You know, the consumer right now. Is the consumer feeling pressure right now? According to these numbers, it's not.
Right.
And the S&P 500 is a new all-time high. They've pushed rate cuts all the way out to the end of the year. I see December has got 25 basis points cut in, but it might as well be unchanged between now and then.
It's kind of amazing the message we're getting from all these consumer stocks, as well as the spending numbers that we see. Sentiment numbers generally are strong. And then the other concern that some of these Fed members have, that maybe our policy is still too tight. And then some argue that maybe it's not tight enough. So it does kind of seem like we're at a juncture where there's a little bit of debate happening within the FOMC.
Sure.
Lots of stress for $40.
Needs to be pushed back to the
Yep.
FOMC. That
At least you saved your ass.
They've put all of the onus on the consumer and the economy to slow inflation. Nothing to do with the causes of inflation, which is cutting spending.
Yeah, that's fair enough. Caroline, when you look at the calendar, I mean,
Go with your gut.
Not a lot of big, things this week other than the minutes. So with bonds selling off and the dollar up, it does make us think that perhaps that could be interesting.
Let's talk about the gut feeling.
Housing data, obviously, sort of the
I mean, I've threatened to sell, like if I'm in a bad, go with your gut. Let's start that off first. But there's many times where I would be down and then it would come up and I'd be almost even or just a little bit above even, and my gut would say, God, man, you got to sell it. And then it knifes on you. Right now, you've got that VWAP to hold as a support level. See, I'd be up probably another $100 right here if I held it for $1. I'll be lucky to break 200 today in profit. But I don't know, they ain't over with yet. I'm going to go in there and cook me some soup here in a second. And have lunch. I guess they want to fight. It's too bad. They're dealing with a whole different regime now. I know Israel's got them bunker bombs now. They might got the couple big ones. The 30-ton ones. So I'd be careful if I was Iran. You just got to eliminate them. That's the way it's going to have to end up, and it's sad. How do I feel about grab? I feel it's choppy, a little risky. It's already had a good run. Yeah, if that's true about Iran, I'd be careful. There's nothing new on the on baby. What the heck is that? Yeah, I'd be careful with grab. We did break a resistance. As long as we hold 520. Grab shares are trading higher following Singapore's include 50% corporate income tax, which includes a 50% corporate income tax rebate. That's good news. 50% tax rebate. Grab shares are trading higher following Singapore's 2025 budget, which will include a 50% corporate income tax rebate. That's kind of good news. That's probably why it's up so much. Congratulations, Randy. I'd probably keep going. See, I got out at 110 on those other ones, so I'd still be down on them. I had a 112 average, 113 average on my first trade. But if I would have kept those, I would have been green. If I'd have kept them. The second trade at 85, I had 20, so yeah, I'd been green. Barely. But the way I traded it, I'm more green because I got out, stopped out. Said I was going to stop out if it didn't hold. And I was up, and I should have sold them when I was up on that trade. I was up $80. I was up one time, I was up 90, 100. On the first one. And then I got down 200. So it didn't help. A little hot. And we're back to the VWAP, so this is going to be the retest. Let's still be very, very careful. That's a good call on SMCI, Mike. I called that out way back below, but I didn't buy it. When I should have. When I was down here at 130. That would have been a good trade. Boeing is good to sue. Snow on the pullback. That previous high right there in my alert, bam. Maybe lately it's been good. I was on a roll scalping them indices for a while. 2 or 3 grand a day. I need a dip before I start swinging again. That's PayPal. Yep. They raised it on the 13th. Research CICC adjusts the price target to 95. President Capital adjusts price target to 92. So everybody adjusted their price target up. After earnings too on the 13th. Right around $76, $76.50. Norwegian Cruise Line Holdings collaborate with PayPal. So that's good. Norwegian Cruise Line Holdings expands strategic collaboration with PayPal. And that was on the 12th. That's why they upgraded it. I don't know if I could get... I'd go on a cruise one time, but I don't know if it'd be my kind of cup of tea. I don't like being... waiting in line and being close to people, and it seems like you'd be swimming in pea water all the time. very small pool, so I probably wouldn't use the pool action. I just go there to eat, and then the food's not always the best. You think Spy's gonna go? SPX did. We're about to double top on that one. And Spy's still at 97, the ones I got in. I make the best damn soup in the whole wide world, yes I do. You gotta write a soup song. I think I'll put that to work here this weekend. Okay, it's retested now. If you think it's going to break, I'm going to jump in it. I'm just a little leery of that news with Iran. Trump will get involved. The 612 strikes. We're at 90. Let me look at the SPX. Yeah, let's see what the SPX does. Where are you? SPX. The 730 strikes for the SPX. This one here I'll make a little bit more money on with less capital. I'm going to wait. What's that? I got a bone? What the hell is that? Whatever it is, it's hard. Feels like a bone. Huh. But it's not. I ain't telling you, I ain't gonna eat it. I'm gonna sue whoever made this soup. Damn, I could have got that $4.35 and it came back down to the price. I'm gonna wait. Whatever that was, I don't like it. Yep, I was thinking about swings this weekend. Next time we get, because I missed out on some good money that last dip we had. Tesla was one of them. Right, called that 320 out, and it ran all the way up to the 200. That's $40 in a matter of 2 days. 3. But I couldn't take the trade until it opened. So I've been right around that area. But I did call that 320 area. And then Apple would have been another good one. That double bottom there, triple bottom there. But that one would have been a good one right there last week. There was another one I was watching last week. Apple, NVIDIA, the dip on NVIDIA. I missed that good one. That, you know, that's cheap. 111. Right now we're at overhead resistance. We see we hit the overhead resistance. I called that one out too. Didn't take it. So now it needs to come back down to 127.90 before I'd think about doing that again. Meta. That's the one that really pissed me off. That pullback we had on Meta. Both of them at the 200. And then it just 2.5 week run. Now we pulled back again to the support level, but can I trust it at this high level? I think the market went against Zuck because he was kind of in bed with Trump. And then Baba's the one that really, I wish I'd held all them. I just got shares of Baba now, but I wish I would have had enough confidence to take the swing on options out a month. Let's see what my baby wants to do. Oh, you're not my baby. Dollar Tree.
Amount of volume at the low levels typically is interpreted as a sign that a potential bottom could be in here. So that's a key factor to consider here. Lows near 60.49, like I said, and then those resistance zone levels that I mentioned to the upside, 77 to like 81, 82.
Watching the volume, not too much volatility now.
It's popping.
What's interesting is you think about, you talked about retail sales, and I'm thinking about folks and what we hear from the companies, shoppers, that they're all looking for value. But these did, so that would be something good for the cheaper places, discount places. At the same time, though, they're going to face more in the world of tariffs. If a lot of stuff from China is facing higher tariffs, that could be
Nicole, come on.
Final thoughts here on this name, Jessica.
Absolutely. You hit the nail on the head, Nicole. It's all about balance. And from the technical perspective, it seems like ours are in harmony. I'm looking for this base to form and then a base breakout. And then perhaps we'll see that move to value, and hopefully those tariff headwinds don't come in.
All right, next up we have Dell. And it's fun to watch Dell because we all remember Dell.
She's looking for a husband.
It has a buy rating over at Bank of America Securities, so that was a positive call here. The target is now 150 from 155. Today it's trading at 180.
Damn, girl.
Where do you think this could be headed, Jessica? What's on your mind?
She's got that bedroom look eyes. She got that look.
Look at the technicals and then dive into the fundamentals. That's really my process there. There's some near-term challenges and I think some long-term opportunities with Dell. When we're talking about the AI narrative and we're focusing on the hyperscalers, the big issue is the spending spree that they're on and the CapEx spending and how that's going to translate into revenue. And we've talked considerably about that. When we move on to more of the hardware like Dell, the big issue is server sales and even the demand for Blackwell. Now, there isn't a demand issue, it was a supply issue, and we heard that on the last earnings report for Dell. So Dell reports February 27th. I think any pullback could potentially be a buying opportunity. What I'm looking for is server growth. Last quarter, the AI server sales, they dipped due to the NVIDIA's Blackwell chips. So if they can ramp up on those deliveries and that demand shifts, then that's going to be good. That's going to be good for revenues and good for margins over time. And we were talking about Elon Musk and that potential deal with OpenAI. Now there is a negotiation or works of a $5 billion AI server deal with xAI. So perhaps that could boost future sales as well. So again, my technical level looking for a weekly close above 122. And then from an earnings perspective, I want to hear about that forward-looking guidance, where that demand is for the servers, and any more clarity on that deal with xAI.
Okay, thank you. Yeah, and that's such a big part of it too. Dell, your thoughts here on the charts, Rick?
Yeah, so this is one where we've got kind of a triangular shape over the past, half year, but maybe a little longer than that. But another one where, like our last chart, we are pushing above an important confluence of our moving averages. This time it's all three of the
77
three moving
now.
averages that we follow clustered together, and the faster one is starting to turn upward. Our yellow 21 day slope is starting
did
to
you get
shift
out?
from negative to
Tell me you
positive
did.
here. So that would be an interesting sign for the bulls to keep an eye on there. RSI also improving. Longer term red
Very good.
downward sloping trend line and starting to be invalidated here as we hang on to this crossover above that.
We hit the 200 EMA.
So, as we look to hang on to the push above these moving averages here, when we
And we hit a double bottom right here.
Study, we can see the point of control is here near about 117.50 or so, which is quite close to where price is currently. So if you expand your
I could have got them at 77 cents just a second ago.
a bit going on between about 112 to 118 or so.
What
We
about-
got our moving averages, our point of control,
Gosh.
and our linear regression line here, our line of best fit, all coming together right
Could
around
be
where
just
we
a
are.
sideways
So
day
key
to day.
area to hold. If you're looking for some upside movement here, the next volume node comes in perhaps around 126 or so. Then the post gap down highs near about 129.6.
So that one guy got to talking about, or 88, I'd have made $100 right there. 15%. And one guy was talking about after a holiday, you look to see what the history was of the market. So he helped his odds by using that, and it was not that good. The odds right after the President's Day. Now, Trump's going to be in office almost a month now. And I remember times where we'd trade it in the market when people didn't really want to get too ballsy until after some policies were in, but this guy's working extra fast. I mean, he's dealing against. I heard some stuff this weekend that about the deep state and how a lot of this money was going against Trump that they're finding through that USAID, and that there's a lot of secrets that probably everybody already knows that they don't want to tell us. Using that money to fight other governments, regime changes and stuff like that. So I think it's why Trump's got such a high approval rating right now, because he's exposing it. I don't know if we're going to rip. Certain people can come into our lives and spread their love and compassion. Who's this? Mary Quickstand family. Some people's put in some pretty good money. Just a couple $1,000 donations there. Mary is recently diagnosed with a medical condition. Ooh, woman's going through some hard times. Let's see. Okay, I'm back to 79. I think we break the VWAP this time. We'll squeeze up a little higher. Not much. Well, I'm gonna go make my coffee and I'll be right back. I had my dinner, more or less. I should have stayed in that gym room with them girls a little longer. One was Asian. Snowing outside. There's a blizzard out there. It's blizzard conditions outside. SPX is flagging. Oh, these things got cheaper on me. Oh, that's Meta. Looking at the SPX. What the heck? So on the 18th. 6130s have dropped. We're still under the VWAP. That SMCI on the 1 minute is at the standard pivot point on the deviation or linear channel. Broke the VWAP.
Exchange. And we're taking a look here at Intel. Wait till you hear more. I mean, it was a name that people, really, the shareholders were not happy, but they've had an incredible 1 month. So here to join me now is Diane King Hall of Morning Movers here on Schwab Network. So glad you're here.
Thank you.
And this is a name that obviously people sort of wrote off for a bit.
They did.
We're going to have to wait a while.
Yeah.
But just in 1 month, it's up over 30%.
It's
so
made
big
quite
news
the
today.
comeback recently. We'll see if this is, how sustainable all of this is. The latest move today comes off the back of a Wall Street Journal report, which shows that it is potentially an acquisition target, or at least certain verticals within Intel. And we've got two companies that really have it set on Intel. That's Broadcom and Taiwan Semi. But there are questions about this. I mean, we know that Intel was once a heavyweight in chip making, but it's been struggling for some time and still trying to find its CEO. So Broadcom has reportedly informally discussed a bid for a couple of Intel's units.
I like the idea of Taiwan Semi getting hold of it.
The deal reportedly contingent on finding a partner for the manufacturing arm. it's made clear in this article there's no formal offer and they could essentially reportedly walk away from the table. Taiwan Semi also reportedly interested in some of Intel's operations, namely its factories. They've apparently studied the possibility of taking control of its plants, chip plants, potentially as part of a consortium. They would reportedly potentially
That's a good
retool its
idea.
factories for its advanced manufacturing process. That's part of the process. That could be costly and complex, though. So that is, one of the questions that hangs over it in terms of being an acquisition target for Taiwan Semi. Also, of course, the immigration aspect is a challenge because a lot of Taiwan Semi's engineers are from outside the U.S. And of course,
keep
keep
them
in
in the
mind
US.
that the White House wouldn't exactly be friendly to a foreign entity controlling Intel's factory. So again, it begs the question on what is the right, who could be right at the table here
She's right
now.
there.
And again, even the Broadcom conversations, it sounds like this is not something that is set in stone, but it's certainly meaningful in terms of how investors.
We're coming to the 200 now on the SPX. Now, if you think is bullish, we have a 1, 2, 3 bits. 6130s at 210. If I can get that. Ready, set, go. I'm in at 220. So we'll find out here. $225. Randy. February the 18th. $220 right there. So I just now got in. This is risky. Spy needs to what? Uh-oh. He. Should have just jumped out of him right there at 250. The crowd doesn't know what to say at the sports arena right now. I got an itch in my ear. It just won't stop. I'm at 260 right now. I can make a business decision. Ooh, yeah. Right now. So it's $50 a contract. And now it was. There it is. Give it to me. Give it to me now. 265, I'm out. That's how you do it. That's how you do it. I tried to tell you guys. Oh, there's my 270 right there. Oh, no. Oh, God. Help me. Oh, in the 1 minute. Not the 2 minute. That was very unprofessional. Randy, I'm out. There's my 27. Oh God, 28, 90, 5, 3. No. No. Oh. Oh. Damn it. Shame on you. I thought we were brothers. You got to take the pain with me. Ah. Shit. How disgusting. Mike. That'd almost been $500 right there in a matter of, oh, there it is, 320. That'd have been $500 in 6 minutes. 5.5 minutes. Oh, well. Yep, right there. It'd have been $500 in a matter of 1, 2, 3, 4, 5, 6 minutes. That could have made my day. Oh, God. Did I just see 350? You still in them, you dog? The man that almost shot his postman? I seen it. Okay. Shit. Why would I get out? Because I hit a double top. That's why. I gotta have my VIX showing at all times from here on out. How can I do that? Let me see here. Oh boy. Fuck. Mm-mm. Mm-mm. Oh gosh. You know what I'm in the mood for? I'm in the mood for a classic commercial. I've got one in mind.
We are farmers, bum 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 bum.
A double pleasure's waiting for you. A double pleasure for double income. A double great feeling, making you realize double is the one for you. Double fresh, double smooth, double delicious to chew. A double pleasure is waiting for you. Double income. A double pleasure is waiting for you. Double income.
Anybody remember them commercials? Double pleasure, double for you. Well, 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 well. Don't leave, Randy. You might be missing out on another good trade. Double pleasure, double mint gum. The crowd's going wild at the sports arena. As I look at the VIX, we're now at 1545. Oh, who's this?
I think it's better run. It doesn't have the debt problems. And so that's a name that I personally
Oh my
own
God.
and that I continue to feel is a good opportunity in that sector.
Yeah, and look, while the Occidental Petroleum earnings are set to maybe report an earnings drop, we are seeing the stock up 1.5% today. You know, Warren Buffett and
I would trade with her
Berkshire
any
Hathaway
day of
team
the week.
Still showing, obviously, their faith in this company for the longer term, not taking today's earnings as a, let's see, we'll have to see it because it's coming out after the
This guy here,
All right,
yummy,
thank you
yummy.
both. Larry Tentarelli.
I might grow hair on my
from
head.
Daily Trend.
Shayna Sissel of Bannery and Capital. Thank you both. Thanks for joining us, friends,
Damn.
here on Trading 360.
Put her back on.
Hello, ladies. Download our free Schwab Network app. It's available in the Apple App Store. Tune in 24/7.
Where's the knife?
SchwabNetwork.com. I'll see you at 2 o'clock.
Okay, get ready.
Join me then.
This is what I've been looking for. You don't think I'm kidding? You just watch and see. You think I'm kidding? Trade with me. That woman brought me excited. I think she was wearing her frickin' nightgown. I really do. She had one thing in common that I have, and that we trade in the dark. I mean, I got a sheet over my shades, so the light won't shine in. To help my Minatolan out. I kept a log of one of my night's dreams that I had last couple days ago, and I'll tell you about them here in a bit. I sent them to this chick, and she ain't wrote me back since. Okay, get ready. Christmas is about to happen. Christmas is about to happen. So let's get serum here. We're going to take the same calls. Here we go, right here. You ready? On your mark, get set, go. Back in it. Got 3 contracts at 2:30 instead of 5 this time. Double the pleasure, double the fun. I'm in love with that check. It don't take much for me to get excited. The double pleasure, double your fun. No. Now I'm going to add here 2 trades is better than 1 at 2:15. Off the 200 EMA. Okay. There's the trade. Ooh. Add 3 more. $195. $1.95. Now you need to bounce up. The crowd's going wild at the sports arena. Don't ever let a woman influence your trading. You could be in a heap of shit. The VIX didn't move that much for that knife. It's a Delta burn. I've got an average of 213. Merck vaccine in case of ties to HHS Secretary Kennedy delayed. Merck agrees to halt ongoing trial over HPV vaccine in Los Angeles. Ukraine's postponed visit to Saudi Arabia in order to not give legitimacy to the U.S.-Russia meeting. Okay. Screw you, Ukraine. You got to remember, Ukraine is one of the most crookedest countries in the world. They were named that anyway before Biden got involved and gave them money and bribed them. Okay, I'm about even on this trade. Ouch. I got to break the VWAP. And where's that at? There it is right here. Now I'm green. Let's have a big pop. Back to the 200. And here it would be the 21. Another inverse head and shoulders right there. Double your fun. Oh God. The VIX is at 1554. I got a frothing machine in the kitchen. Makes the best froth. This could get nasty. Oh. There was a huge delay in the VIX when that knife came. By at least 6 seconds. Well, I don't know if I want to. I'm not going to add nothing to it unless it gets real cheap. Boeing pulled back to the pre-market high. So that would be, the VIX had like a delayed reaction on that knife. Zelensky doesn't need to be in NATO. There it goes, double bottom. I didn't expect to be stopped in there. Break out now. Break the 9. Oh, here's Mr. Spitface.
Friday and consumer sentiment data on Friday. Besides that, Tom, this isn't going to be a week driven by high-profile earnings or top-tier economic data. We're going to have to find other things. Now, so far this week, we have found other things. But, you know, when you see a look at the list of names coming out with earnings, and it's the one that sticks out is Walmart, right? And then, yeah, we got Fed minutes that is a stale rhetoric from a couple of weeks ago, but still seems to always move the markets, Tom. And so, yeah, the PMI data on Friday will be significant. Besides that, there's not a lot, which means, you know, the market in one direction without a change tends to stay in that direction. I think that's one of the reasons we opened higher today, Tom, because there's not much to get in the way of this market unless something comes that we don't see on the calendar.
Yep, I agree with you there. Nothing to really stop the rally, but it is off of session highs. Real quick, KG, before I let you go, housing data came in below expectations, kind of reflective of what's going on with, you know, that.
We got the 63 now.
Near 7%.
The 63, and the VIX is still at 1554, dropping just a little bit. Come on, Kevin, give us some good news.
Starting to see some inventory actually hitting the market, which would drive prices down. And if you kind of look at last month's numbers, that kind
I don't like working this hard.
I think that's going to be on Friday. We get existing home sales. That might be key. But housing market as a whole has been seeing some pressure. But I'm not sure.
I did get out of the trade, so I should get a good grade on that.
Maybe you can go down a lot more from here. But I think the new home builders are definitely getting a reality check when it comes to valuations right now.
Yep, definitely. And we're going to talk Toll Brothers after this quick break, which is off about 28% from all-time highs that we saw just in late fall. So we've seen a precipitous fall in those housing stocks.
Precipitous.
Especially Toll Brothers. All right, let's take that quick break. Come back, talking Toll Brothers into their earnings after the close. Stick around.
I should have took out my shoes, but I have not. I think after this trade, I'm going to go back on the tread. Does anybody want to see what kind of socks I'm wearing? Today I am wearing brown with white stripes, and looks to me like some kind of fowl, like a goose. Socks. Ain't they pretty? Well,
whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Fast Market here on the Schwab Network. It's time to talk more earnings. We're covering the housing sector. Home builder Toll Brothers has fallen pretty sharply from those all-time highs that we saw at the end of 2024. Let's bring in Caroline Wood, senior markets correspondent here. Caroline, it seems just from the price action that we're not expectations aren't elevated at this point for any of the names within this sector, especially Toll Brothers, which is at the high end of the pricing, right?
Yeah, certainly specializes in luxury homes, and shares under pressure ahead of earnings tonight, down about 2%. But as I heard you talking about, we're seeing really weakness in home builders overall. This, of course, after builder sentiment plunged to 42 in February. That was down 7 points from January and the lowest level in 5 months amid, some tariff concerns, also obviously elevated mortgage rates and higher housing costs as well. So we're seeing really home builders in general under pressure today. You talked about some of the weakness that Toll Brothers has seen. It's down about 11% this month, down about 4% year to date, 28.5% away from those highs. But that being said, if you zoom out and look at the 1 year chart, it's actually up about 16% over the past 1 year, and it's one of the best performing home builders over the past 1 year. So many others are actually in negative territory. If you look at Lennar is down more than 20%, D.R. Horton down 11%, KB Home and Pulte up less than 1%. So it's actually still
Not looking good
in terms of the 1 year chart. In terms of the numbers that we're actually looking for from Toll Brothers after the bell, adjusted EPS of $1.99. That's lower than the $2.25 that Toll Brothers posted in the year ago period. Revenue is also expected to decline to $1.9 billion. It was at $1.95 billion in the year ago period. Toll Brothers said it expects first quarter home deliveries to be in a range of 1,900 to 2,100 units at an average selling price of $925,000 to $945,000. So that's a decline from the year ago's million plus average price in the same period. But that's what Toll Brothers has already said that they're expecting for the full year. This is the fiscal first quarter. For the full fiscal 2025, Toll Brothers expects to deliver between 11,200 and 11,600 homes at an average price of between $945,000 and $965,000. I will say I have seen analysts call that guidance conservative, so let's see if they're able to beat, at least in terms of the first quarter. Toll Brothers has said that despite geopolitical turmoil, inflationary pressure, and higher mortgage rates, that demand for their homes continues to be solid through fiscal 2024. They said the market for new homes, and in particular higher end new homes, has continued to perform well. So let's see if that's the case in fiscal 2025. But yes, the bar isn't super high based on the fact that shares are down about 11% in February alone heading into this report, and down 2% today.
Yeah, Caroline, this feels like, because of the numbers they put up in full year 2024, 10,800 homes in 408 communities. I mean, their average price in 2024, 976,900. What was the data that I got? And this is, remember, they have a more resilient customer base. A lot of their homes are bought for cash, and they seem to be in a more resilient level, but you don't know that from the price of the stock, and you wonder how important, number one, interest rates, and number two, the sentiment left from higher interest rates is affecting this name, because boy, the numbers they put up looked pretty solid. The only thing that doesn't look solid, Caroline, is the chart on the underlying.
Yeah, and I will say analysts are still very bullish on this name, despite the fact that the chart has failed to impress. If you take a look at the breakdowns, they're pretty mixed, but I would say skew bullish because almost 60% have a buy rating, about 58%. The median price
Come on,
target
Jimmy.
is 62, so that's about $40 higher, a little bit more than where it's currently trading. So overall, there's still a lot of bullish sentiment on the street that Toll Brothers, can turn this stock price action around. And the numbers have been solid in the commentary. As I said, was also solid in terms of that resilient higher end consumer that can afford $925,000 in cash for one of their homes at the low end there. So I think that obviously we'll also pay close attention to backlog when it comes to Toll Brothers. They ended the year with about 5,996 homes in the backlog, and that represents about a little less than $6.5 billion in terms of backlog. So those are both declines as well. So I think that potentially a slowdown expected, but we'll have to see what's actually priced in at these.
I used to watch this guy that sold them Toll Brother homes.
How much the stock has been hit.
Yeah, we're going to continue to watch the story.
Oh,
because,
uncensored?
Who wants to sell their house and pick up a 7%, interest rate on the 30-year?
But if they're buying in cash, then that doesn't matter, right?
Well, we'll see about that. I think those numbers are supposed to
country ranked
decrease
third
also.
among
All
the
right.
nations
Great
with the
stuff,
best
great
cuisine.
discussion. Thanks to Caroline Wood, senior markets correspondent here, breaking down Toll Brothers. Let's bring KG back in to this discussion. KG, we're in bear market territory with the stock down 28% from those highs that we saw at the end of last year.
I need you to break
But it's
out,
kind of
buddy.
reflective of the housing market. Nothing's moving right now. And remember, even if you're not buying with all cash, a lot of these home builders have had to give breaks to buyers on those interest rates, so that starts to hurt margins, right?
Yeah, they do. And with Toll Brothers, they do actually have a financing arm that is leveraged a lot when it comes to
Uber having a good day, yep.
allow cash buyers that are out there too. So obviously it might have squeezed margins, and maybe there
Expanding
was
in Europe.
a secondary market that was willing to pay a premium for the paper that they were selling as well. But the valuations were a little bit stretched to the upside, and now you're starting to see it kind of come back down. It's trading at around, let's say, 9 times forward multiples here, but it's not outside of the realm of possibility. It gets down to around a 7.5 forward multiple. Now, from a technical standpoint, it's actually kind of in a little bit of a make or break moment here. If we kind of break down lower after these earnings, there is actually a gap we have basically since July of last year, where you're sitting at an area of around $110 to the downside. So momentum right now is really showing that maybe this bearish, price action may continue, but the bar is fairly low. Going to be very tough year-over-year comps, though. Now, that one tailwind that they might have, and this is a kind of unfortunate situation, they're a major builder in California, especially when you're looking at the Los Angeles area. So if you do see maybe some remodels, or if you do see maybe some new builds that are going up that might be covered by insurance or what have you, they might be a direct beneficiary of that. It's an unfortunate situation, but I'm sure they probably will mention that geographic region on the call because they have a massive amount of exposure geographically when it comes to the Los Angeles area.
Right, and option market price in about a $6.70 move either way. How do you want to look at this one from an example trade?
Yeah, so looking at that move to the downside and break at that 120 level, I actually am looking at a bearish put spread here. Buying the 121 puts expiring this Friday, February 25th, selling the 115 puts, doing this for a debit of $2. Max loss is going to be the debit paid, $200. Max gain is going to be the difference between the spread minus the debit paid. So max gain, $400 with a break-even point of $119 here. Once again, this is more of a trying to capture alpha to the downside if the stock is going to break, but also is risk defined if we do see the stock stay where it is at right now and or even move higher, knowing that max risk is sitting at around $200 gives you pretty much 2-to-1 risk-reward ratio.
All right, let's break this one down. Really short-term positioning, earnings type example here. Buying the February 21st monthly 121 strike put, sell the 115 put, bearish $6 wide. Put vertical, you're paying roughly, we've got $2 debit on here, $200 in risk on it. It's trading closer to 220 at this point because
You gotta sit around here and watch this.
A little bit lower, but if you pay $2 debit, 119's at break even, Kev, on this one to the downside. Straightforward, bearish move here expected, but you do need that move. And Kevin mentioned on the charts that 120 level has been an area of support, and we're near 7-month lows.
Yeah, I see the same thing Kevin does. I see a lot of activity right around $120. This spread is representing a break through that. And buying the 121, selling the 115 is a $6 call vertical. I think I got that right. $6 call vertical, spending right around $2 with the hope to make, obviously $2 can turn into $6 or close to that, Tom. So, yeah, this is playing for the break through the support there around 120. Pretty aggressive trade here.
Yep, and Kevin, or KG on this one, it's a 6.70 move, or $6.70 move. Option market's pricing in. This sets up for that 115 to go with that one standard deviation on this put vertical here, but it gives you some flexibility too, because you've got 3 days to expiration, but you're buying the vertical, right? So if you get that initial move down, it gives you a little bit more opportunity to maybe get out if the market's open early, right?
Yeah, and 3 out of the last 4 earnings announcements, we've actually had more of a realized vol move for the stock rather than what's been priced in here. And looking at that short strike once again, kind of looking at the technicals, that 115 is sitting right there in the middle of a gap. And if you are a believer that gaps, once you try to test the gap, they're going to be at least filled or at least tested for the most part. That kind of gives you that void for the downside. But once again, getting a little bit more flexible when it comes to any type of reversal in price, or if the stock does not move at all and it's sitting at around 121 right now, probably lose a little bit because of IV crush, but still manageable even if you don't see a move to the upside, or you don't see a meaningful move to the downside.
Yeah, that break even 119, just over $2 below the current share price. So well within the option market pricing for a one standard deviation move. All right, thanks to Kevin.
Go outside and look. I'll be right back.
We're going to break down markets and Toll Brothers. Coming up after the break, we're going to be joined by Landon Schwab from Lightfolio for a look at sentiment data in Carvana. Used car seller stock is up 400% over the last 12 months into their earnings on Wednesday. Stick around.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms.
Break it.
Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical
Difficulties.
Carl.
I'm experiencing technical difficulties.
Schwab, a modern approach to wealth management.
For us to become bullish, we got to break that 200 EMA. Almost added another bunch there at 125, but I did not. That would have really made a huge difference.
Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's Landon Schwab.
Sell-off's
co-founder
been brutal.
of Lightfolio.
Came back to a
Welcome
double
to the show,
bottom.
Landon.
Lower.
Thanks. It's great to be here.
All right. So great to be a Carvana shareholder over the last 12 months. Also, the stock has rocketed about 400% higher. Now, you guys, we've covered this stock over the last couple of years. and you guys have nailed it as far as your data goes and what that is stating at this point. There was a short report out of Hindenburg at the beginning of the year, and if you shorted it then, you've gotten your face ripped off because the stock has continued to move up to 3-year highs. I mean, are you guys still seeing that same data? It just seems like some of the previous numbers that we looked at with you, it just seems skewed compared to some of its competitors as far as how much they make per car.
Right, it's wild. We're trying to figure that out, frankly. But yeah, I mean, it depends on as far as that shorts.
The markup is huge on them used cars now. They don't need to be that high, but they are. And I blame Joe Biden for that because of his push for EVs. I was telling everybody, you watch it. And they said, no, they're not going to go up that much. And I said, you watch. If you need a good new car, you better used one. You better get one now. And they, well, we ain't worried about it.
Last quarter, the sales are up 30% year over year.
I went
the
used car shopping and I couldn't believe the prices.
And they, one of the things that I think got people excited is they talked about the fact that they've got 1% market share right now, and it's a big market. So obviously you start thinking, well, what if they get to 10%? What if they get to 20%? And
30.
Multiplication starts happening in your head. Now a lot of that is priced in clearly. A lot of that is priced in. So I think that people have to understand that if they 5x their sales, that doesn't necessarily mean the stock price is going to 5x. But they've done a lot of cost cutting. They've done they did some debt restructuring their operations to become more efficient. And so it's just been a good quarter for them. And when we look at the data, it's still continuing. Their web data is strong. People are visiting at a much higher rate, plus 20% on a year-over-year basis. And you compare that to CarMax, they're losing 7% on a year-over-year basis. So they're beating their competition. Their profit per vehicle is insane compared to CarMax. I mean, I think it's about 3x what CarMax is putting out. So they're
3x is what I said. 3.
They're actually boosting inventory to meet the rising demand. So this is very high expectations going into this one. Of course, the shares are at all-time highs today, or hitting all-time highs today. So the expectations are.
I called for a pullback.
It's tough to meet these expectations, but everything that we've got shows the company's doing really well. This is the chart that you were kind of talking about, like how are they making so much compared to their competition? It's incredible, and I think this is what investors want to see. They've also got some rising interest from their NASCAR collaboration, so I wouldn't be surprised if we see more popular events like that being promoted from Carvana. But just overall, this is a company that's just done really well. And frankly, personally, I didn't see it coming. Like the data said it was coming, so if I believe the Likeflow data,
Spy's got to break the VWAP.
I don't know about this company. It's kind of it's weird. It's got the vending machine. They grab your eye when you're driving down the road, but what kind of business is this? And they're proving the doubters wrong with fantastic numbers. And like you said, short sellers are in pain, and longs are loving life right now.
Landon, if you look at the 5-year chart on Carvana, it shows they have some room that the stock can still run. The 5-year high is $376, almost about $90 higher than where it is now.
Oh, yeah?
I'm going to give you a bunch of positives, Landon.
I didn't think about that.
Big wet blanket on it right at the end, so brace yourself. Used car sales are rebounding. Why? I'll give you a theory on why used car sales are rebounding. How about back to work? And people need cars, right? You see it in the CPI data. Used car sales used car prices were up 2.2% last month as return to office. People probably need cars.
Shit.
We've got a new
Maybe I was wrong.
Facility with Ally Bank. The Hindenburg report seems pretty much dismissed, although we don't know about that. Auto loan defaults are plateauing. These are all good things. Now, here's my statement. I am not a car dealer or a car analyst, but I have a friend in the car business. And when I told him the number that Carvana makes per used car sold, he looked at me and goes, no way. There's no chance they make that much money per car. So I don't know what to think, but something here isn't as it appears, Landon.
Yeah, I think that's what, That's what I think is giving people pause, and that's why I think that Hindenburg research report had legs for a while. I mean, that's what drove the stock down nearly $100. Is that it's been a head scratcher for people. So if you can come out with anything bearish that somewhat explains or just throws some doubt on the company, then I think a lot of people are going to jump on board. Now we may, years from now, we may look back on this one and be like, wow, obviously they couldn't have made that much money per car. This was the reason, right? We don't have that information right now, and I guess investors are telling themselves, and I think it's reasonable. Well, if they're reporting it, maybe it's actually true. I mean, I get it; it's an insane number, and CarMax is probably looking at them like, how can you make $7,000 per car? And it's So I'm not entirely certain. I'm not in the business, so I can't claim to know. I can just tell you what the data says.
7,000 per car.
Happy with the product.
That's more than 3.
Moving there in significant numbers. I mean, again. We're looking at.
I thought it was 3,000.
7% year over year. Carvana up almost 20% year over year on web visits. That's a significant move, and it's not just a macro trend.
That don't sound right either.
Direction, right? Like I do believe that there are macro trends going that way. I think that used cars are finally kind of normalizing after all the COVID lockdowns. And like you said, back to work is pushing people to actually have to drive now. So. Yeah, absolutely. I think there's some trends, but it's not just trends, because if it were, then CarMax would be on the positive side. This is them differentiating themselves and saying, we're better at this game than CarMax is, and we're so much better that we deserve this really
$7,000 a car.
Price. So far, Wall Street's buying it, but I think they're looking for any reason to dismiss it, which I think that Hindenburg report shows. So if there's any kind of weakness coming into this report, I wouldn't be surprised if it sold off big. I don't expect any weakness. That's just kind of my, just a warning there that if there is any weakness, I think people are ready to bail on this one. But
it might be right after all, huh?
From it, and so here we still are bullish.
But I didn't know it was 7,000. I thought it was 3.
Maybe we'll get those all-time highs again.
Yeah, nobody wants to sit in a car dealership going through all that paperwork. Maybe that's part of it too. The ease of just getting the car delivered to you. We don't have to sit there for 3 hours, even if you're paying cash. Landon, what's the earnings score on this one? Because it's overbought on a technical basis, but it has been quite a few times over the last year.
I put my magic on this one.
Right, so we're actually at plus 22, which is just on the side of we're willing to take a small bet.
140 down here at the
I know. I mean, I look at
21.
This and I'm thinking, God, the expectation's got to be so high. The stock has run all the numbers are out, and it's got to be perfect. But I based on the data, based on all of this, where consumers are happy and they're continuing to move to this company, we still think there's a little bit to the upside here. Warning being, stay risk defined, because if it goes the wrong way, I think it goes hard the wrong way. But we're still betting bullish on this one at plus 22.
All right, great breakdown, great data as always, Landon. Have a good day.
Thank you.
Have a good day.
Kev, I'm not surprised. Right when they send the data to us, I kind of took that, because I know we talked about this name about a month and a half ago. In the basis of that short report that came out of Hindenburg, which has pushed back to 3-year highs on this one. How do you want to look at it from an example trade?
Yeah, Tom. I'm looking at still a name that's in overbought territory, that's had quite a run. So color me a little bit skeptical here, Tom. Okay. And so what I'm going to do is something in the complex trade category, where we do it a lot on this show. Sell an upside, call vertical to purchase a downside put calendar, Tom. So here's what I did. In the February 21st expiration this week, I sold the 320, 330 call vertical, right, in paper money. And then against that, I used that credit to purchase the 1 week, February 28th, February 21st, 250
and my thing frees up on
calendar. So that complex trade, all 4 sides, comes out to, I put it in about a 70-cent credit. It's trading about a 90-cent credit now, Tom. So it's trading a little higher than that. And this is one way to play neutral to bearish. However, remember, when you do something like this, you've got risk. And you're selling a $10 call vertical. Now, it's significantly above the where the stock is trading right now. But if it were to break 320 and go towards 330, you have the difference between $10 and the credit that you take in. So if you take in 70 cents, it's $9.30 in risk. If you take in 90 cents, it's $910 in risk, Tom.
All right, let's break this one down. Four-legged complex trade, as Kevin mentioned, customized. Let's go to the February 21st weekly or monthly cycle, so expires in 3 days. Sell the 320 call, buy the 330 call, short $10 wide, neutral to bearish call vertical. That helps finance the purchase of the 1 week wide put calendar here, where you're buying the February 28th 250 put, selling the February 21st monthly 250 puts.
I think I'm about selling here.
We've got a dollar credit on here. It's bouncing all around. I think the midpoint's around a buck right now. But if you do collect that dollar credit on it, that takes your break even all the way up to 321. So while this looks like on the risk profile, it's setting up as a bearish trade, you still have a little bit of neutrality here. You can go all the way up to 321 and still be profitable on this.
The cost average down too, but I don't know.
On this one.
Might sell
now,
them here.
On their risk profile, you see the apex of profitability at or near that 250 strike. That's about $38 below the current share price in here, and that sets up with that one standard deviation move that the option market's pricing in right now at about $39.50 either way on this one. Now, Kevin mentioned that there is risk on this trade.
Even
that's
right now.
330, right? Because you take that dollar credit, subtract it from the $10 width of the short call vertical, you got $900 in risk above 330. But because you collected a dollar credit, if this thing goes down 2 standard deviations, you mentioned, or we mentioned what Landon said, that if it does fall, it could fall sharply. It could fall 2 or 3 standard deviations if it's a disappointing report. But because you collected a credit on it, no risk below that 321 level on this one. You've got some assignment risk on that short 250 put on the February 21st weekly option or monthly option.
I don't know if I sell them, I'll be
expire on
screwed
Friday,
again.
so keep that in mind also. So good look at a complex trade. Looking for maybe a little neutrality, maybe a little bit of downside on that example. All right, let's take a quick break. When we come back, we're going to take a look at Arista Networks. The networking company stock is up over 60% over the last year into their earnings after the close. Stick around. Fast Market's coming right back.
There's no being nice today at all. $609.73 on SPY. Damn, if you called that, good job.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices.
We'll get out of this trade. I'm going to be taking it real slow from here on out.
Anywhere on any device for free. No place better than the Schwab Network.
Just if I'm having a hard time. Oh, God.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Arista Networks ahead of earnings, let's get a quick market update. Stocks continue to gyrate around the flat line. Benchmark S&P 500 now up fractionally at 0.05%. Dow off nearly 80 points. NASDAQ 100 still slightly in the red, and the Russell 2000 leading to the upside, up 0.4%. That's even with the dollar and yields higher. Surprising small caps up on that little rotation trade. All right, let's talk another stock that reports earnings after the close today. That's Arista Networks. One of its biggest competitors, Cisco, had a pretty good report last week, and the stock popped on that. Maybe that's going to hurt ANET. Competition heating up in here, but the stock's had a good run over the last 12 months, up 65%. Let's bring in George Tillis, Senior Markets Contributor here.
George!
Let's break this one down. George, is this all boats are going to rise in a rising tide as AI build-out continues to expand? Or is this, this may be competition where Cisco's doing better than ANET and maybe ANET doesn't do as well? What's your take?
I think it's possibly a combination of both of those factors, to be honest with you, Tom. I mean, if you look at the stock price first off, it's, looking at around the 24th of January, it's trading around $134. So it's down, about, a significant amount since that point in time. But Cisco did print some really nice earnings and top-line sales growth numbers. AristaNet is also, one of these legacy players in network gear. And of course, white label broadband products. And what's nice about their products is they're sort of agnostic when it comes down to software. So you can buy their hardware, software as a service. It's not necessarily integrated as it is for Cisco systems as a combination package. A lot of high-profile hyperscalers like their products, like Meta Platforms, Amazon Web Services. But if you look at the EPS, this may be a quarter where the company really starts to denote some increase in capital expenditures, and I think that's one of the reasons why, at the very least, they're expected to print 57 cents. Now that's still higher than last quarter or for the same quarter last year at 52 cents, but it's only higher by about 9.5%, considering the sales numbers are expected to come in around 1.9 billion, higher by 23%. So you're seeing essentially a high revenue growth number, almost 24%, but at the same time, their EPS growth is expected to come in quite low relative to that sales growth number. And I think that has to do with the fact that they're expending quite a bit of money in the last quarter, maybe the last 2 quarters, and that might be why we're seeing some marginal weakness in the stock as we move into this earnings print. But overall, I think the bottom line is that the hardware ecosystem for AI, starting with the semiconductor stack like NVIDIA, AMD, it's building out in terms of software now, as well as the communications networking side of the hardware stack, and that's where companies like Cisco Systems and AristaNet shine.
Yeah, George, I don't know. I don't consider myself an expert in this company, but from what I read, it really appears like they are going to be the beneficiary in either the first wave or the second wave of the CapEx spending of Amazon, Meta, Microsoft, Google Alphabet. All that has got to eventually flow to them, unless, like Tom said, they lose a competition battle with other firms. But it looks like they're situated pretty well, and their profit margins are increasing.
Ooh.
So is it just a case of,
there we go.
They're spending money to get ready for other companies to spend
Okay,
money
I'm out.
with them?
I think that's exactly what's going on. I think that's
I had a lot of contracts.
Stock is maybe trading a little bit lower than it was going back to about 3 weeks ago. I think it comes down to
I don't like the choppy day.
spending in anticipation that the hyperscalers will.
It seems like when I walk away, the stock runs.
Infrastructure, and I think that's going to be the case for companies like AristaNet as well as Cisco Systems. We know that the competition also is becoming a little bit thin with HP and Juniper. That acquisition is still in question because of maybe some Department of Justice anti-competitive elements. Maybe that's also why we're seeing a little bit of a give back in AristaNet, because I think AristaNet would have certainly benefited from pricing power.
I had a lot of contracts there. I bought more, so my average ended up being right around 160, and I got out at 180.
question is the merger that's still in limbo between HPE or the acquisition of Juniper by HPE. But I also think if you look at the earnings multiple for
Strangest thing.
Aristanet, it
We
right
got
now
out
it's
of
trading
more
at
than that.
43 times this year's earnings, this fiscal year 2025. So they'll be completing 2024.
We got out at
this
180
quarter.
and $2.
Historically speaking, it's around 33 times. So it's a little bit rich in terms of valuation, but I'm just going to go back to what you started
This
with,
thing here
Kevin.
froze up on me, my other one.
Margins of the business, 800 basis points higher than their 5-year average. So that's a significant movement or premium to their 5-year average in profit margins. So that may again offset some of that high multiple premium that we see in valuation. But nonetheless, if you do look at their revenue and EPS growth, they're expected to actually show some deceleration in top line sales next year at about 18%. Keep in mind, 24% is the expected number for this quarter. But at the same time, earnings growth is expected to re-accelerate next year at around 23%. And so with that said, I think this maybe is a quarter where they're basically spending quite a bit of money. That is why I think their estimates are low compared to their sales growth numbers this quarter.
All right, great breakdown for us. That's George Sellis, Senior Markets Contributor, here breaking down ANET going into earnings. Kev, when I looked at this one, option markets pricing in a $10.70 move either way in the shares. It's pulled back from those all-time highs that we saw in January, $133 a share. It's had a range of about 100 to 120 over the last probably 3.5 weeks or so going into this report. Implied volatility levels elevated, IV percentile rank at 73%, so nearly the top 1/4 of implied volatility levels that we've seen over the last year. But maybe that should be there because we've got earnings after the close on this one. So I looked at a strategy that takes advantage of maybe that range that we've seen, about 100 to 120 in this neutral strategy, taking advantage of that higher implied volatility level and positive time decay. So looked at selling a short iron condor here, going out to the February 21st monthly cycle, 3 days to expiration, really short-term positioning. Sell the 100 put, buy the 97 strike put, $3 wide short put vertical. And then on the call side, out of the money, sell the 120 call, buy the 123 call, short $3 wide call vertical. You combine those two, you get a short iron condor, collecting roughly about $1.35 credit on a $3 wide short iron condor. And that takes your break evens 98.65 on the downside and 121.35 on the upside. Kev, so you got a nice wide range on this one, and it's about that one standard deviation. You just want this stock to kind of consolidate at current levels, right?
Yeah, a really good practice for doing an iron condor from the short side is to do what you did, is shorten those strikes. Don't go $5 or $10. Maybe the most efficient use of capital is to do $3 or something smaller. Number one, the risk is less.
An iron condor.
The return is probably higher. It probably goes down most likely as you get to the wider strike prices. So this is one time, 2 out of the money calls, 120 and $100. Right in line with the expected move, making it a $3 wide. If you think 30 cents per dollar, Tom, you're way over that, as you know. So yeah, a good. This is, you're playing for not a large expected move, but Tom, the returns, the numbers on this are quite attractive.
Yep, and Kevin, this is one of those strategies where you hope it consolidates. As you mentioned, it's positive time decay, so it's going to start to contract in price. When you look at collecting $1.35 credit, if this thing opens up at 50, 60 cents, do you close a portion of it or all of it if the market's open on something like this? Or do you just, hope that the short verticals just go to zero and go out worthless and you just get to keep the $1.35?
Yeah, if you were to get 70 or 80 cents quickly, yeah, you close the trade, Tom. In my opinion, yes.
Okay. Yep. $165 in risk. That's above 123 and below 97 on this trade also. So good look at the neutral strategy in Aristanet, ANET. That's going to wrap it up for us today here on Fast Market. Stick around right here on the Schwab Network. Next Gen Investing is coming up.
That's an iron condor right there.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fees, and enhanced security features to keep your money safe. Also, because
We're
your
definitely
investor
at
checking
support.
account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Every morning, our analysis is your blueprint for the day. Bonds, stocks, across all asset classes on Morning Trade Live on the Schwab Network.
Alex, did you get out of that trade?
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds.
Oh, damn it.
Go deeper with Thinkorswim, our award-winning trading platforms.
I stuck it out. I'm glad I did.
Our team of passionate traders who live and
I know you got
trade.
burned Friday on it.
And sharpen your skills with immersive online education crafted just for traders.
I don't want to boast. I don't want to boast or anything, but usually when I get burned, it happens very seldom. And that was last Friday night in the close. I stuck it out again today, but I had to add, probably more than I wanted to. Yep. It's eating the premium real bad. So that's why I got out. I did okay, but I had to put a lot of money in it, and it wasn't good. The percentage was low. So I'm going to relax before I get into another trade. Maybe for a bigger knife, and watch it not have one now. Yep, see here, it's already pulled back. And they are now at 155. And my platform's starting to mess up a little bit. I think it's because of this snow. It's starting to get ugly out there. You can hear the wind. So, this was one of the dreams that I had this weekend. I just dreamed that I was driving and went downtown, and I took a left, and once I passed this building, right at 6 o'clock, these gates closed in front of me. And right behind me, I was stuck because another gate closed. So I saw the security guard, and I said, "What's going on here?" And he says they close it every night at 6 o'clock. And I said I had to wait and call the police to get the key to open the city, to open up the gate. So the police searched my truck, and I didn't have insurance papers on me. They were going to arrest me, but I think, and then I woke up. My other dream, this is all on the same night. I just had another another dream that my roommate would like to get high, and I haven't got high in over a year. So I finally was going to take a hit of this last joint, and he was kind of desperate, so I told him I was going to go down and buy him a quarter. I tried to take a hit off this joint, and the thing was burning up so fast that I didn't get a hit. So I ordered another quarter, and I was getting ready to go, and I woke up. And now I'm going to go pee, so I went and peed. And then I had another dream, kind of creative, and like I've never had bad dreams or any but they're all vivid and colorful. So I want to dream about, I said, I was talking to this girl, I said, I want to dream about you being my wife and see what it would be like. Would it be a nightmare or a dream come true? So I was cleaning, this is my last dream. I was cleaning and they came in and the guy tried to install a TV, took it out of the box and scattered everything everywhere. Forgot the remote control and the batteries and then left. Another lady came in and was bad now. She said that the guy was bad for doing that and leaving you that mess. So I started cleaning up, and then a crew came in and started tearing up the carpet. In the middle of all this, they were going to put a new floor in and take away the carpet and put down a hard floor. She said sometimes you don't want to wish what you asked for. It ended up being another mess. Then I woke up. That dream lasted 3 hours, and I had to go get up, go pee, come back and dream another. Those were my 3 dreams I had in one night. I never did have the dream that I wanted this girl to be my wife. I knew what it would end up being like. We had great sex for the first week, and then after that, we never hardly had any sex after at all. All you were was trying to go for my money.
Probably unlikely that we're going to see a 21st update, but never impossible. And even so, this is also kind of the danger of trying to bet against those streaks.
Broke out again.
Just simply because you might have started doing this, 5, 6, 7 days into it, and you're still out a lot if that was the case in terms of looking for this to reprice. But just the first down day, perhaps several to come, but wiping out a week's worth of trade just with today's move.
I know, pretty substantial move for Meta here without any really news backing it. I know we're seeing this one that's selling pick up in real time, but we'll be also watching that one as the session rolls on here. Next name today is Etsy with earnings out tomorrow morning. And Etsy has been a bit of a volatile player. We're still down about 25% or some change on a 12-month basis. I will say that as a Etsy user myself, I'm always curious, like those that are spending big on the platform, 86% of Etsy sellers are female. With around 2.1 million sellers, they get around 40 million buyers. So it's a predominantly female platform, I think it's safe to say. Also, we do know that traffic per geography gets about
Who do you love? Alrighty. I didn't think you loved me anymore. My dreams are a lot different now that I don't get high. I dreamed when I got high too, but nothing like what these are. These are so vivid, and I'm always excited when I wake up. They're not nightmares, but they're just like problem solving. Everything's about solving a problem. I don't dream about stocks. I don't dream about girls. Every once in a while I do. The two things I always think about. And cleaning, that's my first cleaning dream I've had in a long time. But I have them every single night. I think we can pull back to 707.23. $707. What? Let me get it precise. Right there. 706.07. And then maybe for low, 685.37. 685.12. I'm gonna go get a Q-tip and come back at it. Nope, not darn. We gotta get another knife. God. Here we go again. We got an inverse head and shoulders right here, so I'm jumping back in. 125. Unbelievable. At the 200. This might not even hold. We're at 125 there again. This is one choppy day, man. This is really a choppy day. Very risky. Come on, baby. Oh, this is Washboardjim. You choppy day. You get choppy day. You know who Bruce Lee is and Mrs. Leong. You chop. You go into kitchen and cook 2-pan hot lye, hully, chop. It's a very choppy day. You cut chicken, chop. Mr. Leong was going to go into the kitchen and cook a live catfish and watch the catfish jump in the pan as we pour the oil all over him. Chop. You need to break out. Hully. Cook 2-pound hot lye. Hully. Do what I tell you to do. You take hot lye and rinse it 6 times. And once you rinse it 6 times, you turn it on high and let it come to boil. And then once it boils, you put the lid on it and put it down on simmer, boy. Hully. I need 2-pound hot lye. Chop. Bake it. If we can maintain this high or low, we'll have something here. I took many time to work on it. Hully. Come on, man. Oh. We had 5 red candles. I think it's time for a song. I got to really pull one out of the hat today. Well, we need a higher low here. He's talking about meta. Let's see if he comes up with what I said.
All-time highs, for that matter, peaked near
740.91.
740.91. So, definitely a slide today, not really hitting a ton of major technical factors here at this time. We already crossed beyond this shorter-term white upward sloping trend line here about a week ago or so. So that's already been
0.85.
Didn't really have a big collapse, just kind of sideways price activity. We remain above our previous pattern, which was a rising wedge type shape, and above our moving averages. We're far above, even our closest one, the 21-day EMA, is all the way down at 690 at this point. So we're still a good bit above that one, just at a glance here. We can see, though, however, RSI has faltered a little bit here, crossing below that overbought area, now sitting at around 65 or so. So a big hit, but still a bullish lean, Jenny, still above that 50 midline.
Okay, so that's also encouraging us. You'd hope that one day of pressure wouldn't completely erase what it was such a substantial uptrend.
Very good.
So today, obviously, pacing for its worst day since about early January. So
I said 165.80. 185.
Mark Zuckerberg has continued to really please the street with his commentary. But what's next for Meta is anyone's question. So walk us through some levels you're watching.
Yeah, it's important to remember that the sharper and steeper a move, the less sustainable it is. Nothing can go up and or down for forever, you know, basically here in one single direction forever. But we can see here that we have retreated a bit to this point of heavier volume here, this smaller node near like 720. So this is the only real noteworthy area that I saw nearby in terms of support. The next area would be perhaps our +1 standard deviation channel near about 704, which would be +1 standard deviation above our blue linear regression line, our line of best fit. If we were to keep moving upward, the +2 channel comes in near 769, so about 770 or so.
This is nuts.
And we've also got our 21-day EMA, 690.50. That could be another point to watch in the shorter term here, Jenny.
Yeah, and so this has been a really exciting one to watch. Unfortunately, not so much today, but we do know shares have gained about 23%.
I'm not going a lot on these contracts because I've already learned my lesson.
So it's been definitely a clear winner on the here and within the Mag 7. So now
But
when
I'll
we think
start
about
going
trading
in
the
big
same
now.
for example purposes, say leaning into the overall optimism that's still very much present from the chart.
Yeah, still difficult though, because you do feel like you're chasing a name that's been such an outperformer, but perhaps as strong as Med has been, this was all the cooling off that it needed to do. I looked at selling a put vertical below the market, big round number of 700, just going out to the end of the month, February 28th, 700, 795. Looking to collect at least $1.25. That would create a 3-to-1 risk reward where you risk 375 with a chance to make 125. 698.75 would be the break even. Elongated Z risk profile that we're used to seeing with the vertical spread. The big idea here, Jenny, is you're kind of buying the dip with the pullback, but you give it a little bit of cushion in the event that it's a little bit more prolonged than just one session, given the fact that this stock was just up 20 trading sessions in a row. But it was up 20 trading sessions in a row because it's got a lot going well for it at the moment, but most importantly, risk defined. Like Rick said, what goes up that quickly doesn't necessarily
This is going to be good if it breaks out.
Reverse, and you're protected from catastrophe if that were to happen.
Yeah, and a reset is I think potentially healthy here. It's not like we were going to see this name just exponentially go up every single session for the foreseeable future, which I guess could happen, but highly unlikely based on just the way that stocks perform, of course. So a reset today for Meta, but we'll shift gears now and look at Etsy ahead of their earnings due out tomorrow morning. A very different chart. I mean, especially considering this has been an underperformer, and consistently at that, we've seen disappointment from earnings, disappointing growth metrics, and unfortunately for this name, as discretionary as it is, with a more budget conscious and sort of, I'd say, sales seeking consumer, not boding well for Etsy here.
Yes, and I think this chart is interesting because by one measure we have had a breakout, but by another and perhaps more important set of measures we maybe have not. So by that I mean if you were to start looking at your chart from right here, from this peak that we poked above a longer term trend line at, you could draw a downward sloping trend line connecting these sets of highs. By that measure, we've had a nice breakout from this low point that we had, and now we have broken out beyond that trend line and beyond our two moving averages, our yellow 21-day and orange 63-day exponential moving averages, which are clustered together right on top of each other, which suggests a lack of clear trend direction, kind of sideways movement. So that's the evidence in favor of a breakout, I guess you could say here. But more importantly though, look at this longer term downward sloping trend line starting all the way back there, connecting here and here and here once again. So by that measure, we are still below that trend line. We are also still struggling to overtake this repeated ceiling that we've hit, our red line near 57.56. So if you looked at it from this perspective, then you could say we're pretty darn range bound here between about 51.60 and 57.50 or so. So it's kind of like many things in chart analysis here. It kind of depends on where you start and what your time horizon is, Jenny.
Yeah, and that's a good point. I always think it's important to look at time horizon, as unfortunately for this one, it doesn't look more positive when you zoom out. But what are we watching here ahead of this earnings event, as we're earnings light, so we could see some volatility just because they're one of several names that is still yet to report?
Yes, so This volume profile setup here is something a lot of people try to stay on the lookout for. After we've had a significant decline in the stock price, we see heavy trading at these depressed levels. So our point of control, the area of heaviest trading, comes in pretty close to current price, just a little bit below where we are now, near 54.27 or so. Notice as well that price has also cleared our +1 standard deviation channel, and we're hanging on above that level. So those would be some downside areas of interest, 54 and 56 or so. To the upside, we got to get through this resistance level, 57.50 or so, and then we've got our purple 250 two-day EMA at about 60, and then all the way back here you can see that we had a high point after we had a gap down. We failed to take out that same high during our most recent major rally there, so around 63 or so would be another area to watch. And a real quick look at our 5-year chart for this name here, you can see that we would have a situation here where it's a significant departure from the high point that we had near 307 here. And even on our longer term look, all the volume is really down where we're at right now. So definitely an interesting setup here. It depends on you know, what your longer term outlook is for this name.
Yeah, and I think that well said, and you can see obviously where we peaked out as we saw so much of their growth pulled forward due to the pandemic and the fact that we were all at home online shopping. But great insight, great breakdown on Etsy here as we're down about 0.5% into its print tomorrow. And now we look at trading this name again, of course, for example purposes only, and say looking to lean into hopefully a more long-term recovery for Etsy.
Yeah, but really just hoping that the earnings are good enough to send this stock higher. This is a shorter term trade, selling the 65 call this week, buying 60 calls next week, looking for a pop. $1.50 debit, Jenny, this is the bullish version of the diagonal spread. Stock sort of basing out sideways, perhaps setting up for a move higher. Maybe earnings are the catalyst for that.
This is the daily. We've got different support levels here, right around 96, 96 or right around 98. Using the bodies of these candles. Now these are on the daily or the 9 if we get back to the 9. But even yet, this thing could still drop down here and hit the 50 again and be another great long trade in time. Now I got an average here of 81 cents. So we'll see if we get a little break. There's 90. Oh shit, I lost my... It's alright. I got an average of 81 and we're at 90. I should go ahead and sell them. If we break the 21, we could get up to here and hit 61.16 and be another big knife. $61.16.84 if we break the 21. Damn it. So I need to quit being so... This is a tough day today. I like that hammer right here, and I didn't jump in it then. I should have. Yeah. So we got a snake, break out, pull back to a double bottom. Now if this holds, we'll run back up. No. What a day. Let's see what the weather forecast says here. "12 degrees outside. Heavy snow expected. Total snow accumulation between 6 to 12 inches across most of the area, with locally high amounts up to 14 inches in a few locations where snow bands develop. Portions of Kansas and central Missouri until 6 a.m. Wednesday. Oh my gosh. So we'll probably have 2 days off of work. Visible may drop 1/4 of a mile at times. 1/4 mile. Visibilities may drop below 1/4 of a mile at times. Travel due to falling and blowing snow. The wind's really, 20 to 30 miles an hour. And it's now 12 degrees. Summary. If you must travel, keep an extra flashlight. Keep an extra flashlight, flood, and water in your vehicle in case of emergency. Drive with extreme caution. Consider taking a winter storm kit. Dress warm. The snow, 2 hours. So the big snow's coming here shortly. Or that might be a, we're halfway through it. Well, we might not get what they're calling for then. Oh, no. Extreme. Severe. The severe is coming. Oh, God. Here's the severe here. It's not even touched us yet. We might miss a lot of it. My property's right up in here, so we'll probably get a big old... It'll probably be a lot worse up here. That's where my property is. I got 30 acres up in here. Come on, let's finish the choppy day. We need some chop chop. I would have made $9 a contract if I sold it at $9. Oh, at 90 cents. Should have got some hot chocolate instead of this coffee crap. Well, I'm gonna... Yeah, I think you'll get it worse than we will. Don't get out in it. The babes are up.
.7% roughly.
Yeah, so this is an interesting style trade. What I looked at here, Jenny, was a risk reversal strategy. Basically, fancy way of saying sell a put to buy a call. So it has the upside of being long shares, and in some ways the downside of being long shares. But as it's structured in this particular case, I didn't choose the same strike. So between the strikes, it basically is a wash. It's done for zero. In this case, it's the March 21st, 25 put that we're selling, which is slightly out of the money. And then buying the slightly out of the money 27.5 call, again in the same expiration. So it basically creates like this zigzag like risk profile where between 25 and 27.5, this is a wash. There is theoretically no profit or loss to be had at expiration, as both those options will be set to expire worthless. Things get interesting above 27.5, where it basically is penny for penny to an unlimited profit potential. And then below 25, you assume the risk of the shareholder down to zero. So you can lose $2,500 theoretically in this, and you can make unlimited. Now, realistically, somewhere between those two numbers are realistic outcomes, right? Probably not going to make, unlimited amount because that's impossible, and you're probably not going to see Intel go to zero in this. It could. It's probably not the likeliest of outcomes, particularly when you look at the idea of a huge chunk of its business being these assets that clearly have demand. And so there's probably an embedded floor. I'm not going to speculate on where that is for Intel. But your basically your risk is you'd be assigned Intel shares, you become a shareholder, or take the risk of a shareholder. And your upside is, well, the stock continues on this recent run higher, and you can profit penny for penny above 27.5.
Yeah, and as we always say with this strategy, a more maybe capital efficient way to get into a name while also having to be comfortable with that risk, of course, of being an Intel shareholder, but something you have to consider when looking at this example strategy. We will leave it there, though, for our Intel talk for today. Now, coming up next, time to talk Coinbase, as we did see a blowout fourth quarter last week. With now shares pulling back about 4%. We're also previewing Bumble ahead of their earnings due out after the close. We'll discuss more on both of those names. Stick around, we'll be right back.
trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time to dive into the world of crypto. And today we are looking at Coinbase with Diane King Hall, the host of Morning Movers. So Diane, walk us through the latest and greatest with the sell side here regarding Coinbase, a blowout fourth quarter last week. Not seeing some of the favorability carry into price today, but one analyst with about 11% upside with their price target here.
Yeah, you've got the latest analyst joining in on adjusting views and price targets on Coinbase. This time it's Keith Woods boosting their price target to $305 a share. They previously
John
had
Deere
it
looks
to
nice.
$55 a share. They are though maintaining a market perform rating.
God,
Here's
John
what's
Deere had a good day today.
Their view on this. This comes in the wake of their earnings. You'll recall they did better than expected on both the top and bottom line. You'll recall revenue jumped more than 130% to more than $22.25 billion. You had also seen earnings come in at $468. Which was better than expected, but keep in mind some of that also has to do with how they mark to market their crypto, in other words. So you are seeing, in terms of the reaction today, the street kind of not really paying attention to this. It is the latest one to adjust their views on Coinbase. Canaccord also boosting their price target today on Coinbase. Now they have a higher price target and are more bullish than how Keith sees this one. Canaccord boosting their price target to $400 a share. They've got a buy rating on this stock, guys.
Diane, we warned, what was it, sometime last week when they had earnings, that they were on a little bit of a streak of moving lower post-earnings regardless of what the numbers were. It's now 4 straight quarters. So unfortunate turn of events for Coinbase investors, but appreciate the update. As always, thanks to Diane King Hall. We now shift gears from one name with earnings last week to a name with earnings slated for after the close today. We'd like to welcome in our next guest. That's J.R. Gondek, the managing director of the Lerner Group at Hightower Advisors. Good afternoon to you, JR. Thanks for joining us and help us preview Bumble as the online dating app is slated to give us quarterly results.
I think investors continue to need a lot of patience with Bumble and the dating app space overall. I've been very pessimistic on Bumble over the last year. And you look at the overall industry, there's little to no growth expected this year and next year. And the industry continues to be ripe for innovation and consolidation overall. And I think when you look at Bumble near term, I think you have a catalyst to $10 with Whitney Hurd returning as CEO. I think it's a good thing for the long run of Bumble. So I do think you have the near-term catalyst. However, I think without the direct innovation the markets are looking for, and it's just going to take time for AI to integrate to really give another leg up in growth. I think ultimately the stock will settle back toward the $6 range, as investors come to grips with the reality that it is many quarters out to see that growth.
Okay, so talk to me about some of this potential growth and innovation, or words you used. I mean, regarding AI and some of the company's investments to push more and more into AI and the technology and boost their platform, are we seeing that translate at all, or are we expecting that to translate eventually into some, excitement and enthusiasm, like you said, has so long been lacking here?
I think, and I've mentioned this in the past, my wife and I are developing dating apps. I think younger generations looking for new ways to connect new experiences overall. And I do think that the future looking in the space is going to make things more efficient, make the connectivity between users more efficient, and and functional. And I think you'll be able to capitalize on that, getting the right, whether it's an AI chatbot that's going to represent you to kind of scan through profiles or other innovations like that that you could see in the future. You'll be able to charge premium prices for a lot of that, because I think the younger generation is more used to the TikTok, the video screening overall, and looking for that, as opposed to a lot of kind of the tired Bumble and Match and Tinder in the space overall.
Yeah.
So to me, I think ultimately Bumble needs to go private to kind of capitalize, and Badoo and
Bumble.
some of the other things just need to be, kind of sold off or move in a different direction.
What is
at
it?
this point? And I
The
think
ticker.
it's hard to do a lot of this as a public company.
BMBL.
So, to me, I wouldn't be very surprised
Where's
if we see
Rum?
Bumble go private
Rumble.
at some point, so they can kind of restructure, get these
BMBL.
innovation, get the new leg up of growth, and then in 2026 or 7, when growth does come back, be a better time to be a public company.
Yeah, that's an interesting kind of solution to what's clearly a problem right now for the company and investors, which is the stock slide over the years. But my question to you, JR, broadly on this space is, it does seem like a space where maybe stakeholders or companies themselves have kind of incentives that really interfere with the user experience, in the sense that I guess these apps are, they're kind of incentivized to get more and more users on there, real or not. And then also embedding ads in there kind of disrupts the experience as well. And so with this being a space that it's so important to have your time in the sun and be the hot place to go, kind of like the bar of yesteryear that was the popular bar, how does one monetize that? And is it something like a subscription fee that you're alluding to?
Well, I think the subscription model and premium model is definitely the way, but how do you attract users to want to pay a premium, right? And I think that's the challenge facing a lot of this. Because the good news is, for investors that are patient, the dating space is going to be here for long term. It's just a matter of attracting and getting the right model that consumers will pay for. And to me, I think there's a lot of catfishing and other challenges with things. And the average person, when they put their profile together, they might spend all of a minute or two on what is the marketing for themselves, right? And I think it's a challenge facing things. And when you look at video and other experiences, you can just tell a better picture. You can see where things are going. And I think the ability to scan through profiles and integrate AI will bring another level of growth to the dating apps. But again, it's going to take a few quarters, and investors need to be very patient to get between now and then to capitalize on the future growth that will happen in the industry. It's just many quarters away.
Okay, you mentioned you and your wife are developing your own dating app, which is amazing in itself, but what really resonates with these consumers? I know that Gen Z is one that's more and more watched and more definitely on our radars. We are not Gen Z, but we respect the upcoming generation. So just curious, what seemingly right now is working with this upcoming generation of daters?
Well, we have 7 kids, so I think you can learn a lot of watching what your kids do and experience. And I think
7 kids.
At the growth of the industry, it always tends to be the 18 to 24 generation. So I think as you're building and coming up with ideas, you're really building something for teenagers that are going to ultimately get to the dating experience overall. And like we all experience with young children, they're on TikTok, they're on YouTube Shorts, they're on a lot of these video-only profiles. They're used to making these types of profiles overall, and I think it's really catering to what's going to be in favor in the future as opposed to what's worked in the past.
Yeah, well, they're definitely on their phones quite plenty. That's something I know from having a brother around that age. So they're definitely mobile. So that definitely bodes well for this entire space. But so appreciate you joining us today and giving us great insight on the online dating world, as well as, of course, Bumble ahead of those earnings due out after the close. JR Gondek, the Managing Director with the Learner Group at Hightower Advisors. Now, coming up next, it's time for Under 30. We are completely shifting
This
gears
market's
here,
way
talking
overbought.
Archer Aviation, a name that's up now about 3.5%. We've rallied about 104% over the last 12 months. We'll discuss more of the growth outlook and why the stock's higher today, coming up next.
Break out, please, I'll do it right now. Give me $1. Give me
Whether you're a
$2.
bull or
or bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Tonight I'll dream about choppiness. How to chop suey.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go.
I'm having a
Catch me
mocha.
on Fast Market. Weekdays at noon on the Schwab Network.
I'm having a mocha.
Welcome back to Next Gen Investing. It's time for Under 30, and as Jenny said before the break, we're looking at Archer with George Tillis, Senior Markets Correspondent for the Schwab Network. George, I swear we've talked this one before,
Bumble.
or one of its competitors, like Joby. I don't know if they're perfect competitors, but they remind me of one another. What's the latest?
Oh, Rhyme. R-I-M-E. I should have watched
we talked
Rhyme.
about Joby, and Archer is one of these other
What happened
major
here?
players in the
Did it
EV
split?
market, which is basically the electric vehicle takeoff and landing ecosystem that we're starting to see. The infrastructure that's basically like EV
Did they have a split?
helicopters. And this is an area that of the EV space that really hasn't got a lot of attention. But if you look at some of the promising technologies out there, Archer is one of these
One for
air taxi
200.
companies that
Well,
probably will
that
be
kind of
getting
sucks.
some contracts and some business, especially when it comes down to, places like transportation from urban centers to airports and other, collaboration, last mile transportation needs for passengers. And so one of the things about this particular company is that
How come I didn't notice that this
design
morning?
phase. They actually have an electric takeoff and landing vehicle that's past the design phase, now they're in the certification phase. And so over time,
Wonder what
they're getting
makes
some
that
additional
float.
FAA certifications passed, and recently they received a certification which allows them to basically establish a pilot's academy, in other words, a flight school for their technologies. And this company does have partnerships and collaborations as well as financing from major international
I'm at
players
60
like
now.
UAE, United Arab Emirates, and Abu Dhabi. Sovereign funds actually have stakes in this particular name. So this is going to be an interesting technology. You got to think about the open spaces, particularly in the Middle East, for technologies like this. And if you consider that the company is now moving through its certification phase, it plans to, by the end of this year, to actually have a fleet of takeoff vehicles, electric takeoff and landing vehicles, to the point where they're actually going to be generating about 35 million in sales as estimated for the full year this year.
So, George, is there any degree of concern with its financing? Because obviously these companies that are up and coming, that aren't profitable yet, I mean, there's a massive load of financing that has to be done before we start to see, their products really, truly take flight, no pun intended. But, are we worried at all about, balance sheet concerns here?
I might go in to
Not
do my
necessarily
another
balance sheet
workout.
concerns, but there are financing concerns because from an income statement standpoint, the company, just to give you an idea, they
Break
published
it.
in the last 4 quarters around 517,000 in sales. So they're starting to sell some products. Maybe there's some collaboration agreements or licensing agreements that they actually secured. They're expecting now about 35 million, like I said, this year. The problem being is they do need financing. And recently, I think it was not too long ago, they issued another 300 million in equity. It looks like there's some private placement offerings that have gone through in the past, which includes, wealth funds in the UAE as well as in Abu Dhabi. But they're also probably going to come to the table with full-fledged public offerings, and that could suppress the stock price because the company needs to finance its operations. Even this flight school that they got certification for needs to be financed, and that's going to come from equity. And so context matters. Right now, the equity is around $5.5 billion in market cap. The company lost around 450 million last year. So they're burning around 10% of the total float, assuming the current price and the current float. So that needs to be financed. So that implies a negative earnings yield, which I suggest will probably put some pressure on the stock, but the stock keeps moving higher because they're getting closer towards, full-scale certification and now deployment of their technologies.
George, it really feels like we're only a handful of steps away from the world looking like the Jetsons, that TV show from whatever it was, the 60s. But Really appreciate the update. Electric vehicle takeoff and landing, I think you said it was. Learned a new acronym there. But Jenny, we leave our viewers with a market that looks a little bit more red than the one we started with.
I know, and specifically, I was looking at Meta, which has only seen its selling steepen as the session has gone on, although NVIDIA's still hanging on as our one lone green name in a sea of red Mag 7 stocks, so we'll definitely keep watching that. But thanks for tuning into Next Gen Investing for this Tuesday. We have the watch list coming up next.
I remember the Jetsons, but I don't remember this one.
Schwab Bank Investor Checking. It's more checking account built for investors. It's where friends are highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solution.
Brought to you by
George Jetson.
And remember, Elroy, no stopping off at the Space Burger Satellite on the way to school.
Oh, gee, Mom. How about on the way home?
Now, not another word. Come on, it's off to school for you. Well, now let's see. Here we are. Playground, movies, school. Bye, dear.
Bye, Mom. See you in orbit.
Uh-oh, that must be Judy's ride.
Hey, Judy, let's blast out. We'll be late for school.
Hi, Mom. Bye, Mom. But Judy, hey, where are you going with that spaceboard? Ricky Rocket is taking me to school. Well, I know, dear, but on a spaceboard, sure. Didn't you ever space ski to school when you were a kid, Mom? Bye, dear. Well, that's 2 down and 2 to go.
Hey, Janie, where are my shoes?
Right in front of you, dear, where they're supposed to be.
Well, I just want to be sure. Yesterday, I walked out of here with my shoes on my ears.
You better hurry, George. Don't forget you have to drop Astro off at obedience school on your way to work.
Oh, yeah. Yeah, this is his school day, huh? Oh, boy, will he be tickled. Here, Astro. Time to go play with your doggy pals.
Oh, Roy, right, froggy pals. Oh, Roy, Roy.
All right, calm down. It isn't like you haven't seen him for 10 years, you know. Now, cut that out. If I want a bath, I'll take a shower.
Oh.
Your father knows about
George.
Our Technical Tuesday, well, that's with Charles Schwab's very own Kevin Horner, and he'll join us and take a look at the S&P 500, Zscaler, Palo Alto, some key names to watch there. And our panel covering
PAWN.
20 days, the winning streak wasn't enough. Well, selling off today. More details on this tech company, looking at least that name and maybe some
Palo Alto is up today.
for you. In the meantime, as I mentioned, we see markets really now have taken a leg down, and you're seeing
Damn.
consumer staples, consumer
How'd I miss
discretionary,
that?
healthcare, Medtronic, Conagra, United Health, all under some pressure here. But it's
230
not
price
big,
target.
right? Because you are seeing the S&P 500
Sasquatch.
down just 2 points. The Nasdaq down 32 points. It's the Dow that's getting hit the hardest, down 101 points, a quarter of 1%. That's not a very big move. The Russell is up a quarter of 1%. In the meantime, we take a look at oil and gold, and both of those are higher. We've seen oil up over $1 today at $71.80 the barrel. This, as we did hear about Ukraine with drone strikes and the Caspian Sea supplies being somewhat threatened there. And that boosted energy. Gold is at $29.52 a troy ounce, and that's been not too far off record highs. 10-year bond yield right now at 4.53%.
Drone strikes in
Bitcoin
Ukraine.
back almost 4% today. What happened? What happened to 100,000? What happened to 95,000? It's 93,790. So the crypto bid not happening right now. In the meantime, Kevin Hinks is here, host of Fast Market here on Schwab Network. A lot to discuss, a busy week ahead. What are you watching? Good afternoon, Kevin.
Hi, Nicole.
Oh, shit.
Yeah, this is a week that we don't have a lot of top-tier earnings other than Walmart. I believe it's Thursday morning is Walmart. We don't have a lot of top-tier economic data, but we do get the Fed minutes tomorrow at around 1 p.m. We get some PMI on Friday. But besides that, not a lot of top-tier reasons to move the market, Nicole. So we're going to have to rely on geopolitical headlines and overall earnings news and things like that to move the market. And we had a market start the day in the green, but we saw a higher U.S. dollar, higher yields, and the telltale sign when that happens is rallies that fail based on higher interest rates and the higher U.S. dollar. And that's what you're seeing, though this is nothing more than a flesh wound, as they're barely in the red, the major markets. So I think there's still an extension going on of last week's rally based on
That's not good.
Inflation data and what that'll mean for PCE coming up here into next week. But this is a market trying to find its way. You mentioned Meta Platforms that had such a historic run, now having a pretty significantly soft day here as it comes off its highs. But yeah, this is a market trying to find its way. 7 of the 11 sectors in the S&P 500 are still higher, yet the market is struggling to gain any real footing, Nicole.
And Thursday, we'll watch for Walmart, Alibaba, Unity, Block, Rivian. So, look, those are not number one stocks that people watch to really know, but those are exciting stocks to watch. So we'll have a lot of the earnings, as you noted. And anything when it comes to the tariffs, the reciprocal tariffs, anything like that could be a market-moving event. You're also watching Arista Networks, right? And that's reporting earnings post-market today. Some of your thoughts on this name?
Yeah, we'll be watching a couple names after the bell today. Toll Brothers, the housing stock, and then Arista Networks, the client and cloud networking company that is going to be interesting. Why? They should benefit from CapEx spending from the likes of Amazon and Meta and Microsoft and Google Alphabet. But Nicole, they've done a bit of CapEx spending themselves that though they're looking for 57 cents in earnings per share and 1.89 billion in revenue, that's lower than last quarter when they made 60 cents. So CapEx is starting to cut into their numbers as they get ready for the CapEx spending that's coming. The good news for them, profit margins are increasing, and they'll be looking positively on that news. But this is a company that's going to have to justify its own CapEx spending to lead to the CapEx spending of their customers down the road, Nicole. Should be an interesting one.
All right. Kevin Hanks, thanks for all of that. Appreciate it. Good to see you, Kevin Hanks. Thank you. Now let's take a look at the bigger picture. Dale Smothers is with us, President.
Shake
CEO
it, my
of
resistance
Management.
today. Shake
Thank you
Shack.
for being here. So I was reading through your notes and I saw, look, volatility seems to be what's here for 2025. You noted that. You also noted we could even see a pullback. Tell me a little bit about your market outlook.
Yeah, so what we've seen in this last few hours of trading is what I expect 2025 to look like. In one word, volatility, Nicole. You have a lot of headwinds that we're facing with the global outlook, the strengthening dollar. You've got tariffs that are on the horizon. You've got interest rates here at home that are likely to rise to combat what I would consider almost inevitable inflation number that will creep higher and higher. With this will become more uncertain in the marketplace, and the market does not like uncertainty. For that reason, we will see things all over the place. Even with positive earnings, we could see potential taking of our winnings out of those companies and falling stock prices as a result. We are due for a correction.
So I wonder if this guy was saying that when we had that big run last week. Or they just bring him out today. There's a lot of there is volatility. You can't deny that. On the 20-day chart here, we've dipped all them times. So 60.41, another $60 drop.
And how the cash on the sideline behaves determines whether we pull out of it quickly or we stay in that downward market trend.
Yeah, and I do want to ask you about some of your strategy for investing in 2025. But first, just the big picture as you talk about inflation and that moving higher. What do you think the Fed should do then or not do?
Nicole, we've said this a time or two on the show, and you and I have had conversations around my philosophy of where the Fed may have missed a mark a few months back or even a few quarters back. That's spilt milk. I know we can't go back to that, but I do believe that inflation has never truly been killed. The inflation analogy that I use is very similar to fighting a wildfire, and we had it down to embers, but the firefighters packed up and moved to the other side of their dual mandate. This was probably a mistake. The lowering of interest rates probably should have never taken place in the first place. With that being said, where we go from now or from here, in my opinion, we have very limited choices. Lowering interest rates is certainly not in anyone's on anyone's bingo card, if you will. And higher interest rates is becoming more and more likely if we see CPI and PPI print continue to climb higher.
So it looks like you really have somewhat of a barbell approach because you have defensive picks and then your long-term picks also involve growth stocks or names that have more growth, right? So, or more risk on, let's say. So you think you should have some defensive picks in a portfolio, right? These are some consumer-based names. Tell me about why these names that you listed are important to have.
Right here, when we go looking for defensive stocks, I like to look for value as well. Not only the defensive nature of the stock, but something that maybe is fallen out of favor or it's on a discount. Names that stand out for me right now, Nicole, in that respect are Campbell's. Campbell's right now trading at 15 times forward earnings. We would consider that fairly discounted according to its peers. We're coming off of a nearly 32% high from 2023, from its highs of 2023 till today, down 32%. I think it's not only got potential for strengthening dividend, but also a little bit of capital appreciation as well. Another name that has very similar characteristics is General Mills. General Mills trading at just over 12 times earnings with a 4+% dividend. Couple that maybe with stocks like PepsiCo or McDonald's. You've got really good names that have paid a very strong dividend, and they have capital appreciation even in a downturn market. That potential is there. The other side of our barbell. Yes, ma'am. The other side of that barbell with the long term is NVIDIA, Apple, Amazon. I think we should be snatching up names like that if we have money that needs to work for us in the long term. as we see these pullbacks occur in the market, which I definitely expect to happen over the next 12 months.
So before I get back to the long-term thoughts, I was thinking about some of the defensive plays. You mentioned Campbell's Soup, General Mills, Pepsi. You threw McDonald's in there today, and I don't know if you looked at it closely yet, which is fine if you haven't. Conagra Foods is a big one that is a big laggard in the S&P 500 today. It's down 5%. Is that a name that you would look at or want to investigate or add to a portfolio since it's been being down? We're going to have a whole segment on it later in the show.
It certainly is. You know, this particular type of, again, barbell approach takes advantage of any of those types of stocks like Conagra Foods that are beat down, out of favor, pay a strong dividend, and are likely to perform well even in a downturned market, especially if it's a prolonged downturn market. You know, we can't say that past performance is any indicator of how things will perform
61.20s.
But if we look at some of these names in 2022, when the market was negative almost 20%, some of these names were positive 20+%, and that's a good place to have money working in a downturn market.
And it would be a miss, in your opinion, because your long-term picks have Apple, Amazon, NVIDIA. Those are a lot of the growth names. They're the Mag 7 names. They've had incredible runs. Yes, they're off their highs, but have shown longevity and purpose. And so with that, do you think a portfolio would be missing a name like that? And for example, I was looking at Supermicro being a real winner. Okay, granted, that's a lot more volatile. Today, Supermicro is up 12%, but Supermicro can go one way or the other. Do you look at those kinds of names? Final quick thought?
Yes, ma'am. Most of the clients that we deal with have a need for income immediately. Every single month, we need to generate that income. But we also have 10 years from now goals, and that income has to be there. For 10 year from now money, these types of names that we're mentioning, Apple, Amazon, Microsoft, even NVIDIA at its lows, if we see 10% pullbacks in companies like this, we should be grabbing them at that discount, and we should be holding them for the long term.
Buy on that pullback. Dale Smother, it's great to see you, President and CEO of RDS Wealth Management. Thank you. Coming up, Options Corner. Tom White is standing by, and he will highlight unusual options activities seen from the day and how investors are looking to trade on recent news of Newmont, Alibaba, and also Lyft. We'll be right back.
It's a nasty day.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks?
I like them 61.20s, but I don't know now.
Series breaks down different charting techniques, like
might like the 6110s better.
Patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
One crappy day.
Trading the trending names every day. I'm Tom White, host of Fast Market. Ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
specialist. It's time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. For that, we welcome in Tom White, host of Fast Market here on Schwab Network. And you and I have talked about Newmont Mining. We were talking about copper and gold and how well this group has done overall. And now, as we take a look here at Newmont, you found a bullish trade that you're going to share with us. Looking forward to hearing more. Tom.
Yeah, stock's up about 1.7% today, Nicole. They've got earnings coming up later this week on Thursday. Option market's priced in about a plus or minus 7% move in the shares, about $3 either way. You got gold just under all-time highs. That's up about 1.7% in today's session. Geopolitical risks, tensions there, even though there's a ceasefire in Gaza. Ukraine-Russia war still in place at this point. Central banks are buying gold at this point. So you would think that, Newmont's doing well. It's up over 43% over the last 12 months, up 27% so far this year on that rally and push into gold, as they're one of the biggest gold explorers there. And they also specialize in copper, silver, lead, and zinc also. So this is one of the biggest, world's biggest miners here going into this earnings report. And I think somebody's trying to set up for some bullish activity in here going into that report on Thursday. Out in the March monthly cycle that expires in 31 days, saw a trader come in, buy 10,000 of the 50 strike calls, paid an average debit of about $1.15 on those. So the break even where this trader starts to profit, 51.15 over the next 31 days. That's about 8% above the current share price, right about that standard deviation, or that one standard deviation move that the option market's priced in. But if you just take a look at how metals have reacted here recently, and it could be central bank buying, it could be that push into a safety play for gold. The miners should do well. The only problem is this trader thinks it's going to continue to move higher, but at the same time, it's already had pretty solid gains so far this month, and this year, and over the last 12 months.
Yeah, and look, after that time where it had that big gap down back in October, November, and it's just been, it swung down, but then it's really been on the upswing, right? And has had a pretty good run, right, over this period. Let's say 1 month, it's just 14%. That's amazing. Yeah. And if you went back further, you would see more. So that's Newmont. Then we turn our attention over to Alibaba. So tell me about this name, because we've been talking about the Chinese exposed name. Some of your thoughts on the bullish call you found.
Well, yeah, I think people are pushing back into these China tech, the China tech play at this point. This stock's up 49% so far just this year, 28% in February.
Definitely a red one, Dave.
Up nearly 2% again today. The RSI on a technical base is getting pretty stretched. You see the chart right there, the parabolic move that we've seen over the last couple of months here, Nicole. And this company reports earnings on Thursday also. The option market's pricing in about a plus or minus 7% move in these shares, about 9% either way. Now, what kick-started this? Well, David Tepper has been pounding the table from Appaloosa Capital. He's been pounding the table on the China tech trade. This is his largest holding now on those recently released 13F filings. So that's been a bonus for them. The news that came out last week from Apple partnering with Alibaba to release some of their AI features with Alibaba and their customer base, which is the biggest in China at this point. That also gave the shares a lift, and the stock had initially underperformed, but now you're just seeing it explode to the upside. And Morgan Stanley came out with a note after that partnership was announced with Apple. The information did report on that and said this could be a game changer for Alibaba, more acceptance of Apple's AI features. But you still have some people out there that just won't invest in companies like Alibaba, but a lot of fund managers starting to push into this one. We did see some bullish activity in here, also probably trying to take advantage of a potential move to the upside post earnings. February 21st monthly cycle that expires in just 3 days. So this trader's putting on some really short-term positioning. Over 10,000 of the 130 strike calls were bought up. Average debit of about $3.60. So that break even of 133.60 over the next 3 days. That's about 5% above the current share price and well within that one standard deviation.
609.931. Here it is.
Yeah, a couple of earnings plays here. Somebody thinks that this stock's going to continue its moonshot ride here, but like I said, technical basis, this is about RSI of about 85, so anything above 70 level on a relative strength index is overbought territory, and this one's sitting at about 85 with the expectations. This trader thinks it's going higher.
Right, it's amazing. The moonshot move, and I just went back. I did a 3-year chart. Still, I mean, this is the highest point. I don't know. I didn't go back further, but obviously these names are doing well. You also had the meeting with President Xi and a lot of the tech folks, and it just seems to be a lot of business in progress. And people like that. They like seeing that this kind of vibe, and that certainly brings some bullishness along with it. Last but not least, we take a look here at Lyft, and here you found a bullish play. Could you tell us about that?
Yeah, so after earnings, they had a pretty good earnings report. They gave some softer guidance as far as gross bookings moving forward, and that was initially why the stock got hit. Now it's turned around. It's up about 5% today, up about 10% on the year.
Give it another shot here.
About 25% from year ago levels, but I think what kind of turned maybe the investor sentiment on this, because initially it was a weak report. It did get downgraded today out of AREIT Securities. They downgraded it to sell from neutral with a price target of $10, down from 19. So pretty harsh there. It doesn't seem to be negatively affecting the stock at this point, but gross bookings guidance was mixed moving forward. They expected it did previously rise about 15%, 4.28 during the quarter. That was just slightly below the estimates on that one. But I think the key here moving forward, and I think that's why a lot of analysts a lot of investors are getting curious on this one, is that they announced the partnership with Mobileye, that they could have Robotech.
So these are the 6110 strikes at 250. I came within 20 cents of hitting my support, one of them, one of many. I'll show you how I got this one in a second. I don't want to go below 250. We got the 200 right here. How did I get that number? Oh, it's previous high right here. This previous high. It matched up with that one. And it matched up with that one. So it's like a two-headed snake or three-headed snake with its shoulders. Oh shit. This thing's at 490. What happened here? Oh God. I'm out. Oh man. Beautiful. Smackdown. That's 100% gain right there. Woo! Randy. You think I should have held on? Yeah. Good job, Rob. Where's Randy? Buck, 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 buck. That made up for everything now. Plus. They're at 380 now. Incoming spam calls. Hey, what's up, man? Okay, the crowd's going wild here. Jimmy's waiting for his next entry. I turn my head and I look back and I say, what? That's easy, $1,250, baby. Rob, did you call them on your own? speaking to Rob. Are you out there? Rob, are you listening? Paging Rob. Will you please come to the service center desk, please? We seem to have found your wallet. Paging Rob. Jim, leave me alone. I'm busy. I'm in a trade. Such a pretty world today. Such a pretty world today.
Look at
the sunshine.
Look at the sunshine. And every day is the same since I met you. It's
Such a pretty world today. When you're mine.
and happiness is being close to you. And though the rain may fall, our skies will all be blue. If I look close enough, the sun will come shining through. It's
Such a pretty world today.
Look at the sunshine.
Look at the sunshine.
Today and every day since I met you. It's such a
Pretty world today.
Look at the sunshine. Look at the sunshine. And every day's the same since I
Met
met
you.
It's such a
Pretty world today. Know that you're mine.
and happiness is being close to you. And though the rain may fall, my skies will all be blue. If I look close enough, the sun will come shining through. It's such a pretty world today. Look at the sunshine. Look at the sunshine. Today and every day since I met you.
Live, Nancy Sinatra. It's such a pretty world today. Look at the snow outside. We are expecting 14 inches today. Okay, the crowd's going wild here at the sports arena. They're waiting for the next opportunity to take the SPX and break the double top resistance. Do you see this previous low we had right here? That's why it stopped there. Now the next time it comes up will be the third time, and that'll be called a triple top break. So I look at my cup of coffee that I got from Cozumel about 10 years ago. I look inside and I say, shit, it's empty. Cozumel. The crowd's going wild. Jim says he likes to pull back and hit the 21, but it could bounce right off the 9. It's getting ready to squeeze right now. Get ready. This is it. Randy, you missed out on a great trade. Something's going on with Intel. Do you have the intel? Something is going on with Intel. What's going on with Intel today? Somebody asked here already. What's going on? Intel shares are trading higher Tuesday after reports emerged that Broadcom, AVGO, and Taiwan Semiconductor are considering acquiring portions of the company. Not all of it, just portions. Okay, here we are at the 21. Randy. It's starting to behave. We are now at 360. I'm going to make a business decision. We're coming to support. And I'm going to buy 3 contracts at 340. Nope. Right now, 320. Okay. I made a business decision. Let's see if I was right. $3.20. It's such a pretty world today. Will you be mine? Ooh. Did you see that, Alex? Such a pretty world today. Won't you be mine? I'm trying to make the right business decision here. We would love to see this thing break out. I'm up $160. 180. Can we go to a higher level is the question. Uh-oh. 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 We're now at 420. So up, $100. You make a business decision if you want to get out. We could break, please.
Actually breaking through, it makes sense that that could work from a measured move standpoint.
There's been a lot of talk about the S&P 500, inflation, and how the Fed's moves can affect inflation, and whether or not we're going to get one cut, two cuts, no cuts, and that's in there as well. In the meantime, even with the cuts that we've had thus far, we still have interest rates 4.5% on the 10-year, and markets right near record highs. So, you know, what are your thoughts there as we watch some of these key levels, near term and maybe longer term, you know, whether or not we can break out and what the Fed may or may not do? Because any one of those speeches, not just Jay Powell himself, but any one of the folks on the Federal Open Market Committee can say something and it becomes a market-moving event.
Yeah, there's no way around that, obviously. We are reactionary, to say the least. And yeah, we certainly are at risk for commentary kind of playing on that to a certain extent. From the standpoint of where we reside, I am enthused by the
breakout,
the nature of the market here, holding up well as we continue to hold interest rates. You're right. We've been kind of bantering back and forth the last 3 or 4 weeks here. We are well off of the peak when we were trading as showing yields at 4.8 on the 10-year, which is nice to see. But if that rally in the yield gets itself back in gear, we're apt to keep a lid on our SPX potential rally. So I have no choice but to keep a close eye on yields and rates in particular. But, you know, again, I just can't get away from the fact that price action will lead a lot of this decision making. So if we can just get some bullish nature over 61.25 for the bulls and get a little bit of a carry over a 1 to 2 day rally, I think we could make that move and drag some of these other companies and other areas of the market with us. But, you know, the fact is, we have not pushed through 61.25. The market is fairly clear defining that ledge as resistance in the short run. So, you know, regardless of what the narrative might be, we often say as traders, Nicole, sometimes we just got to pay attention to price action. Price is king. It's the easiest way to base decisions. Maybe we just wait for that close over 61.25.
Yeah, and watching that technical analysis is so key. I mean, you have 8 rate-setting meetings. You have 19 members on the committee, and they sometimes spew out stuff anonymously. It's just a lot to digest, you know, if you're just trying to move and react to those headlines. So the technical analysis is very key and helpful. Kevin Horner, Senior Manager of Trading Services at Charles Schwab, thank you very much. Still ahead, we bring in our panel. We'll talk all about Meta. This tech giant has been incredible, right? It's up over 25%. It's up 20 days in a row. Not today. Today could be the smack. We'll be right back.
Okay, bye. I'm pissed. I'm gonna get out of this trade. I gotta go outside. Right at 5. It just pisses me off. Out at 5.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to the watch list. It's time for our panel talk all about Meta, which has run up 20 days, but it certainly looks like today down 4%. It's going to snap that win streak, which has been obviously incredible. We don't see a stock do that. In the meantime, Rob Luna's here, founder of the Lunatic Investor, and Lance Roberts, Chief Investment Officer of RIA Advisors. Thank you both for being here. So during that time, I mean, first of all, it's up 20 days, 20%, I'll say, give or take. You know, it's up over, clearly up over 20% year to date and outperforming all these other Mag 7 names. Lance, your thoughts?
No, I mean, it's a great company. Fundamentally, they continue to just grow earnings at a steady pace over the last 3 years. Sales growth has gone from 116 to 134 to 164 billion. Fundamentally, it's cheap, but the stock's just been on a great run, really kind of ever since that DeepSeek kind of announcement we had. Meta really kind of took off from there. We actually reduced it in our portfolio very, very early this morning because it just had gotten so far ahead of itself. Relative strength, extremely overbought, highest levels on record. So again, this pullback today is not surprising. I wouldn't read much into it. In fact, get a correction here, I'll probably be buying some more of it.
Look, I mean, and you're buying some more, maybe on a pullback, maybe on some volatility. And Rob, you're in the same camp, right?
Yeah, I wish I could make it a little bit more interesting and argue with Lance, but unfortunately, I think he's spot on with it. If you look at the technicals of the stock, it's been an absolute monster. It's obviously been overbought, so I think this pullback I expected to happen a few days ago should create somewhat, like Lance said, of a buying opportunity. But when you look at this stock, it's a dominant player. I've owned the stock for over 10 years now, and I think every time you see the end of Meta, everyone needs to rush back in and buy this stock. And I think one thing also that really has been the catalyst for this, if you look at the last time Trump was in office, there was this back and forth between Zuckerberg and Trump. Everybody's worried about the stock, but he's kind of acquiesced. He's come into the Trump camp now. He's kind of gotten on that side. So I think the market believes that the wind is at his back. And when you look at this stock, what it's doing, along with things like podcasts, traditional media has been under pressure. A lot of the advertising dollars are going to continue to go to places like this. Entrepreneurs are on the rise. Meta, Facebook, Instagram in particular is a place that you have to be. So I think after a pullback like Lance said, you got to get in because I think the stock longer term goes much higher.
Yeah, well, at 740 today, the high was 740.91. It also pushed the triple Qs, looking at the NASDAQ 100, to new all-time highs. And Meta in particular has run from $414 last spring up to these highs of $740. Do you see 800, Lance? Do you see more?
I have the keys in my pocket.
Well, eventually, yeah. I mean, probably not tomorrow, but
it's a 710.
Again, just technically, the stock is extremely overbought, and you're going to have correction. Sometimes these corrections can just be a consolidation where it just does nothing for a while. It just trades sideways for a month or two, works off some of this overbought condition. Or maybe we get some type of action in the market that actually leads to a bigger correction. Meta could correct 5, 10, 15%, and it wouldn't even break the long-term bullish trend of the stock. So, there is room in there for a sizable correction. So I'd be really reticent if you don't own it. I'd be a little bit reticent right today to run in and buy it. But again, as we were just both talking about here, is that
I'll be back. I found it. Nobody stole it.
Moving average, previous bottom, something like that. It's going to give you a much more kind of a calmer place to start adding some money into that stock and build a position in your portfolio.
Look, it's been the outperformer of the group here, Rob. Do you think you see 800 as well? And is this your chance on pullbacks to pick up some of the other Mag 7 names that you may like?
Yeah, well, I think, like Lance said, the valuations of the stock are not bad. It is definitely overbought. It all depends on your time frame. I think the stock sees much higher than 800 over a longer period of time. And then, look, as an individual investor, you have to think, what is your cost basis in this? So if you've got, very low cost basis, you're not going to actually sell much here, lock in those taxes. If you got it in a non-taxable account, that's not so much of an issue. But again, this, I believe, needs to be a core holding for most long-term investors. Some of the other Magnificent Seven, one thing I think that's been a little bit of a laggard is Alphabet. That one has not been keeping pace. I think there's a lot of things that are going on there, again, with this transition over to YouTube. But I think there's some opportunity right there in that name right now. But yeah, Amazon, Netflix, Google, Meta, those are all names that I own, our subscribers own. Those are longer-term names for us.
And I was seeing for Tesla, obviously more Elon Musk and Grok 3, and there's a lot going on here. You noted, Lance, in your notes that Llama is open source, which gives it an advantage on OpenAI and Google. So I thought that was a good point. We're out of time, so we can't go into that a little more, but I didn't want to leave it out because that's an important point too. Lance and Rob, thank you. Rob Luna, Lance Roberts, good to see you both. And they both like Meta. Maybe you don't scoop it up today, but maybe on a pullback, they say. Thank you both. That's going to do it for us here on the watch list. Thanks for being with me. I'm Nicole Petalides. Download our free Schwab Network app. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com. I'm Nicole Petalides. Thanks for watching. Market on Close with Oliver Rennick next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
I'm Oliver Rennick. Get ready to cut the cord. Market on Close is coming up. Good afternoon. Welcome to Market on Close. I'm Oliver Rennick. Thanks for watching the Schwab Network into the bell. We've got an hour left, and stocks been getting bounced around all day. We're perfectly unched right now in the S&P 500. After some good early strength and overnight strength, faded. Didn't fade too far though. Dow's down right now the most with a little more than 0.25%. Russell's hanging in there about the same amount in the opposite direction. A pretty decent day. To start off a week that's pretty slow. You'd kind of think without a lot of big stuff on the calendar, path of least resistance would be higher, considering how close we are to records. Do you really get right here and then fumble on the 1 yard line? Futures at 61.32, the high from back in December, 61.63, and for the index, the high from earlier this year at 61.28. So obviously we're very close, and doing a little churn here is not too concerning. But there's also really not a lot to blame it on, so maybe there's just kind of a running out of steam happening to some extent, a little anticipation, perhaps of FOMC minutes. Did hear a little bit of Fed commentary today, but nothing too new to add into your equation that right now is adding up to cuts by the late summer if we get them. But they're still priced in at least to 1. The big move, let's start with the stuff that's working. The big move is in gold right now, which I do think is interesting, nearing 3,000. Goldman note from this morning does suggest that gold's going to break that big number. A 2% rally is a pretty big deal for gold, especially when you add it on top to the run it's been on. The point that I made for gold is that it's kind of a tricky one. Gold used to behave fairly directly to real interest rates, but it hasn't quite been doing that as well lately. Gold has 2 big candles now right next to each other from Friday into today. So that's kind of interesting. The 2 big competing candles almost of equal size. So let's see which one wins out. It looks like, given the trend, probably bulls too. But gold next to Bitcoin is something I've been watching because those two oftentimes get compared, but in my mind they're the opposites, but do serve a similar function as an additive into a portfolio. Gold if you're feeling a little bit more risk off. Bitcoin, of course, if you're feeling more risk on. Sometimes gold can be risk on as well, but the bottom line is when you have Bitcoin sluggish, very sluggish on the chart, and then gold doing really well, it suggests that maybe on the margin there's a slight little shift in risk appetite lately. So I do think that gold is a pretty big move. There's also a lot of weird stuff swirling geopolitically that's kind of hard to get your hands around right now. So gold might just be a bit of a solution for that. However, another thing that's working today that's notable is the value trade. Look at VLUE, the ETF's up almost 1%, and that chart's looking pretty good too. Some of the stuff outside tech still has a pretty good chart behind it. Financials notably as well, one of the top picks from the Schwab Center for Financial Research equity team. As we've heard from Liz Ann a couple times, the banks are one of their favorites. That chart looks pretty good. XLF has been cruising right now, so there's other things that are working here. Even the energy patch is doing well with that sector higher on the day. Crude oil's holding up above $70 despite all the talk to drill, baby, drill. It kind of seems like the energy companies are in a nice little sweet spot right now. And then the stuff that's down. The big one today is Meta. So it stopped. And that's really all there is to say right now. It drops 4%, which is a big drop by the recent standards of Meta, but the thing's been on an absolute tear. More importantly, I think, is to zoom out a little bit and look at the MAG 7, the ETF MAGS, which after today's stall out, and I'm calling it a stall out because it had 3 really good days, found support, bounced, and then now is giving some back. You can pretty clearly see the triangle on this that's holding the lower highs, giving you that downward slope, and basically a flat horizontal line for the MAGS ETF, roughly around $54-53, which is your support. So failure to break that triangle to the upside means it's still alive and still has a little bit of negative bias in it to the downside. Meta ending its epic run is a bit suspicious that it's happening right at where it needs to keep that triangle alive in a somewhat bearish way. So it's just something to keep in mind that you do want this group, obviously, to get out of this pattern and break to the upside, or else it's going to be a lot more stop and go if you have to depend on the rest of the market. Finally, there's Bitcoin. Not the worst day by crypto standards. 3.5-4% drop. Not huge in terms of magnitude, but in terms of direction, it's starting to add up. Bitcoin's been looking sluggish on a lot of different realms, and the MicroStrategy chart is almost like an extreme version of that triangle that's in the MAGS, but it's now months of a coiled spring, and you know it's going to move huge whenever it does. Bitcoin arguing perhaps that move might be to the downside, but we haven't broken any ranges yet. So a little flavor of some stuff that's working and some stuff that's not. Let's go to what's working with Jenny Horn out in the newsroom, the host of Next Gen, taking a look at a few of the chip trades that deserve our attention. So Meta lost its streak, Jenny, but Supermicro is building it since they said they're going to get those documents in on time. I guess the market believes them.
I guess the market does because, I mean, now overthrowing Palantir as the S&P 500's best performer on the year just based on the last 31 trading sessions, of course. The now best performer in this same index for the month. 11 trading sessions, we've seen it gain a whopping 90%. I mean, these numbers are just ridiculous. While also still remaining 56% below its all-time high at just shy of $120 a share from March of last year. So today, at least, pacing for its highest close since August of 2024.
It'll probably blow away again.
Now 9 of the last 10 trading sessions, so not quite meta status yet, but definitely encouraging.
Yeah, but they
and
don't come
4
up.
consecutive sessions, it's gained 41% over that period. A lot of this follows the commentary we got from the company last week when we got that second quarter business update. They disclosed they expect now revenue to hit around $5.65 billion, a 54% growth rate. Looking further out, though, they're projecting about $40 billion in sales for fiscal 2026, and that set shares up 26% in one single session. Of course, like you said, they've yet to file. I mean, right now, for the year that ended June 30th, so that deadline is February 24th, that's next Tuesday. And actually, if you look at the options market, there's an already implied premium for that week that ends through February 28th. So markets are pricing as if, you know, we could see some volatility next week, I think, which could be assumed here. But valuations actually, encouragingly so, have come down. I mean, you look at right now, the valuation, we see it trading at a 1-year forward P of 16 times. Its long-term average is around 12.5 times. So sure, it's about 30% premium to its historical average, but in the respective space, I think looks supportable, especially with some of these growth metrics. But what's amazing is the potential for delisting. Many still say it's a real possibility. The last time it was delisted, it had a $1.5 billion market cap. Now, at $31.6 billion, it would be the largest delisting ever, multiple times over. So, short interest doesn't help. There's about, right now, 18% of all positions sold short, so that's high. And I think that, hey, if you like the volatility, you like the risk of super micro, there's a lot to love about this name, but there's also such risk to the downside.
Yeah, fair enough. I guess the history of companies of that size going belly up and delisting is pretty short.
Turned out to be a good day after all.
Do fall. I was just in the Redwoods on vacation and seen it with my own eyes. All right, let's talk maybe a tree that's fallen already. Intel, the pickup that we talked about this morning, potentially of different business lines, is pretty fun. Somewhere in there, I think, is a conversation about the market kind of looking for other chip makers, whether it's SMCI beaten down, if it's Intel now, some decent strength. Micron, I saw, is at the top of the list today as well. So it's kind of this smattering of like second-tier chip makers that's keeping us afloat today.
Okay, and especially because, I mean, a lot of these companies with like for example, Micron and high bandwidth memory exposure have really not caught a bid. But, I mean, we're starting to see a decent run-up in a lot of these companies that have just been punished, especially from the back half of 2024 on. But now, comfortably, I mean, Intel's having a phenomenal day. We're up 14%. Also rallied last week, had its best 4-day stretch since 1987, which is also ridiculous. Now firmly positive on the year in Intel and up another 39% roughly month to date. Micron, on the other hand, though, less speculative news, less of a gain, sure, but also still up 17% this month and now 25% on the year. So all things considered, pretty firm footing here. But they announced the Micron 4600 PCIe Gen 5 NVMe SSD, which is a client storage drive for OEMs that's designed to deliver exceptional performance, and really it doubles the performance of its predecessor. So it can now load large language models in less than a second and reduces these AI model loads by up to around 62% relative to the previous generation. Also, it drives the energy efficiencies by up to 107% of the Generation 4 SSDs. So these improvements not only extend the battery life, but they also make it faster, which is exactly what you want to see. And so I always like when we see a stock movement that matches, I mean, an actual update. I know that Intel right now, there's a lot of question marks around what a potential breakup looks like, who's actually interested, what their business will look like afterwards. So that to me is more of a long-term story. But Micron today actually giving a pretty interesting update, and I follow these threads that track these SSDs with much greater understanding than myself, and they're all very, very enthusiastic about this unveiling today.
Yeah, seems pretty exciting and seems right on cue. Also, because we're going to get Aristanet earnings this afternoon, we're going to see all the demand for data centers, faster, cooler chips, definitely going to be in demand. Efficiency, the name of the game for sure, if these big AI models are going to want to compete with DeepSeek. Thanks, Jenny. Appreciate it. Good look at a couple big movers on the day. Micro up 7%, as well as the rally in Super Micro, helping keep the NASDAQ close to unch on the day. Let's talk big picture. That includes bonds and stocks. Zed Francis is a CIO at Convexitas. Zed, good to see you, sir.
Good to see you, Oliver.
All right, VIX at like 15.6 right now. It seems like we've largely been stuck, and the question that I understand is on your mind is where did the volatility go? So what do you mean by that, and where did it go?
Yeah, no, your lead was actually perfect, right? It's like, here's a bunch of big numbers, but where's the market going? Nowhere.
Yeah, right?
Yeah. And so I think it's kind of the funny theme of the last almost 2 years is spectacular returns, very little volatility, thus fantastic risk-adjusted returns. But how we're getting those is due to very, very low correlation. So you have the basket of 500 names in the S&P 500. Yes, some of them are more valuable than others. But ultimately, in any given day, they're kind of moving in opposite directions. So underneath the hood, some big movements like you guys were highlighting. But at the top line, we're completely unchanged on the day. So it's almost as if equities are diversifying themselves and creating this perfect portfolio of good returns, but everything's moving in different directions, so your path to get those great returns is really smooth.
I like that you mentioned that. It's actually something that I've kind of framed it in a way before to guess, which is, this is more like a 2022 thing, that when bonds were really a big problem, it was like, well, if stocks have so much, like, huge gaps between valuation premiums or, whatever it may be, tech to the other stuff, then, does it kind of hedge itself? Is it kind of becoming this efficient beast to the market cap weighted index?
It's definitely been the experience of the last, especially 18 months, but essentially last 2 years. I mean, the high-low correlation the S&P 500 is truly stunning. It's sub 10, both in realized and interesting and implied, meaning the options are expecting this low correlation to continue. We're basically back to where we were in the May to July last summer, like late spring summer zone of that single digit, both realized and implied correlation, which is historical lows as ever since it's been tracked from implied and just the math behind realized correlation. So it's been pretty shocking, and we're all the way kind of back there to those all-time lows.
Wow. Low correlation, high dispersion. I guess the one way to fix that, of course, would be a big sell-off. That's one way generally that correlations go to one. Last time we talked, the bond situation seems like it's not quite powerful enough to kind of derail this AI trade for now.
So there are two things there. So one, the biggest move of the year.
I want to kind of talk this trade out here. This is the one I called right before that phone call I got. You got this channel. This is this flag right here. And then we had the knife, and it came back. Then it broke out of that flag. It broke out of that channel. I charted this earlier and showed y'all this one right here. And it came back and hit that, kept hitting it, hit the 63 over and over and over again, and then finally knifed on the triple top. So it came back down, and as it broke out, it came and retested that moving averages. In that last trade, I got in this down here, and I waited for this I got in this one and sold this one at 5. So when this thing came back down again and retested that old resistance off this here channel, this was a triple top right here, and it broke out, and it respected that channel before. See how it respected it before? And it came back down again, and I waited for that to come back down again and hit that top of that channel, and I jumped in the trade, and boom. This time I got that phone call, and I was looking outside, and I jumped in it, and then I got the phone call, and I looked out the window, and my cover on my windshield was gone. And I'm going, someone steal my freaking cover on my windshield? It's like a blizzard out there. Wind's about 20, 30 knots a mile an hour. And so I had to go outside and see if it was stolen or not, and it was laying in the parking lot. So I come back in to get my car keys to see if I can put my windshield wipers up and try to hold it down, and they won't stay up. So I just stuck them under the blades and put a ruler out there and try to hold it down with a bunch of rocks. But they'll probably blow away. We're expecting about 14 inches of snow. It's just a downright blizzard outside right now. So I came back in and seen this thing break out at $7, and I said, I'm getting out of it. All right, before I left, I was on the phone talking to my sister, and she told me not to get out. So now it's coming back down, and we're going to respect the 63 like we respected it here, or is it going to bounce on up? I'm really want to relax. It's 216 right now, and I'm done. I mean, I don't want to ruin a good thing. I made like $3,000 here off this trade right here, 1,200 there, and then 1,500 on this one. About 1,200 something on that one. So I just want to kind of take it easy, not ruin a good thing. Don't over trade, right? And all that time I was sitting here watching this chick do these jump ropes. I really like this girl, how she does this. I just subscribed to her a couple days ago. I used to jump rope, but not as good as her. I mean, she's fantastic. Laura jumps. She had all these videos here about her jump roping, the music and stuff, and I got off on this one. This could be a good one. Yeah, this is the one I started watching. Down, down. That Beyonce album's not that bad. So I used to dance when I was younger. Started back in disco, and then it excelled to country music. I was a real good dancer. I can't do it now. My body's so I mean, I'm too old. I've treated my body like hell. I was almost like an Evel Knievel, but real hard on my body. Baseball and basketball and fighting and then dancing. And I played baseball until I was about 45. Softball.
Francis, coming up, let's talk about a software sell-off today. Shares of Pega have been on a big run over the last year and still have a lot of gains behind them, but took a beating today. We'll be right back.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today. With an education coach.
Shares of Pegasystems took a hit on Friday after earnings. The stock dropped, but still holding on to a big run, about 35% in the last 52 weeks as the AI-enabled customer experience platform.
Thank you, Johnny.
CEO rejoins us, COO and CFO rather, Ken Stillwell. Ken, thanks for being back on the show.
Hey, Oliver, great. Thanks for inviting me back.
Absolutely. Okay, so tell me about the number here, because a lot of the stuff on the top line seemed okay, but market hit you guys, and it looked like some of the growth numbers, maybe they were looking for a little bit something juicier.
I think that the market is certainly a market that looks at your near-term results, and I think has a little bit of a tendency of reacting on one extreme or the other. What happened with Pega is we actually we hit our guidance for the year in both annual contract value, which is our recurring commitments from our clients, as well as our free cash flow targets. But the shape of the curve of our business, which typically, like other enterprise software companies, tends to have a lot more business in the fourth quarter. The shape of our business was much more balanced through the year. So I think that our investors may have expected for that fourth quarter kind of hockey stick, which just wasn't the shape of what our year looked like. And we had talked to our investors through the year. So I think we're really happy with where the business is. We had a great year. We have a very strong guide for next year, up 12% on ACV and 30%.
We bounced off the 63.
So we're really happy with where the business is.
So it kind of tells you, I mean, the 63, we had resistance here, and then we hit the top right here, and it pulled back and broke out, and then it came back and respected that 63 that it didn't respect. It respected it before, but it didn't break it. So now it's respected it on the way on the pullback. And we got a triple top right here. You take that candle right there. That'd be your next resistance. Take the body of that candle, run it up to the top of that candle. So somewhere just a little bit above that, right around 61.16. Wind blowing like hell out there. I know I'm gonna lose that top. barely holding on. It's not sticking, it's a dry snow, so it ain't gonna stick to it. If it stays on there, that'd be a blessing. It's real light. And then I got a lot of snow to shovel in the morning.
Blueprint. Can you see like the main functions? Give me a description for kind of the layman's perspective on what they're using it for.
So our clients will engage with Blueprint, and it helps them take legacy applications, to which our clients have thousands. All of our clients have thousands of applications that were built over history that are not modernized. It allows them to take those applications, to take content from them, whether that be process manuals, screenshots, different documentation, and it gets ingested into Blueprint, and Blueprint forms the workflow of the new modernized application. Whereas prior to Blueprint, that would involve a lot of manual work, whiteboarding, process flow, back and forth, and now that can all be done, at a URL, at a desktop, at a computer, with everyone in a room in a matter of days, when that would take, months to transform your legacy applications.
I don't know. I don't even know if I should have this computer on.
Ken, and how do you make sure to stay on top
I might
of
shut
the
it down here in a little bit.
competition? Or do you want to get...
It is really, 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 really windy out there. I don't think it's been like this in a long time. And we could easily have a power outage.
We think Blueprint gives us an opportunity to accelerate.
You ever lived in Missouri? We have it's all year round. We have tornadoes, we have floods, we have ice storms, we have snowstorms, we have extreme heat. I cooked an egg in a frying pan one time outside, a black iron skillet. Took a little while, but I got that sucker cooked. It was like 120 degrees. So it just, and when I lived in Hawaii, it was just the same all the time. It's so beautiful, 72 degrees every single day. And when it rained, but it rained hard, but very seldom did it do that. It's just beautiful. Best weather ever. Hit the like button, YouTubers. I'll never probably have a lot of followers. I've been out on YouTube for 3 years and gained about 1,000 in 3 years.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
S&P's a little changed on the day. Kevin Green going to try and figure out if someone's going to wake up and move this market or not. KG, what's up? Nothing going on here today. Well,
yeah,
on the surface at least.
It's boring. This is the same thing we saw on Friday too, right? Range-bound action. Obviously, when you're kind of looking at the downside levels for today, hitting that 6,100 was obviously key for us to get some buyers to kind of step in. But we are in a compressed market here, Oliver. Only about a 20-point range so far.
That's $200 right there from that one level there up to there.
And hit that 6,100 level. That was probably the most aggressive thing that we saw all day because we were actually in a pretty much only an 8-point. Actually only about a 10-point range from the upside to downside here. Now, when we started off this morning, we obviously had a couple of levels to be mindful of. That 6120 area, the intermediate area of resistance, for the most part, was actually able to hold. Now, what is actually very interesting, if you're looking at the structure, since
more like $20, buddy.
We have a little bit of an uptrend. We are flagging a little bit now, but we did make a lower low compared to what we have seen over the last couple of trading sessions. Not a big deal. Obviously, not a lot of volume to represent that.
24.
But it is something to just kind of note. A little bit of a breakdown. We want to be able to try to recapture 6120, and then obviously being able to hold that 6100, the 6090 level here. But going into the close, what are you really kind of looking for? I'm still looking for compression. There's a lot of options volume that's taking place here today, though. If you look at the S&P 500, the SPX options, if you're looking at it, the 6100 puts, Ollie, has over 134,000 contracts being traded. That's one of the larger volume levels that we've seen pretty much all year. It's probably the largest amount of volume that we've seen on an option strike. And then the 6120s, over 103,000. What does that really mean? That means we have a lot of call sellers sitting at 6120, a lot of buyers at the 6100s, but also a lot of sellers at the 6100s as well if you're looking at the puts. So a little bit of churn there. That really kind of represents compression in the market. I don't see any flows that really says that we're going to have a massive breakout above 6120 and then we rip to 6150 by the close here. I would be very shocked actually if we actually close anything above 6120, 5 points or even 6 points above 6120, just given the amount of positioning that's there right now.
Okay. So what do you think is with all the action? Why such
Be surprised at 6120, he says.
Is it just the kind of the name of the game when you're this close to a record? Folks trying to get all their leverage in line, built up and ready to ramp, or what?
Yeah, I mean, you have several different events that are on the calendar for this week. So obviously we have the monthly options expiration for February, so that's going to create a little bit more churn. I think also when you start having these range-bound markets, traders are obviously looking at that as a way to be able to try to sell premium and be able to scalp on an intraday basis. And you just don't really have the news flow to really try to break us down at this point. And then we also have the VIX expiration that's going to occur tomorrow. So at tomorrow's open, we'll have VIX settlement. So VIX options, obviously seeing a lot of paper being put out there as well. I think that's also another reason why you're kind of seeing this. So good action when it comes to the paper flows, the volume flows, just not when it comes to price action. Yeah. And then if we continue to see this type of balanced nature when it comes to call buying or call selling to the upside, and put buying to the downside, and it's really going to be as balanced as we saw it today, that is going to just continue to lead to more compression. In fact, if you're looking at the SPX put call ratio, last time that I checked, is sitting at 0.86. So what does that mean? You actually have more call activity than put activity if you're looking at the overall volume for today here. That type of skew kind of leads towards more compression, especially if those are cost selling flows, which a lot of it has been today.
Okay, not decidedly bullish, it doesn't sound like, but at least there's some action going on, preparation for a big move possibly, and we're ultimately, very familiar territory, just below the highs. You get a 3-month chart to get the daily perspective KG, and you've kind of mapped out what would be the ideal path for us.
It's pumping hard here in Missouri, that's for sure, Mike.
It would be up, yeah, but that also includes a little bit of a pullback hitting that 20-day moving average. Now, we actually do have some pretty interesting candle setups here to highlight. So on Friday, we had something of a doji candle, meaning that we opened the market, we attempted to go higher, then we faded a little bit, and then we closed pretty much very near the open. So we have a very small bodied candle. That's an indecision candle. It's not saying that it's a reversal candle immediately.
I like his charts.
Just kind of keep on the radar. A battle is taking place, but the volume really didn't complement the battle, if you will, right? It's just everybody was just like, hey, let's just go home for the weekend. That's really what the volume was suggesting. Today, if we kind of close at these levels right now, you can say that we do have a hammer candle. I'm sorry, not a hammer candle, hanging man candle, which is a hammer candle but takes place at the top of a trend. So you have the hammer candle and the doji indecision, more of a bearish candle for today, hitting key area of resistance sitting at around 61.30. Not enough momentum to really try to make a move to the upside here. Gives you maybe a little bit of credence that maybe we have a little bit of a pullback. Come back, check that 20-day moving average sitting at around 60, give or take a couple of points, then try to push higher here. The good thing about today, though, is the advanced decline line. So even though the mega cap names really have seen maybe some mixed action, for better or worse, but you are seeing some broader participation. And we've seen this type of scenario happen before, where we have this kind of indecision taking place, but breadth starts to actually expand. That gives you a little bit more of a foundation in this market to try to push higher if we get the right conditions and the right narratives for those mega cap names here. So I'm not saying this is outright bearish, or these candles structure is outright bearish, but it does kind of indicate that we're losing a little bit of steam here, and a pullback might be healthy enough for us to try to collect ourselves and move higher.
Yeah, it seems like a very kind of limited bearish indicator, the hanging man. Maybe like a short-term kind of reset, catch the breath, get the footing, because the overall participation seems pretty solid. The fact that we went through all that churn and the advanced decline never broke, it held sideways. The MACD kind of looked like it was about to get a little gross and didn't, firmed up. We never got that like deeply negative crossover to materialize. You got another one that looks at breadth that seems to echo some of those messages of still general stability.
Yeah, exactly. And I'm sorry, if we kind of go back to that previous chart, I just want to highlight this real quick. This is the same thing that we saw when we made all-time highs as well, right? We had a power candle to the upside, we had a hangman candle, and then we saw this pullback, right? Tariff news and what have you, but breadth continued to expand. So even though we saw a pullback, we actually were able to recover fairly quickly, and so that's kind of the setup that we have here. But if you're looking at market breadth, a little bit of a divergence when you're looking at the amount of stocks above the 50-day SMA for the S&P 500 and the 200-day SMA. So the 50-day SMA, we are actually gaining ground. Obviously, we have those lows, those extreme lows that we saw pretty much late last year going into this year. We have recovered here, sitting at around 57% of the stocks above the 50-day moving average. But if you look at that 200-day moving average, we're actually still kind of diverging to the downside here. So you'd like to see the 200-day moving average, or those stocks getting above the 200-day moving average, really confirm a breakout bull cycle here. This also means that we do have some more room to run though. So if we are able to get that breakout to the upside, hitting around 6,200, Oliver, there's a lot of stocks that still have to recapture the 200-day. And if the momentum is going to be with us, that's really where you get some really nice power candles to the upside. Maybe that occurs after maybe this volatility week that we may be expecting. I'm expecting a little bit more volatility this week. And then maybe once we get towards middle of March, that's really where you see this broader market participation, not only just this intraday rotation that's taking place, but Mag 7's doing well, Staples doing well, Industrial's doing well, and that's where you get these melt-up days in the market, just like we experienced last year.
Okay. Like that. Looking pretty good on the participation there for the shorter-term average. Like that spread between the 50 and 200 a day participation. Gives you a little bit of that short-term momentum characterization. Thanks, KG. Good stuff. Appreciate that. Nice look at a chart sitting just below highs and maybe doing a little spin up, a little security of footing before making the leap. When we come back, let's talk IPOs. Speaking of waiting for big things, a lot of expectations that we're going to get new companies going public. So far, we have had a pretty busy last several months. We'll get the latest from the NASDAQ next.
Trading at Schwab is powered by Ameritrade, bringing you futures and Forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
IPOs are pretty hot, and the indications are they should only get hotter. Let's go to NASDAQ. Mike Sokols, AVP of Account Management for the Market Intelligence Desk. Mike, it's been pretty busy, call it half a year since kind of the summer last year, and I know expectations are running high. You guys have the IPO Pulse, which helps track the market conditions. What are they telling us about what to expect right now?
Yeah, I think we're in a pretty good environment. I was looking at the numbers from last year, and one thing that struck me, and I hadn't noticed it before, honestly, is that each quarter of 2024 was better than the quarter before it. And of course, 24 was building upon 22 and 23. So 24, if you just look at operating companies, you had $30 billion in capital raised. So far, you know, from 24, we let in pretty good into 25. So into 6 weeks here, we're at about $8.5 billion raised for the industry. That's compared to $6.5 billion through the same period last year. We have 46 IPOs, including, we had one day last week, but we had 5 just on NASDAQ. 46 IPOs for the quarter compared to 30 last year. So we're running about 53% or so ahead of the number of deals and about 30% ahead of the capital, which would portend good things if, of course, you could keep that run rate based on, you know, only
WBA had a run today.
Wow, yeah. And I know that the
Walgreens
Pulse Index had been indicating things should kind of pick up a little bit. So are we kind of closing that gap? Activity kind of realized versus implied?
I think so. I mean, the Pulse looks at a lot of the things that the broader market looks at. And of course, you know, you have the S&P a few points off the record, the NASDAQ 100 at a record. It looks at interest rates, which could level off. We'll see how that goes. It looks at sentiment. So a lot of those same things that the whole market looks at in terms of the market and how well it's doing is what feeds into that pulse, hopefully on a leading basis. Some of those things you could argue go both ways, whether it's the inflation data, so you'd be careful with it. But to answer your question, looking out ahead, it's still signaling positive things like it has been for the last, you know, at least year.
Okay. Looking at the some of the big themes here, You break down the IPOs. To your point about them increasing each quarter, we got a chart looking at that it gives some perspective on the sectors, the breakdown in here. I think there's a kind of surprising amount of SPACs, perhaps, to some degree, still in here from last year. I don't know if people realize that those have still been firing off pretty readily.
Yeah, they came back, I think, with a little bit more regularity last year. It's possible, my guess is some of that capital being recycled for some of the deals that had to be closed in, 24 or 36 months. Looking at our pipeline, which also feeds into the pulse, we probably have just a little bit south of, 200 companies with S1s on file with NASDAQ language. There's a pretty good number of actually stood out to me consumer companies. It's about 60 names on the consumer side, and you put that with about 40 in tech. That's about half of it right there. And of course, we always do pretty well in healthcare. That's looking just at operating companies. So again, you're trying to get good representation from all sectors. And it kind of makes sense if you're looking at tech and consumer and healthcare. Those would be where you'd see, hopefully, a lot of interest if the IPO market's going to be strong and if the broader market's going to be strong.
And from last year, NASDAQ, 73% of the companies that we're looking at there, which is a pretty excellent win rate for IPOs. Is that reflecting the more kind of tech innovation themes that are underlying there, or what's the draw?
Well, we'd like to think so. I mean, we have a great value proposition on NASDAQ for companies that want to list here. So there's a lot of things that go into that. But we've had 5 years in a row running where we've had the most deals and also the most capital raised. So that also could be part of it as you're looking at those same themes that you're talking about, the growth themes, and NASDAQ being seen as a disruptor, as an innovator, and we seem to attract a lot of those growth-oriented companies, which of course have led the market for the last couple of years.
So thinking about then what comes next, can you give us a little peek into the rumor mill over there? What should we be looking for?
Well, I think we look, one of the proprietary things we have is the pipeline. That looks like it's, picking up a little. It's hard to say. Of course, it's really all about market conditions. We're priced in some ways in the market for a lot of good things that are baked in to happen, whether it's a good, strong regulatory, some regulatory relief, a good, strong economic environment. The earnings have been strong in Q4. One thing I keep an eye on very closely is the 10-year. And, that's one of those, 4.5% is pretty good. So if you can stay with a low VIX and a pretty good 10-year, that probably helps you a lot. Some of the economic data, for example, that might be perceived as negative, like the retail sales number that came out on Friday, and might hurt your thinking about the market if you're talking about the economy, also can help you because it's a built-in shock absorber if the 10-year doesn't get too high. So I think a lot of those things have to fall into place, but we're positively, I think we're cautiously optimistic about the environment going forward. Last thing is the market always, discounts, 3 to 6 months out. But when you're talking about going out 12 months, it's a little bit harder. But we would like to think that once you get some of the uncertainties out of the way, whether it's inflation, tariffs, some of the geopolitical concerns that are kind of floating around out there now, you could have an even stronger second half of 25 than we're seeing so far in the first half.
A lot of recognizable names, I think, for a lot of customers that are in the pipeline right now, whether it's Chime for banking, Discord, Chat, Stripe, and Shein as well for the consumer clothing. That one's pretty popular too. Which of those might we see first, do you think?
I don't know the timing specifically. I mean, there's also Klarna and Circle and CoreWeave. And so we'll see as the filings come in and that people do their road shows and everything. Shein we're hopeful for. I've heard something along them, maybe not listing in the U.S., just right. In Hong Kong. But we'll see. And we're ever hopeful to get as many of the big deals to do their IPO and, of course, have them happen on NASDAQ.
All right. Mike, thanks for the heads up. And thanks for the latest on the data. Appreciate it very much.
Okay, thank you.
Good context for us on what's coming down the pipeline, and a nice steady sequential increase of IPO activity from last year, each quarter more than the last. NASDAQ claiming 75%. Wow. All right, coming back. We've got a big picture discussion. The Schwab team joins me to go into the bell as we've got about 10 minutes left, and we are almost perfectly flat still.
We'll spike right into close.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client
10 more minutes.
by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
130 to 160, 170 right there.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 800 of the most
Very
popular
good, Mike.
stocks and ETFs, plus a wide variety of futures markets.
Nailed that
Over 24-hour support from
SMCI.
trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Nice end of the day pop.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
A little less than 10 minutes till the bell. Let's talk some stocks. Mr. Kevin Gordon joins us, Senior Investment Strategist at Charles Schwab, and Nate Peterson, Director of Derivatives Analysis at the Schwab Center for Financial Research. Great to see you guys. Good afternoon. Got a lot of equity discussion ahead of us here for the next 8 minutes. Nate, let's start with today's action. You got VIX up, stocks on, kind of a more notable move in VIX to some degree, though it's cooled off a little bit. What's that tell you?
Yeah, so, I mean, obviously the VIX is measuring implied volatility on the S&P options. Implied volatility equals basically the prices of those options. Higher VIX means that the premium on S&P options net are going up. This is a 30-day estimate. We know that institutions generally play around in SPX options, so to me it suggests that at least to some extent institutions are reaching for or putting on some protection as we hover here around all-time highs. And generally there's an inverse relationship between the VIX and the S&P, meaning when the S&P is up, VIX is down, and vice versa. That's roughly 85% of the time. When you have instances where we're basically flat or unch on S&P, but we were higher on the S&P, we were higher on the VIX. When you get that type of, we'll call it an anomaly, then generally the VIX tends to be right. So I think that, there might be some cause to have just a little bit of, don't get complacent as we hover around highs here. You may want to look at putting on some type of protection, and there's a number of ways to do that, put spreads, collars, etc. But I think the message is that, don't really go to sleep. We've got NVIDIA next week, we got PCE, but we are a little bit of an air pocket in terms of that next potential bullish catalyst that is going to propel the market higher. It looks very reluctant to do so.
What do you think about FOMC tomorrow, Kevin Gordon? Spice in a little macro for us. Anything notable going to be in that conversation?
I mean, I think a lot of the focus these days is on, what the policy backdrop looks like for Washington and fiscal, not as much, monetary policy itself, but how the fiscal feeds into what the decisions are going to look like for the rest of this year. And I think also, to the extent that there is more of a discussion of, or there's more, light being shown on some of the disagreements for some members now, and you're starting to see it in some reporting that's come out where there are some members who are still, pretty firm in their view that they need to see more progress made on inflation in order to cut more. There are some members who don't really see as much risk, coming from anything that's specifically at this point, tariff related, even immigration I'd throw in there too. So I think some of those disagreements are going to be notable because I think you could get to a spot, later this year where some of those come, I'd say, more to the forefront, where you do have kind of these combating
What's
views,
going on?
especially because the policy backdrop, in our view, is going to remain pretty uncertain, certainly probably for the rest of the year.
The tariff impact on markets, you think analysts have officially just given up on that? Fed members maybe should too, Kevin? It's just kind of a hard thing to put your finger on.
Yeah, I mean, I don't know if it's as much just given up as much as it is no one knows. I mean, it changes every single day. Just the who, what, when, where, even the why. That changes every single day. And I think that the tough part about trying to figure this out, and gauge the impact, especially from an inflation standpoint. The inflation data tends to get a lot of the focus when you start talking about tariffs and
Jesus
potential
Christ,
for not
580?
only the price level increase that you have if you do implement a tariff, but also the potential for retaliation and whether that
Oh my
becomes
gosh.
inflationary. I think at some point, and to some extent, this is probably being reflected in the fact that earnings estimates for this year have been cut for every single quarter consistently,
no.
even as the fourth quarter growth rate,
130 to
growth rate has
580.
moved up. Fourth quarter of
610.
2024. I think that is somewhat reflective of
Wow.
maybe analysts now starting to factor in the potential hit to growth. Not that we're looking at something catastrophic, but we do know that this uncertain policy making and just the nature of policy by post it is really tough for companies to operate. It makes an environment really tough for companies to operate in. So to the extent that there are more estimates, I think, to the downside for growth, that I think becomes a more dominant part of the conversation, in addition to any potential inflationary hit.
All right. Nate, when you think about the churn that we've been in, I feel like part of that has been very much this policy situation, the kind of competing.
That was crazy. 760. I don't know if I saw that coming or not. But Kevin was wrong. He said, Dad, if we break out, huh. I hope it wasn't me. No, it wasn't me. I didn't hear it, but I didn't have my headphones on either. $10. Jesus. Well. One heck of a miss right there. Yeah, I sold them. 130 to 170. I'm about burned out. I had to work hard today. Then at the end of the day, that big old 12 to 1300. There's no way I'd have stayed him in this long. Not 1 minute to close. Push that market sell and get out of them. There it is. Ding, ding, ding. Market's over.
It's an important piece of the puzzle.
Wow. So who was the one that was playing Flintstone stuff in here? Anybody know? Good job, Mike. Good work. So I'm going to get out of here. I've had a pretty good day too, but that last trade, whoa. 10 contracts plus $1,200 a piece. Great work, Mike. Nikki, I hope you had a good day today. Chris, hope you learned something today. Today was definitely a learning day. Sometimes, you know, you have a bad trade right at open, or you have a bad trade and it kind of turns you off and you want to leave and stomp your feet. I've learned many times just to stick around, and it'll all get, you know, it'll give you other opportunities, and every day is an opportunity. Every day is a bull market, no matter what direction the market's going. So I want to thank everybody in here. It's a lot different now that we got Bobby out of here. I'd get irritated because I just don't want to be around people that are that, I don't know. Kind of remind me of an Antifa member. I got tons of friends that are big time liberals and justice warriors, and I just don't look at people like, I don't look at your gender. I don't look at what color you are or where you're from. I love, foreigner people. I love Asians. I love anybody. Doesn't matter. It never has mattered to me. When I was younger, I had my best friend was black, and I got to know him and give him half my paper route so he could have money to feed his family. And I was feeding my family, my mom and dad. And I brought him in one time, and my dad, after he left, my dad grabbed me and threw me up against the wall and said, "Don't ever bring another Blackety Blake in here ever again." And so from then on out, I just kind of know there's people out there that are like that. But I don't know many of them. I don't hardly know any of them that are like that. I think life ain't like that anymore, but for some reason people think it still is. I know what it feels like to be a minority. I've lived in Hawaii. Try to be a white boy and go to Hawaii and be nobody, and they call us Haoles. But I got along. I made friends. I just had one little Vietnamese guy that couldn't stand Americans. So him and I got into it a couple times. One day I was told him to kiss my ass in front of everybody, and we got called into the office, and he said, "Jim, did you tell him to blank off?" And I said, "Yeah, I did." So I just got sick of it. I don't know the guy, and I have to work with him, and he just hates me. Because I'm stole his country from him in Vietnam. He's always had a grudge. So you can fire him if you want. And I said, "I don't want to do that. I just want to work with him." "You can fire him and take his job." And I said, "No, let's keep him." he'd get pissed off if I brought the wrong picture frame up, or so I'm going to get on out of here, deal with this weather, and watch my videos, and have a good night's sleep. I thought someone had stole my cover off my windshield today, and I was getting upset, but the wind blew it off. It probably won't be there tomorrow. It's a real dry snow. It's not wet where, it can stick down and hold that thing down over my windshield, but it's about tore up. I'll be throwing it away after this snow weather and get me a new one. That's the best thing I ever bought myself, was that cover to put on my windshield. It's helped me during ice storms and snowstorms, and I think I've had it for 5 years now, and it's about lost its grip. So I'm going to get on out of here. I really appreciate it. Today was a good day after all. I mean, I got stuck in that one trade and held on to it and was able to get out with a profit, barely. And there's a lot of lessons to be learned today. If you're in a bad trade and you average down and you get back to even or close to it, sometimes it's just good to sell it. Because that happened to me Friday. I could have got out of that trade twice and broke even, but I ended up losing $900 at the end of the day. So if you get close and you don't feel good, your gut's telling you to get out of the trade, wait for the next setup and try it again. It don't always work every time you get into a trade. But I found out in the long run, the more I just be more patient, and if I'm in a bad trade, the 9 out of 20, 25, 30 times I'll come out a winner, or at least even. With that, that one time though, that's when you get caught. But I had my chance Friday. I could have got out of that trade even, a little bit above even, a little bit below even. I had 3 different chances and I didn't take them, and I ended up losing it all. So I'll get on out of here. Really appreciate it. No, I don't even, yeah, I can get out. Right now I can. I can get out of the driveway right now, but I won't be able to in the morning. I'll probably have to kick snow around, and they'll have the trucks come in and plow it tonight. But I'm not going to go out. If it's bad, I ain't going to go out. I can't go out in that car. It's not like that Equinox where I can plow about anything, but I can't. No, I ain't even take the chance. It's best sit home and I got plenty of food. I made sure of that. I got my chicken soup to last me a week. I got hamburger, burritos. I got canned soup if I need it for real bad times. Right now I'm going to go make me a burrito, and man, this thing ran at $61.29. $10 above what Kevin said, Kevin Green. It's weird. Broke past all the resistance levels. You sure wouldn't think that this morning. Unbelievable. Okay, bye-bye. YouTubers, hit that like button.